barking. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola.
Hola.
How are you today?
A wonderful Tuesday. A no Aaron Rodgers Tuesday.
What does that mean? What happened?
Because they lost yesterday. There you go, James. I did that for you.
The Steelers lost.
Yes.
Steelers lost.
To
Yes.
who?
To the Texans.
Oh.
Texans, right?
Yeah.
Yeah.
Oh, okay.
They got beat up in the fourth quarter pretty good, too.
Yeah, they got beat up all game.
Yeah.
It was a smackdown. It was good. I mean, Aaron Rodgers.
I love this. It's wide open. The playoffs are wide open. So
For sure. But it's the first time, the last time the Bears were in the playoffs, was it 2008? When we went,
I believe so.
Rex Grossman?
I looked that up.
Or Trubisky gave us one, I think.
Yeah. Bears in.
I don't know.
talk
James
amongst yourselves. Yeah.
James can correct me.
So the show
But,
grinds to a halt.
It's always been Aaron Rodgers. Has always been like
He owned us.
Yeah, he's been the king of the North. He's always been there. So now he's out. Even though he was on the.
Everybody's replaceable, son. You know that.
Is this
That's true.
Is this his last season?
It's a good question, but if it is, he goes out on an interception.
Yeah, last play was an interception, right?
Oh,
he didn't have a
that
bad
sucks.
season, though. I think his numbers were actually pretty good.
No, for a 41-year-old guy, he looked amazing.
Don't quantify it. He had a good season, period, no matter what his age was. He was
True.
What is wrong with you? Why are you,
Well, I'm closer to 40. Well, no, actually, he's closer to 41 than I am. I'm way away from 41.
What are you doing, dude?
Don't you put that on me.
You're only as old as you feel.
That's right. And biologically, you're probably... Never mind. We don't
75.
Right.
No, but you're starting like a new year, new you thing.
Yeah,
right?
new year, new you.
How is that going?
How is that going?
Not great, generally.
I have some tips for you, actually. I do, actually.
We have a lot of room for improvement.
Yeah.
I thought it was going to start last Monday, which was a couple days after New Year. You have that little buffer.
Right.
We're going to start next Monday.
You can start. You can start whenever.
Yeah.
Like
That's right. Yeah, nobody's judging you.
Yeah.
Monday's always a day away.
K-Fire, which I think is a slop bowl.
Yeah.
It's just not. It's just
Boy
not
slop, as Vinny would say.
Yes, pretty much. But it's good for healthy eating.
It's just grilled chicken and rice.
It's
and
perfect.
The fermentation of the kimchi is good. Probiotics.
Yeah, the ones where I run into problems are like fry the
coop. Yeah.
That we had on Thursday last week, where they give you a fried chicken sandwich and a bowl of mac and cheese and a cookie.
Okay, but then
I'm just gonna have one little taste.
But on that same day, they also had sweet green. So
it was a life decision you made.
So yeah, so we're having like Lou Malnati's on Thursday, but we're also having salad. So
how do you do that when it's there?
You can sit with me and the girls when we just eat our salad.
Yeah, you with the girls. You just go in the girls' line.
We talk about real secret lives and Mormon wives, and we just eat our salads.
Oh.
And we plot on how to take down the patriarchy.
And then we run this joint.
It's really what I have to do.
Or you could do like a combo, like you get the salad, you take the fried chicken from Fry the Coop, but you don't do the mac and cheese, you don't do the coleslaw or the mayo, just the fried chicken.
Get a little taste
cut that up.
This way.
Cut that up, put that on top of the salad.
Yeah. Or they just give me the skinny shot. Just
yes.
You hungry?
Right.
Well,
do that. Why not?
Yeah.
But I don't know. But I will say, because my parents are on Ozempic because they have diabetes, not because they're trying to be models or whatever. But it's a weird feeling because you lose like your zest for food. Yeah. And I don't know if you want that.
Yeah, I don't like.
We are foodies.
I don't like needles either.
Well, they have a pill now.
I'm not a needles guy either.
And you can get it on Amazon for $149. You put that in the Amazon cart.
Wow.
Yeah.
Wow. Amazing.
So you
get
don't
it
even
with your
have to do the
DoorDash
shot.
and everything else that you get.
Yeah.
Don't make me go there.
Just sell some puts in Novo and buy yourself the pill.
There you go.
Should. The stock's up like 50%.
And anybody can get the pill now? You don't need like...
You need a prescription. It's not over the counter, but you can see a doctor from their lake house over Zoom, and the doctor's like, I got you.
They have one of those like AI doctors.
No, they're real doctors. They're real doctors, but
they're AI real doctors.
Yeah.
You're like that.
Yeah.
Yeah. Okay. All right.
But I support you in your journey, Nikki.
Thank you. How's yours going?
It's good. It's good. My hamstrings are sore. I do cable RDLs, and because it's easier for me to do them on the cable machine than on the Smith machine.
Is Lotion Boy still there? Or
I didn't see him.
Have you cold approached yet?
I didn't see him. No. I don't talk to people in the gym. Like I'm just headphones in, head down.
Maybe you should think about taking the headphones.
hamstrings.
Maybe you should think about taking the headphones off. Maybe you'll have a nice conversation. Doesn't have to go anywhere. Maybe it'll be a nice conversation.
But why? Because at this point,
I don't know why I tried.
Right? No, but I'm just saying, like, what's a man gonna add to my life? I will add leaps and bounds to his. But what
if
does
he's
he
a
bring?
Swiftie?
What if you're pleasantly surprised?
An RV to all the Taylor.
If you open it up, maybe you'll find something.
No.
No. Okay. All right. Makes sense.
You haven't been out there.
No, I agree. I agree.
You don't know.
No, you're right.
great.
22 years.
Yeah.
A long time not being out there.
It's not.
Wait, let me do that math.
It works.
Okay.
It works by about 6 months.
Some overlap there. There's some overlap there. Something that's happening. I don't know. But what'd you get up to last night, Pat? What'd you do?
Last night was Barnaby's Pizza Night.
Ooh.
I wanted to do that one.
Because you mentioned it. You mentioned it on
That's
the show.
Steph not on the diet.
No. But it got in my head.
Yeah.
And then it was supposed to be spatchcock chicken night.
Okay.
So this is what my wife does. So my wife over the weekend will say, all right, we're going to make like a healthy meal. We're going to do something good Monday or Tuesday, because usually that's Vinny's like slow days for hockey. It's usually like goalie day and stuff like that. So they have practices. Vinny doesn't. So Monday or Tuesday, we're going to make like a spatchcock chicken and we're going to do something else. So we went to Trader Joe's or something and she got a spatchcock chicken. We're going to make it. So on Sunday, no, we didn't make it. Monday, honey, we're going to do the spatchcock chicken. He said, it's too late now. I was watching the baby. I didn't start cooking. So I go, Vinny, what do you want? Vinny goes, let's have pizza. So as soon as he said pizza, I said, all right, well, let's go to Barnaby's.
Oh, you ate there?
We ate there.
So much better.
So much better.
Much better.
Right.
It's on they serve it on the metal tray. So
Yeah.
And it's just so perfectly crispy.
Yes, but again, in this example, your wife is caring for her grandchild. She's doing stuff around the house.
Yeah.
She's supposed to be cooking.
I should be cooking.
Yeah. I'm like, what are you?
Yeah,
Again,
no,
what are you adding
What do
to
you mean?
help
He's
her?
sitting on the couch. He's relaxing.
The paycheck. I had the
Okay,
paycheck.
right.
That's all I had.
It's hard work.
Right.
Come on.
I actually am supposed to be doing the spatchcock chicken.
Okay,
Like, I'm supposed to be on the grill.
Right, there
Right.
you go.
It rained over the weekend, so I
Okay.
wasn't going out there in the rain. You don't want me to get my bouffant.
Delicate flour.
Delicate flour I am, but I could have done it yesterday, I guess.
Yeah.
I like
Nice
to do
tonight.
my meal prepping on Sunday. Like that's good. And
Yeah,
then
I
you're
can't
set
do that.
for the
I'm not
week.
that guy. I had an ex-brother-in-law who was that kind of guy. Like he would all week long, he would write out like on Saturday or Sunday, he would write
Barry?
out he still does it. I just spoke to him. He still does it.
Really?
Writes out every meal that they're going to have. Wednesday, we're going to go out. Thursday, we're going to have burgers. Friday,
He
we're
does it
having.
because he's got to he has
He has to know what he's having. Right.
Yeah.
Yeah. And get it all in the spreadsheet.
Priced out.
Yeah.
The broccoli is $1.49.
That's
I respect the hustle.
Yeah. All right.
I didn't
Got
know
more
that.
money than all of us, too.
I wouldn't have thought that about it.
I
guess it does
Come
fit
on, you're
his-
just not thinking.
Yeah, it fits his MO. It fits his MO. But he was such a good eater.
He's a
back
great
then.
eater. Great
So
eater.
that was when he got skinny.
Yes.
He lost a lot of weight, my uncle.
Oh,
Yeah.
So
you should subscribe to his newsletter.
There you go.
I probably
You should go work out with him. He works out all the
Yeah,
time now.
You work out with Beth's mom.
Yeah. Beth's mom would be a way better workout partner. Barry, I don't think I would last a week. I don't. There's no
Shower, shave, schwitz.
Yeah, but the talking, he would be too much. It would be too much.
Anytime, Nikki.
Okay.
Actually, or you could start powerlifting with Quentin.
That too. Yeah.
Gonna be showed up by somebody than you.
Yeah, but when you're shorter, it's
less.
It's a power. Yeah, it's a power to height ratio.
Yeah. You got this.
Not to throw any shade on Quentin.
No.
That is a.
And Vinny's vertically challenged. I mean, we got everything going on over there. So we'll see.
Yeah.
We'll see. Yeah.
I want to bench 135 this year.
Nice. Yeah. You can do that.
It's hard. It's more than I weigh, but it's a lot. But I'm gonna try working out.
That's awesome.
Maybe like 2 years.
No.
How much can you bench? Do you know? What do you bench?
I'm 205 one time.
Wow.
I was
Your max 1 rep is what we call
one
it.
rep.
Yeah.
I was 305 back in the day.
No way.
Yeah, Billy Stritzel got me up to 305.
He had the gear. Billy Stritzel had the gear.
Get the gear.
He does. He had the gear. You're right. He was freakishly strong. Yeah. He got me up to 305. But
wow.
205. I'd like to do. I won't go any higher. It hurts. The body hurts now at 63 years old. You know.
Do you do mobility training? Like if you can.
I do 175 to 185. I'll do like my 3 reps. 6 to 10 reps on each.
There you go.
Yeah. So
it's not bad. How much do you bench?
It's been a little while. At one point, it was my 1 rep max was like 265.
Wow.
That's
pretty good.
Yeah, I usually have to go through a breakup to get back to that part. That's
nice.
That's usually how we get back to 265. I'm probably in the 200 range over.
You just have your headphones, and in the end,
that's usually how it goes. Yeah.
I cried so hard, I felt it all. I want to see an emo Nikki.
Oh, that's cute. That's cute.
Not emo. I wouldn't say emo.
I know, but I want to see emo.
In the zone.
But now you're happy though.
Grinding.
Yeah, now you're all.
Yeah, fat happy is a good way to go through life. I'll be honest with you. I have no problem with that. I've done it for a long time.
Yeah.
A long time.
As you get older, it becomes easier.
Yes, it does.
All right. Well, we got a great show for you today. A lot of good stuff headed your way on the Tasty Live Network. Hold on. Who's this
You
job?
can do this.
If you're sending me emails, get off of me. At the top, on this terrific Tuesday at Tasty Live, at the top of the 8 o'clock hour, we have an options jive, beta-weighted delta, and correlations. Nikki, what is that segment going to be about?
Well, beta-weighted delta and correlations.
Okay.
We're going to talk all about them. We're going to look at, problems with correlations when you talk about like binary events and earnings and stuff like that. How that can skew, correlations on a day-to-day basis.
And you got that phenomenon coming, right? You got banks with earnings coming. You got Citigroup today,
CPI today.
CPI today, that sort of stuff. So we're talking
Bank
about
of America.
just generally correlations and how they can change, what is high, what is low. Yeah. Just kind of a good little primer on correlations.
Then at 8:40 today, a futures focus. Happy New Year to Craig. First time in the new year. Everything you need to know about CL, MCL, and QM. Oh, I don't know what QM is.
QM is a mini.
Yeah,
there's the CL
Big boy oil, yeah.
Big boy oil, which is crude oil contract. It's 1,000 barrels notional value. So you got crude at, let's just round it to 60 right now. So it's a $60,000 contract.
I'll take 10 of them.
Yeah, exactly. You have the micro, which is what you hear us trading more frequently if we're just statically long or short it.
MCL.
Right.
Which is MCL, which is 100 barrel notional. So it trades basically like 100 shares of stock.
Okay.
QM is 500. It's a mini. The minis are 500 or 500 multiple. Micros are the 100 multiple.
Oh, okay. So that's
it's
confusing.
like
it's confusing. Okay, gotcha.
Decent markets, lower volume in the QMs of all things. And that's why we usually default to /MCL or CL.
Yes. But I do want to ask him about the new silver and gold margin calculation.
Okay.
Which they're now doing it it's a little more dynamic.
Yeah, well, they better get their act together because it's that new lows. It's down under 53 you remember, we were looking at it and trading it in the 56 handle. So that's like $3,500 on every 1x2. Yeah. So CME better change the calculations and make it a lot harder for people to hold stuff, at least from my position.
So they can
go up a little bit. Then I can get out. Then they can do whatever they want with the calculations.
Over up $2 this morning. Insane.
Unbelievable.
Well, then that is great, and a very warm welcome to him. It will be the first Futures Focus, I believe, of the new year.
Yes.
And then 9 a.m. market measures. What's the best DTE for a PMCC play? What?
Poor man's covered call.
Yes, I knew I would have.
Yes.
But what's the best days to expiration for a poor man's covered call?
Well, I can't tell you.
You can't tell me. Giving it all away.
Segment. Come on. But yeah, we're going to talk about poor man's covered calls and just looking at the long option is really the one we're going to be looking at. So
okay.
See, and I think you'll see that it.
Right, because it's a diagonal.
It's a diagonal.
Yes. And then we have live from the trade desk. We have Quentin in the house counting down all the top trending tickers over at Tasty Trade and G Money on the FX side of business. And because it is a terrific Tuesday at 10 a.m., you have Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live. So catch them live. Yeah, you're welcome.
I don't know why you don't like that.
I don't know.
I love it.
I can see.
It's not. Where's
I think we should make like a promo with it.
It is always electric. Yeah. The ladies alive. And then that's the run of show for today. But hey, in the meantime, and in between time, you're stuck with me.
I think it reminds me of Cavassier back in the day from Saturday Night Live or something like that.
Oh, the ladies' man?
Yeah.
Yeah, ladies and gentlemen. You on with Miss Leon Phelps. Yes, it's a lady.
That's good.
That's what it is.
Yeah.
Yes, when I find a nice lady, I give her a little of the Cavassier. Do you want your daily dose?
Sure.
Give me my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire.
I have a leading story. Thought about
Top story. Jump in.
Today's headline.
This just in.
Breaking news.
Just as an interlude, Tim Meadows surprisingly nice. Like he's around here all the time. Like you come up in the Chicago comedy arena, like Tim Meadows, he's just like around, super nice.
Oh, I imagine he is.
He's always here. He'll do shows. He'll step on stage for like an improv or like whatever. So I don't know. Shout out to you, Tim Meadows. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. Today is a terrific Tuesday, January the 13th. This is the Daily Dose. I'm Vanetta. It's all out of order. I'm dysregulated. Are you ready for the news?
Ready for the news.
Earnings.
Like banks that we're talking about. Well, last night you had, I know you'll get to it, JP Morgan, looks like it was up 2. Delta Airlines down around 4. But today you got Citigroup, Wells Fargo, and Bank of America.
Oh, okay.
I mean, popular names.
Sure.
Not the greatest volatility stocks.
Did you trade them? Or?
I did a put ratio spread in JP Morgan, so that should be fine.
It had a little bit of bullish. It's basically unchanged. We talked about, the earnings having to come out. When they come out, they have to be almost perfect for these stocks that are basically at all-time highs to overperform to the upside. Mm-hmm. And the numbers were good for JP Morgan. They weren't bad for JP Morgan, but they just, it's kind of, the upside seems to be a little muted these days. Although yesterday was kind of a weird day in the market when we were down 50 handles, volatility never really expanded.
Sure.
And today you got volatility on its butt too, down 7 cents. So
yes.
Well, you wouldn't have known from the morning when the opening bell and then to the closing bell, like you said, we started kind of down and the futures were down and then continued the down move. But then the S&P 500 and the Dow hit a closing record and Walmart saved the day. I don't even know what is happening. I don't know what's going on. I don't understand the markets.
Yeah.
I like the meme where like you have that book about like the guide to understanding investing and you just like throw it in the trash.
The intelligent investor.
The intelligent investor, yeah. You just throw it in the trash.
Yeah.
What are you doing? Let's talk indices right now and what's going on.
Well, it's so funny because I've been emailing back and forth with somebody that I met in Seattle at the live event last year. And, they're just getting started and they're like, making all these lists of mechanics and things to do. And I'm like, just try a couple trades and, get the mechanics down and see how things move and whatnot. And we were chatting about yesterday and I'm like, markets are so random. Even if you knew the news over the weekend and if you knew that all the things that were happening over the weekend and then Monday you open down and rally all the way to highs. Like
you probably didn't have that in your card.
Yeah, what percentage would you have that as the outcome.
On Saturday or Sunday when you were going to.
2%.
It's like the Bears having that 6% probability of winning that game.
Yes, exactly.
Yes,
So it's like,
exactly like that.
that was kind of what I've been trying to get them, comfortable with over the last couple months. It's like, things are going to move and you can't plan it all out. You can't have a cheat sheet that's, says, okay, if this happens, I'm going to do this and then this and then this and this.
I always say
you got to get in and
with that new trader, I always talk about like just put on a one lot spread, bullish, bearish, both sides if you want to. It doesn't matter to me. But if you do it $3 wide and you collect around 1/3 the width of the strikes, you got 70 cents in credit that you get. You got $230 worth of risk. Let's say it'll only go down to 30 cents at one point, so you got $2 worth of real risk over 45 days. You're looking at $2-3 a day, a cup of coffee in risk over 45 days.
Sure.
Is that enough, is that suitable risk for you? It probably is. Don't buy your coffee at Starbucks. Make it at home for that month, and then put on that vertical spread and watch how it
Thanks,
works.
Susie Orman.
Yeah.
Hey, the Sell America trade is on. The dollar dropped and gold surged as Trump's Fed pressure campaign raises fears about the U.S. economic system. We are waiting for the last economic data of 2025, but the Sell America trade is top of mind after Fed Chair Powell says he's under criminal investigation. But let's talk about the dollar. Let's talk about gold and what they did yesterday and are doing this morning.
Gold looks like it's basically unchanged, though it was a little bit softer, relatively small, soft last night.
And I legged out of one of the golds.
On our long gold versus short silver, so now we're 1-to-1. Well, you've been legging and trading silver too.
And I scalped the silver a little bit too.
Yeah, been doing good. So I understand.
But now we're leaning heavier short silver than long gold.
Yes,
which is not good today.
Not good today. Well, silver just got itself a rally. Yes. It was up small. Now it's up 2%. Yes. Gold is basically unchanged. Gold has been lagging silver, and that's why the gold-silver ratio keeps collapsing down to 53. When we were looking at it was 55 to 57. So,
so in this dollar gold thing, would you buy dollar, sell gold, or sell dollar?
I am long dollar
okay.
in a variety of ways via the FX products, which have not been great.
Sure. Take it up with Glenn.
Well, he will definitely.
It hasn't been great the last 2 days, right?
Yeah,
prior to that, it was working for you. Like the last week prior to that, it was working for you. So
I've got I mean,
still in the ball game.
I'm long the dollar versus the Mexican peso here.
Wow.
Okay? That's how deep we are.
Sure.
But yeah, I mean, the dollar has been super, super weak, and that's the risk assets have taken on the other side. Dollar weakness, silver, gold, moon, markets, moon.
Just real fast, what are you anticipating, if anything, in bonds today once we get our CPI in about 7 minutes?
They have not moved off the 115 handle in about a month. So I'm
like a 5 in there. They've had
I'm going to say the
115
handle is probably a good bet.
Yeah, the 115.18. They're right in the middle of their range for the last umpteenth month and a half.
Just pin it.
Yeah, just pin it here.
Crypto firm BitGo is eyeing an almost $2 billion valuation for their U.S. IPO. They're seeking to tap into the investor appetite for crypto firms. The Palo Alto, California-based firm and some of its existing shareholders aim to raise as much as $201 million by offering 11.8 million shares priced between $15 and $17 each. BitGo!
BitGo.
I haven't heard of this one.
I haven't heard of this company either, but it doesn't mean anything. They're worth $2 billion. But a company you have heard of, Big Orange. I was like, stop trying to make Big Orange happen. Like Big Red is a thing. Big Red Liquor. Shout out to you in Bloomington, Big Red Liquors. And Big Blue, obviously IBM. But Big Orange, Michael Saylor's Strategery has bought another 13,627 Bitcoin for $1.25 billion. What is even this company?
I don't know, but if Bitcoin has its day in the sun again, there's going to be this thing.
Bitcoin popped a little yesterday.
It's up a little bit.
Yeah, no, but I'm talking about like
it's about
20K God handle week where everybody's.
Isn't that what all the diamond hands are hoping for right now? Sure.
If it happens again, this thing's gonna be banana land.
Well, it hasn't gone anywhere. It has an
Hasn't
Ivy
gone
rank of
anywhere.
27. It's been going sideways right here at 160 and change. It's 160 and change this morning. It's up 50 cents. It's certainly lost its velocity to the upside.
Yeah.
MSTR's haul represents more than 3% of Bitcoin's total 21 million supply. So, there you
Yeah,
go.
it seems like it's getting to be a little crowded in its one funnel of
Basically the only buyer, right?
basically the only buyer. Yeah, it's hard when you're that.
What is something like Coinbase or IBIT doing today?
Coin is hanging out at 244. It's up small too, about $1 and change. It too has been going sideways. A little bit better a range from, let's just call it, I don't know, 225 to 280. It's 245, 244 right now.
Yeah. It's come down from like 260.
Ivy rank is 11.
week.
Its Ivy rank it used to be in the 40s to 60s, and
We could
now
probably
it's
look
in the
at some
teens.
puts there.
Say again?
We could probably look at some short puts there. Ivy rank of 11, kind of low, but
In coin?
yeah, we've been trading around like the 200, 210, 220
Yeah.
ish.
Citigroup set to report their earnings, I believe, tomorrow morning before the bell. Well, they're also going to cut 1,000 jobs this week. I love that for them. The New York-based bank has around 229,000 full-time employees. That's a lot of people. But it is part of a plan announced 2 years ago to reduce the workforce by 20,000. Again, just talk about all the banking stocks. I don't have a specific JP Morgan story because their earnings just came out this morning.
Yeah. I mean, they're all kind of in the same boat here. A couple percent from all-time highs. I think I echo what my dad was saying, was that it seems like it would be hard to see a 10% move to the upside. You know, like an outsized move to the upside. I think kind of the move is probably going to be inside.
Expected it was only
up
$5 in
inside.
Citigroup.
Yeah.
Yeah, less actually. Ivy rank of 25 is relatively low.
Okay. Apple making waves, and they are announcing that they've picked Google's Gemini to run AI-powered Siri this coming year. Reports swirled in August that Apple was in early talks with the search giant, but Apple has mostly stayed out of the AI frenzy, and that has both benefited and been to the detriment of its stock. But now they are pairing up with Google. As you know, Google have deals of in excess of $18 billion to get, the search on Apple phones. But now it's an AI deal. This also made Elon Musk mad, which is a side benefit. What are you doing in Apple?
259 and change. Weird that the market is at all-time highs. By market, I just mean relatively speaking. I mean, S&Ps, the NASDAQ, the Dow are all at all-time highs, and Apple's nowhere near its all-time highs. 280 and change. It's trading 259. It's actually down $1 this morning.
It caught up, though.
It did catch up. It was an underperformer. Yep.
It caught up and it closed basically all-time highs. I saw some stat about like the first month of the year for Apple is like the most bearish. It's what I mean, when you think about it over the last like 20 years, it's just gone straight up.
Sure.
End of the year.
Less bearish. I mean, it's only up like 1 or 2% instead of 5 or 10%.
You like take profits on it and then,
the profit taking that you held for your taxes.
Yes,
I got it. That's true.
Oh, interesting.
I got it.
Not that matters for markets right now, but we've sold puts. We have a poor man's cover call in there. So
yeah, Ivy rank at 19 has expanded. Apple's going to have earnings coming like a lot of the major stocks do in January, late January, early February. There's a January 29th.
Well, in other news, Alphabet hit a $4 trillion market capitalization. Alphabet stock climbed to record highs after investment firms said they saw even more upside for Google in 2026. And at this point, how can you not? Like, they own the internet infrastructure. They're dominating AI. They have YouTube. They have streaming. They have search. They have everything. They have compute. It's a strong case for Google here.
Yeah, I mean, they even changed their name from Google to a stupid name like Alphabet that, nobody really even calls
it.
That's
a conglomerate.
I know, but nobody calls it or knows it.
But that was a long time ago.
I know, but you would think that there would be something like, maybe they'd still call it Alphabet now. I mean, it's a multi-trillion-dollar company at all-time highs, but you still call it Google. I still call it Google. $3.34, up $3.50, $4. Going to be at a new all-time high.
Numbers are out. E-minis just rallied.
They did. They were down about 10. They're up about 8.
Smashing vol below 16.
To go back
Gold
to
and silver both going nuts. Bonds 115.30.
Yeah, gold is up actually $6.50. It was down before. Silver up almost 3% now. It was up 2% before. Bonds, since you mentioned it, were 115.18 to 115.30. Everything is basically higher except for volatility. And going back to your Sunday night talk with yourself, or that person was saying you have all this news and everything else. Did you think that once even the S&P's traded 7,000 and over, they then open under 7,000. Would they be 7,000 again 24 hours or later? They're 7,031 right now. So up $14.
What a time to be alive.
What a time to be alive, America.
Meta is unveiling Meta Compute initiative to build out its own AI infrastructure. Mark Zuckerberg said that the new initiative will be co-led by Meta's head of global infrastructure. They want to build artificial intelligence infrastructure and oversee the social media company's global fleet of data centers and supplier partnerships in the pursuit of super intelligence. On the heels of that announcement, they also announced that they're going to cut 10% of employees in their reality labs division. They have 15,000 people just like working on like the metaverse, I guess. That seems like a lot. So 1,500 people are going to lose their jobs.
Metaverse was kind of silly, wasn't it? I mean, we all talked about how silly it was, or at least seemed.
I mean, I'm constantly seeking new ways to avoid reality.
I mean, you need a metaverse with your robots and like that's you got to have.
Evidently, you don't, because Meta hasn't really rallied or done anything. Remember, all-time highs were closer to 800. Stock 640. You know, I guess if you're playing a contrarian role here, you could be looked to be a little bit long Meta. IB rank of 33. Stock is up $2 or $3. Usually,
maybe for option trades today.
Maybe for option trades today. Earnings February 4th. You're right. Every Tuesday and Thursday. We had a nice one. AVGO. On Thursday of last week. We closed yesterday, so maybe we'll get lucky again. Catch lightning in a bottle. We'll see.
Yeah, Meta has gone nowhere.
Gone nowhere.
Nowhere.
Yes, but now it's Meta Compute.
Got it. Get it right.
Meta Compute.
Much better.
Microsoft, Oracle, and ServiceNow could be top stocks to play a software comeback. Analysts believe that these high-profile stocks at the intersection of software and infrastructure are in a good spot to monetize the coming wave of AI adoption. Now is the ticker for ServiceNow, Oracle, ORCL, and of course, Mr. Softy, Microsoft. Of the three, who you got?
I'm Microsoft, and I mean just because of the biggest one in the space. But here it is. Here's a stock unchanged, acting a lot like Apple, and the last stock you talked about, like Google has. I mean, this is one of the Mag 7 has not performed with the market. Market's at all-time high. That means the breadth of the market must be real good if the top 7 haven't really participated. Here, the stock was $550 on its highs. It had reached there twice. Back in August, and then back near the end of the year, October, November. Here it is sitting at 477, unchanged this morning. Maybe there's some value there.
Microsoft and Meta look like that, but you can, if you look at RSP, which is the equal weighted S&P 500, so it just takes the equal weight across the 500 stocks.
It's making all-time highs.
It's all-time high.
198.
So but it's caught up. Like it's kind of been choppy.
How about this as my new thesis? We put Walmart in the Mag 7. It was up 3% yesterday, so
it's close. What's it at? Walmart
unchanged, almost
913 billion. So
yeah, there you go.
Another 80-90 billion, and
it'll be a trillion,
and it's a trillion, and then it's there.
Yeah, that is bonkers. In other news, Trump says that Microsoft will make changes to ensure customers don't pay for power used in the build-out of Microsoft's data centers. He said that Microsoft will make major changes beginning this week to make sure consumers don't see rising utility bills, to which Microsoft respond, "The hell?" I was like, does Microsoft know that they pledged not to? Again, he's just been tweeting nonstop. So I'm reporting on it because just okay. But it would be great if the companies did not pass their costs on to the consumers. But I don't see a reality where
you're our grenade expert. Is this just another grenade he's throwing?
I'm telling you, it's just grenades getting lobbed around everywhere. It does not make me feel good.
Okay.
But markets don't care.
Markets don't care. Usually, I like to fade the first move on this.
None of this matters.
No.
Yeah, I'd like to fade the first move on this, but we haven't seen any kind of movement or anything. Volatility's actually down 20 cents, trading right on its lows, 10 cents off its lows. Market seems like there's no two-sided action here right now.
No volume.
Yep.
This is crazy. Anthropic's new co-work tool offers you the ability to Claude code without the code. It's built into the Claude desktop app. It's only available right now for the Claude Max users, but they put together like a video on how you can use this. This is kind of mind-blowing. Watch this. So it says, let's knock something off of your list. And so you're like, okay, summarize my meetings for this week and, just give me a rundown. And it's like, okay, let's go. And it's like, how detailed do you want this? It's like, I don't want to get fired. It's like, okay, I'm building a plan. And so it reads the meeting recordings, looks at all your notes. So then it's like, okay, prep the deck for tomorrow, look at my calendar, finish up the analysis. And so AI's doing your job. I've never seen a demonstration like this for, day-to-day like office work.
You guys better learn how to be plumbers and electricians.
Seriously.
Young people, all right? I'm telling you right now.
I mean, that's crazy.
Or learn how to trade. If you don't know how to trade or become a plumber or electrician.
Thank you, James.
Oof.
Beth, what are your thoughts on this?
Seems pretty robust.
It's,
Yeah.
incredible.
Although there's like fine print on the Claude website though, and they're like, we recommend you setting
Doing
aside.
your own work.
No, we recommend setting aside like separate folders and files for Claude because they're like, yeah, we could delete your files. I was like, that's quite the caveat. Yeah. Thank you for that. But Anthropic could be one of the blockbuster IPOs we see in 2026. So
A lot of them.
yeah.
We got a whole host of them.
Whole host of them. OpenAI, speaking of blockbuster AIs, they acquired a healthcare technology startup called Torch for $60 million. Torch was building unified medical memory for AI aimed at bringing a patient's health data into one place. What are your thoughts on more AI doctors?
I mean, why not?
I like the technology, especially for a person who doesn't like to leave his own house after work. Yeah, I don't mind it. Don't you?
Yeah, I just worry about errors, but sure, why not?
Doctors make errors.
YOLO,
I mean,
yeah. Well, in other medical news, NVIDIA and Eli Lilly announced a $1 billion investment in an AI drug discovery lab. The chip maker and pharmaceutical giant announced that the two companies would jointly invest $1 billion to create a lab in San Francisco focused on using AI to accelerate drug discovery. NVIDIA and Lilly.
NVIDIA 185 and change, up around $1 or so. It too has been going sideways here. Even the S&Ps are up 5, by the way. Volatility's in by 15 cents. I did not fade the move or anything else like that.
No,
I'm scared.
I got enough. I have.
Yeah.
I have my position for the move.
Me too.
Yeah,
Me too.
I have the
Me
position.
too.
Yeah.
December core consumer prices rose at 2.6%, which is less than the annual rate, if you wanted the actual number. But anything to do in NVIDIA?
Ivy rank a 5 in there.
Yeah.
You're really going to have to be directional.
Yeah.
Earnings are February 25th, which is after February expiration. So here's something actually for option trades today, every Tuesday and Thursday, where you might look to do something between February and March, but you're going to have to watch that volatility between the two. March looks like volatility is way too high to do any type of diagonal.
Well, because you have the earnings
coming
so
after
it's
expiration.
gonna be,
You'd want to stay in February if you were doing anything.
Yeah.
Because I refuse to take off my headphones and interact with men at the gym, I'm going to need this new app. The #1 paid app in China is called Are You Dead? And so it's for people who are single and live alone. And every day on the app, you tap not dead, and then you're not dead.
Oh, wow. See,
You check in with it every 2 days by clicking a large button to confirm that you are alive. If not, the app will get in touch with your appointed emergency contact and inform them that you may be in trouble. It was launched in May of last year to not much fanfare, but the attention exploded in recent weeks with many young people who live alone in Chinese cities downloading it in droves. Are you dead? Nah, I ain't dead yet.
They didn't get me.
I'm here, Meppa.
I'm here.
I gotta say, at 99 cents a pop, this sort of thing. Why grind 10 years to create a tasty? You can just you
sell this to the billion people in China at 99
Get
cents.
Claude to write you this code.
Yeah.
All you need is a big button on your phone, and just you get 99 cents a pop.
Well, you only get 50
You do
because
it like,
Apple's going to take 50
Who's the MySpace
cents,
guy?
yeah.
What's his name?
Oh, Tom.
Tom.
Yeah.
Tom from MySpace. Sold MySpace, got out of the limelight. He said, bye-bye, I'm out. I got my millions.
A bye-bye.
You make one of these, and it's bye-bye, I'm out.
German discount grocer Aldi is planning to open more than 180 stores in the U.S. as customers across incomes seek value. An Aldi that opened here in Chicago's very schmancy River North neighborhood had lines around the block. I've never been to an Aldi.
I've been to an Aldi.
I'm not against. I mean, I've been to them in Germany. I guess I should. I've never been to an Aldi in America.
Look at you, world traveler.
There's one in Logan Square or like Avondale. I don't know what.
Yeah, that's far from from me. But I'm not. I mean, I just I know the people that really love it. But the German grocers' growth, that's hard to say. German grocers' growth reflects fiercer competition with traditional players as discounters lure away shoppers. So there you go. Sehr schön.
Aldi, get it going.
Yeah.
Hey, I'm so excited, and I just can't hide it. Today is double protein day at Chipotle. Double up. That's right. Chipotle Rewards members through the app can get an extra scoop of the tendies. Yeah, that's right. Of the protein, get those gains. Starting today. It's today only. They are offering
ending today.
Extra scoop of protein free of charge. I love it when they scoop big at the Chipotle.
This is as good as it's going to look. Listen, I've been to Chipotle because my kid's still my little guy, Vinny. He's 16. And by the way, when you go into Chipotle to pick up the food, everyone is from high school. Like you are the oldest person to walk in.
That's because if you have
you're the oldest person everywhere.
Slop.
No kidding. It's so bad. I agree with you 100%.
You're the oldest person everywhere.
That is true.
I didn't hear you the first time, so you had to repeat it.
You didn't hear me the first time.
They hear it.
So you had to repeat it. I don't do it. Is all I'm telling you.
Thank you, Vanetta. It
Don't do
feels good to have two versus one.
CMG, what are you doing in Chipotle?
We actually did trade it.
Oh.
We have, but
I took it off yesterday.
Yeah, Ivy rank is 64, which is pretty good.
Oh, you did? Okay.
Yes, we laddered puts.
That IV is high.
Yes.
IV is high. It has earnings coming on February 3rd, and it's actually down this morning about 40 cents.
Yeah.
For inexplicable reasons, Jersey Mike's is striking a European expansion deal. They're taking their subs to the UK. So sorry. Haven't we tormented the world enough?
I actually like Jersey Mike's.
I do too. I like Jersey
Do
Mike's.
you?
I
I like
like the
oil
hot
and vinegar.
subs.
I grew up with that.
Yeah, I know.
I like that, the Mike style. I like it.
I do like it. I like the pepper spread too, but they got to be careful because they're going.
Because the private equity, like there's the less
They're going
meat.
down this. They've already done the less meat, the smaller sandwiches. We see the extra little half inch.
Yeah.
See that.
We see you.
We see you.
But the deal calls for 400 stores to be opened in the UK and Ireland, and it will be the first in a series of plans for international growth. So do with that what you will. Here's something interesting.
You know it's going to go public after they do this too, right?
That'll be the
That's
subway
plan.
moment. That'll be the subway moment.
We are mending the rift between the PGA and the Live Tour.
I saw this.
So
gotta
the
get back some
Brooks
money,
Koepka is officially returning to the PGA Tour, but there's a couple of caveats about this.
Yeah.
It's not without, its penalty. So he has to donate $5 million to a charity, and then he doesn't get a share of like the pool winnings for like a set number of years. And there's some other contingencies that were
Don't worry,
outlined.
he's getting $5 million from Coca-Cola or somebody else somewhere.
Right.
He got $200 million from the Saudis.
Yeah, right.
He's fine.
Sure, he'll be all right. Yeah.
He's okay.
It's a write down for him.
The funniest thing about it is that the like pass to get back into the PGA tour, it only applies to Brooks,
Oh, they limited it?
Well, because you have to be
You
a
have
former
a winner, like in 2020, I forget.
You have to be a former winner. So it's only Brooks, Rahm, Cam Smith, and Bryson. Those are the only four.
So they really wrote it.
So they basically wrote it
obscurely to everyone, but it only
they basically
pertained to these four because nobody else could be a former who's already there. Right.
They said, we'll take.
We're going to take the cream of the crop.
Yeah, well, you guys want to come back. You got your money grab. You come back.
We forgive you.
We forgive you. You keep the money.
You take the cash.
$5 million to some charity.
That's some BS right there.
Yeah, you take it as a tax write-off and you come right back. And you just come hang out with the PGA Tour again.
Right. You give us $5 million to charity.
Yeah.
So if you want to see Koepka swing his big stick at Torrey Pines, you can do that now.
Yeah.
So he's back, baby. Finally, today for my viral video of the day. It's just a funny video that came across my feed. And first of all, I love the solidarity in the comments. I'm just going to play this with no other commentary. Watch this.
Tango, sugar and mango.
Oh wait, that wasn't it, but that's okay.
So damn bubbly, fruity, very juicy, looking like a cutie.
Okay, that's funny. That's not the video that I submitted.
Sure. Now we know what you're searching and looking for.
I like that video.
Unbelievable.
That's not what I had submitted, but that's okay. Maybe I pasted. There it is.
Oh, you got another
and then
one.
the upper right-hand corner, the audio, because it needs the audio.
That's an angry swing. Somebody did something bad.
So the comments are, whatever he did, I agree with her. We can all collectively know this is AI, and our homegirl was with us at the spa all day. She's innocent. Seems like he really deserved this. They're like, girl, do we need to hide a body? Someone just wrote, rewrite it, Dawn.
I'll tell you something. That wasn't her first time doing this either. There was some anger. There was some experience in there. I wouldn't go anywhere near that.
I love everything
Don't
about
break other
that.
people's property.
No.
That's not good.
Thanks, Boomer.
We're going to take a quick 90-second break and come back. Even the S&Ps are up 2. NASDAQ up 18. They're off of their highs. Even the S&Ps are off their highs by about 15 handles. Volatility still down 14 cents. The Dow is down 44. We'll talk more about that when we take this quick 90-second break and come back. We got more Tasty Live after this. Good job, Vanessa.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Taste Trade account today.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to your viewer emails. But first, let's take a look at this market. Even the S&Ps down around 10 handles before the numbers came out, rallied to 7,030 and change. They're sitting at 7,020. I'll round up $2. NASDAQ up 17, basically unchanged on both. Russell up $9. That's your lead in the clubhouse by about a third of a percentage point. Everything else basically unchanged. And the Dow is a bucker, basically unchanged, but down 67. Volatility, that's your culprit yesterday. That's your culprit today. Volatility lower. I did not fade the first move, which I'd love to do on numbers days. It would have paid off nicely. But like you said, I already have those positions that are going to reflect.
I was going to say, what are you, a hindsight trader now?
Right. No. Actually, we're back down to even here.
This is, we said this on the break. This market has been torture.
Yes. There's been no two-sided action.
No two-sided action. It's the same thing every day. It's silver and gold just going nuts. Nothing else is moving. You got
silver up 3%, gold basically unchanged.
Everything is bought relentlessly.
Yes.
You can't hide.
Oil is now being bought. Oil's had a 4-day run from.
Why not?
Sure. Why not? Right. Ethereum, Bitcoin higher too, flirting with 93. It's 92, 6 and change for earnings. You had JP Morgan early in the day. It was up around 2. Now it looks completely unchanged, maybe up a skosh. Delta Airlines was down around $4. It's still down around $4. Even the S&P's just turned red, down $2.
I want to.
This will be the best top I missed in my.
We got some peeps in the chat, and of course we have Frankie yapping on and on about.
He's a metal
his
bull.
metal position, but I do want.
He's like Boomer Long, like he's got it in his backyard, under the porch, that kind of thing.
But if you go looking for it, you get buried along with the silver. So don't go looking for it.
That's right.
In his backyard.
That's right.
Because you'll be buried right with it. Right. But I do want to know, because we were having this conversation with volatility going nuts like this.
Yeah.
If anybody in the YouTube chat has gone in the last couple weeks and sold gold or silver, spot, like if you've sold
So you went to a store. You
went
you had a gold coin
shop or like a jewelry store or whatever.
Sure, or gold or silver from your teeth that you went to try to get rid of.
Is that where we're going? Vinny has that silver too.
Yeah, yes.
He's got like $100 in silver in his mouth right there.
That's right. I'm almost even from the dentist.
Yeah. I want to know what the spread was on it, because we.
So what here?
Relative to spot, because spot's we'll call it 80. We'll just say.
So did anybody go in the last 6 months? 6 months?
I don't know if it's been that long.
Anybody in the last 3 months?
Yeah.
Anybody in the last 3 months?
Since we moved from 40 to 80.
So our question is, how much under spot?
What's the spread?
Was the spread when you sold your physical silver or physical gold, maybe even, but silver is the one that we're looking for. I say it's only going to be a couple of bucks. It's not going to be that much.
I think it's got to be $10.
Okay.
Well, I think it's got to be, if you're buying.
So if it's 87 right now, you think they're going to pay 77?
Well, you can look at, if you look at.
It'd be much tighter than that, I think.
If you look at JM Bullion, they're selling coins at 90 something. So it's
What do you mean by 90 something?
Yeah, I'll tell you what, in a 1 ounce coin.
Gold is 4,600. They're selling them at 9,000, you're saying?
No, they're selling physical silver
Oh, silver.
1 ounce coins
at 90.
At like $90 to $100 a coin. 1 ounce coin.
Got it.
They're $15 above spot.
Right. That's why they'll buy it basically just under spot because they're going to sell it over spot. So they have that $3 cushion already. That's what I think. But we'll see.
Think?
Yep. Oh, you're putting up your platform now.
They pulled that up for me.
Oh, okay. All right. But we'll see. Hopefully somebody in the chat will answer.
Yeah, I don't know. So I would like to know if somebody has that.
I would like to know too. So if anybody tried to sell spot.
Yes.
Yep.
Give us a holler.
Give us a holler. Let us know how much under you had to go. So when you went and looked and it was $85, was it $84.50 or was it $80? That's what we're asking.
Yes.
Awesome.
Cool.
All right. Let's take a look at confirm and send. You ready? Tuesday, January 13th, middle of the month, just about middle of the first month of the year. How are you doing? You okay?
Good. Yeah. Right, no, I'm ready. I'm ready to go.
All right. No, I know it's hard for you. You're like my wife. It's hard for you to read and do two things.
Well, I'm reading.
I do 60 things at one time over here. You got one thing. You got one thing to do. Not sell silver. Not sell silver in the hole, and you didn't do it. All right, you ready?
Yeah,
when do I know?
Everybody's saying percentage ranges.
When do I know I've learned enough to dive into real trading? Here's a question a little bit you were talking about earlier this morning. I've watched all Where Do I Start? It's that WIS content, life cycle of a trade. I have it strong, and that's where Nick goes over trades that he's done.
You got people saying a couple bucks over under. But they got...
Told you.
Yeah.
You thought it was going to be like $10. I think it's like $1 or $2. It's not a lot.
I mean, we've seen $7 moves.
I'm telling you.
How do you buy it today at spot when tomorrow it could be at 60?
Because they risk it off almost immediately, and they need inventory to sell. Strong fundamental analysis of the strategies I intend to use. I have been testing the strategies and mechanics, but I am still hesitant on applying everything I've learned in a real live account. What are you going to tell us? Give me some words of wisdom. Try to be better than the last administration with words of wisdom. He sucked. So go ahead.
I think this goes back to our discussion that we had earlier this morning. Like you have to get a couple positions on, and you can make risk very, very small in any sized account. I mean, whether you have $100,000 or 10 grand, you could put on a $5 wide put spread and risk a couple bucks. I think you have to get trades on to really understand trading. Like you can only sit and read books and watch videos.
And you can only wait for the perfect time, which never will happen.
And all this other stuff. You can only do that for so long.
Do a vertical spread. With the way if I was talking to my son, which I did when I did Where Do I Start, we would start with a small vertical spread. And like I said, it's a cup of coffee in risk per day. If you can risk $3 to $5 a day in risk, you could probably do this strategy and live your life without it upsetting you or overly helping you in you. Try to make, like I always say, try to make the gas bill, try to make the electric bill. Set small little goals.
I don't even think you think about that at the beginning.
I said...
Well, I mean,
I agree with you.
You're not going to be able to shoot a basketball without shooting a basketball. Like you can learn the mechanics and do all this stuff.
Sure.
The circumference of the basketball. You got to shoot it. Come on.
Yep.
You got to do something.
Yep.
So I think that's the biggest thing.
All right.
So I gave you a big GFY. Sorry about that. So here's the next side of the coin here. I'm going to begin trading for a living. Are there any specific strategies you would lean on more heavily for consistent income and any you would avoid? I hate income. Hate the income.
A news bulletin for you. Everybody who trades is trading for a living.
Yeah, you're trying.
All right. Now
get something, whether it be the light bill, the rent, whatever.
Exactly. So we're all doing the same exact thing. So you're not doing anything different. Now I know you might not have any other source of income, and I think that's what you're leading to. So it makes it a lot harder. I will say to you, I've done this in my own lifetime for decades, and then did it sporadically throughout my career. It's a lot harder than you think. The pressure is a lot harder than you think. Matter of fact, when you have, I'll just use a round number, a very small one. So you have $10,000 in your account, and now you have to pay bills and everything else from there, and you don't have a good month or a month that you don't pay for your bills, and now you're down to $9,500 the next month. It's a lot of pressure on you, especially if you have wife and kids and everything else like that. It's a lot of pressure. If you don't have wife and kids and you don't, and you have a little bit of money in the bank, it's a lot easier to make money. It's just the whole psychology of it and the whole. I've told you I don't even look at the top number like on the Tasty Trade platform. I close my platform and not look at my P&L per day. I know how I'm doing, if I'm doing good or bad. I don't want to see it because I don't want it to affect me on the upside of positive P&L or the downside of positive P&L. So I would challenge you to not worry about the nuances, meaning the day-to-day action of your P&L. Always worry about your day-to-day action of your trades. Always worry about your delta that you have. Stay with a 45-ish time frame. Your movement of your P&L will be a lot smaller than if you're going into the 0 days or futures, which are going to have a lot more leverage. I would prefer you stay in the 45-day type options and work a position, make a lot less than you would expect, set your goals lower, and you will find out that you have a much easier time reaching those goals, and you'll work your way up to a big dog status. That would be the way I would do it.
For sure. And to shout out all the peeps in the chat, so like Dave and Fred and Arnie in Dubai saying spot is only, 0.5% below.
Yeah.
Everybody's saying it's kind of a lower spread on the
The coins are worth more because they have some sort of value to them because they're,
But it's the spread on the upside is way bigger. Than the spread on the
right.
Stand.
You're right again, Dad.
I stand corrected. It's always tough when
That's right.
Your father is correct.
How, you know what? Nobody's ever asked. I'm surprised at this. How is it work? Like, people have asked me, because I have a lot of boomers in my emails and stuff. But people have asked me, like, how is it working with your son? And I said, well, what you see is what you get. How is it working with your dad?
Yeah, it is. It is what you see, what you get. I mean, it's all live. As soon as
we try to avoid ourselves after the show is over. 3 hours of me is a lot during the day.
You're out very quickly. I will say the spread runs in my favor. Usually I'm right like 8 or 9 of the times. You're right the one. So you got your one here with silver. The rest of the time, so it's okay. It's all right.
That's fair.
But really, it is wonderful. It is wonderful getting to work with you.
It's okay.
It is.
Okay.
It is.
A week or so ago, I was hoping for a lot more. I'm not going to lie. I did a lot better than that. A week or so ago, someone wrote in asking about what percentage of your trades are defined versus undefined risk. I have a somewhat similar question about asset allocation. Do you have a target or percentage of trades in equities versus commodities, i.e. bonds too?
I don't think I have a specific... Again, this goes to like being, I don't know what the word I would use here, but I think on a day-to-day basis, you know exactly where your positions are. And I think I know where I am relative to my positions. Probably like 70 or 80% are going to be equity options, maybe even more.
Yeah.
Maybe like 5 or 10% are futures options, and then like 5 to 10% are FX or static futures positions. Like the vast majority, the largest percentage of my trades are going to be in equity options. That's just how it is.
Sure.
Sometimes it gets, volatility gets low like we're at now. And, the overall amount of positions is going to be lesser. The percentages might skew a little bit, but they're not going to be that. It's usually around that.
Yeah, I don't look at this like there's not something I try to do and say I need 10% of this or 3% of that or 50% of this. I echo everything that you said there. I'll add one other thing. Like we probably have more gold and silver positions on now than we've had in years past, just because it's in play. Yeah. So whatever's in play, you know what I mean? Like when the Oklos of the world were in play, we had never traded before. We traded, a couple of times a month now. We haven't traded it that much, So everything goes in a fluid motion. I mean, we follow what's moving in the market too, especially, which you don't have right now, especially when volatility gets high. It just seems like our We know that our positions work much better when volatility is high. Next question, please. Even the S&Ps are up 4, by the way. Cancel crash.
Yeah, silver almost at 88.
Yes, 2 cents below that was the high, just now up 3 1/3%. Gold basically unchanged.
In the past, you have described how to quickly calculate a one-day expected move in an underlying. Can you please go over that again as earnings season is about to start?
I mean, the best way to do it here, I'll go to Citigroup for you just to take a look. For those who are math challenged or anything else like that, all you have to do is go to the right-hand side there. Inside these parentheses is what the expected move is in Citigroup for the next 3 days. If you want to, because it's 3 days, here's the expected move for 10 days. Here's the expected move for 339 days. Pretty easy to do. But if you do want to do or look at the math, you basically could just go to, the markets are a little bit wide here because the markets are closed, but you could look at what the at-the-money straddle is trading for and take 85% of that number. So you do 535 divided by 0.85, and you can get that number, which is going to be pretty close to 4.81. That's it.
Yeah.
That's it. And 4.81 is because that's what's in parentheses there. And again, markets are moving. The stock is moving a little bit. Markets are a little bit wide, and it's just a roundabout number.
The at-the-money straddle is another quick, easy way to
Yep.
kind of just gauge
Yep.
the expectation. Yeah.
That is correct. That is correct. Pretty easy peasy, but you don't have to go through it like years gone by, like I had to do. All you have to do is look at that parentheses, and you've got your number, and that will move.
Yeah.
When volatility moves, if volatility goes higher, that number's going to go higher. If volatility goes lower, that number's going to lower. As time goes by, that number's going to go lower. That's the key. All right, let's take a quick 90-second break. Even the S&Ps are up 5. Volatility's in by 18 cents. The Dow's down 14. We'll be back in 90 seconds. Looks just like every other day. We'll be back in 90 seconds. We got more Tasty Live with an option jive next.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's Option Jive.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this option jive. Beta-weighted deltas and correlations. Go.
I'm getting the itch at 88.
For silver, you're talking about, obviously. Silver just traded over 88, 88.08. Silver on a, well, what would you call this, son? Blow off top?
It's had about 20 of those over the last month or so.
Yeah, from 70 to 88, it certainly has had quite a few.
I'm going to stay.
And then from 50 to 70, it had quite a few.
Oof. I gotta tie my hands between my back here. Gotta do one of these. All right. We'll wait. Option jive. Let's do it. Beta-weighted deltas and correlation.
Do it.
So deltas are fundamental metric for directional exposure. It measures how much an option's price is expected to change via a $1 move in the underlying. The way you can calculate it for spreads is like the visual that we have here. If you're short the 35 delta call and you're buying a put here, or if you're doing a spread on the upside, you just net out the deltas. That'll give you what your overall delta exposure is on the position. So when you're doing an iron condor, you're going to have short delta on the call spread, long delta on the put spread. Net that out, and that'll give you your overall delta on the position and how that position as a whole will move via a $1 move in the underlying. And so when you're looking at spreads, you'll typically see this number being very, very low. You should expect your position to move very, very slowly, even though you're, leaning short on that position with spreads. Really, what we're going to figure out here is how we can judge the directional exposure of an entire portfolio when you have all these positions, long sum, short sum, neutral sum, static delta, how we can take that all into account as our portfolio as a whole. And the way we do that is via beta weighting. So you have to have a common denominator, which on the next slide here. So beta weighting is the underlying correlation to the market as a whole. We typically go to SPY, which is the S&P 500.
By the way, your silver is 88.30.
So you could do it even better.
So it just rallied about 30.
So how do we do it?
35 cents or so.
Were you trying to bait me into doing that?
If you liked it at 88, you're going to love it at 88.30.
You know what?
32.
You know what? You do that.
36, 37. If you wait another second, you can get 40. There, it's 40.
395.
Sure.
Go.
You sold it like spot. There you go. Beautiful. Look at you. You're up. You're down. Up. Down. Up.
Okay.
Down.
So we use SPY as our beta weighting metric. What we're doing here is we're taking, if you're short delta in Apple and you're long delta in Microsoft, they're very highly correlated underlyings. We want to take those deltas and weight it to the market as a whole. They're very highly correlated to the market as a whole. Those two together can have offsetting exposure. And so beta weighting allows you to kind of take many different positions and put them to one common denominator. And when you have 20 or 30 or 40 positions on, it really helps you understand where your overall market directionality is, right? So it takes them all together, gives you a common denominator. If you want to get into the weeds of it, here are the calculations for that. But it's all done for you on the platform, which is very, very easy. On the next slide here, so as a $1 move in SPY predicts a beta-weighted move in each underlying and the beta-weighted change in your portfolio as a whole. So you take all of your deltas together, you put them into a common denominator. It gives you how your portfolio is going to move relative to SPY itself. It's not going to be perfect, of course, because sometimes you have binary events, which is one thing that we're going to get into here, and things that skew correlation. Just because something has a very high correlation, like gold and silver are a perfect example. Gold and silver have very high correlations, right? But today, silver's up 4% and gold's up
Nothing basically.
25 basis points, basically unchanged. And so the correlation matches, but the magnitude of that correlation is not matching today. That's kind of where we're going with.
Today is like a binary event. It's a 1 day time snapshot.
All correlations are binary. Like it tells you the general directional moves in those underlying.
Subject to change.
Yes.
It's always
when you look at the actual beta of the underlying, that'll give you a little bit more of the magnitude of volatility of those two instruments. But just generally speaking, that even if you know the beta and the correlation, it doesn't mean that you can bank on that.
That's correct.
On a short data set, on a small data set. When you're talking 1, 2, 5, 10, occurrences, it's not always going to play out that way.
That's correct. And when you look at this, we always talk about it reducing your exposure by about 85%, because 85% of the time they move in tandem with each other. Now, you look at the gold, silver, and I'm sorry we're talking about this ad nauseum because it's not the greatest trade to make. It's one that's in play right now. It's down around 3% right now, although silver is up a little over 3.5%. You would expect that movement to be like less than 1% movement between the two products. Yeah. But this is just highlighting that gold hasn't moved and silver is moving.
Yes.
What you just said.
Yes.
Next one, please.
So the problem is historical correlations often break down when you need them most. So correlations can spike during market stress. So this is where you get the phrase of when in a crash, everything goes to 1, the correlations go to 1. It basically means, when you have these huge moves, typically to the downside, it's a sell everything. There's no flight to safety. There's no, the negative correlations go down as well. So it's kind of everything moves all at once when you have these volatility events. And then you also have binary events, like earnings can change and are very, I don't know if you can batch that into the correlations. When you look at a JP Morgan, the correlation of JP Morgan is 0.76. Going into earnings, you kind of have a binary event where it's fairly random.
Yes.
Most of the time we've seen over an earnings season, most of it tends to end up being 50-50 in terms of up versus down stocks. It's the magnitude that really varies the most. But this is kind of what you run into with trying to,
play that correlation for that one moment when you put it on.
Things, yes. So, things like a binary event and, volatility events specifically can skew those correlations.
But that's what you try to take advantage of, right? That's if you think it's going to continue going, you're hopping on. If you're trying to fade it, you're doing the opposite. But that's what you're looking to do. You're looking for opportunity.
Yes.
When things move, you usually have opportunity.
Yes. Yes, for sure. So when to trust beta weighting, it works well with a diversified portfolio, and you're talking about, a handful. We're not talking about, or I should say more than a handful. We're not talking about 2 or 3 positions. Your correlations are going to be pretty random there. But when you get to 10, 20, 30 positions, you're going to have, the beta weighting really, really helps here. And it helps understand, where your overall position is of your portfolio as a whole. And of course, during quote unquote normal market conditions, when you're not having, in April of last year, nobody was talking about correlations. Everything was going in the same direction, up or down when you have these kind of volatility events. Times where you should kind of be wary of beta weighting your position, or at least looking at your beta weighted delta, is when you have only a couple positions. It's going to skew a lot there. When you have earnings, when you have a very high VIX, things tend to move in the same direction regardless of how high their correlation is. And then when you have low correlation in general, so correlation, when you get into the above 0.5 in either direction, that's kind of when you start to consider correlation. Mm-hmm. Something that has a 0.2, 0.3, 0.4 correlation, it's very much random. That's not a high correlation. So you really have to look at things like on the higher end rather than, the middle range.
Yes. Yes. Good work out of you.
So a couple takeaways here. So raw deltas across stocks are apples to oranges. So the reason we use beta weighting is to put that all in the same context. So beta weighting converts to SPY equivalent deltas. It helps us judge our directional exposure relative to the market as a whole. And it puts all of our positions together into the same basket here. Of course, if you want the formula, it is right there for you. But it relies on correlations, which can break down. So, SPY and QQQ and, tech versus oil stocks, all those correlations can break down at points, especially when you're talking about binary events and just market volatility in general. A lot of those can break down there. And of course, you got to take it with a grain of salt. Just because you have 100 long SPY beta weighted deltas and SPY is up $1, it's not going to mean that you are up exactly $1. There are other things that go into trading like beta decay, volatility, gamma.
But you got to judge it by something, right? So if you had 500 long delta in your portfolio and SPY was up $1 and you're not up $500, right? Because that's the correlation to it. You have to take a look at your position and find out why you're not up $500 because that you have that risk of the 500 shares. So you say to yourself, volatility's higher. I get it now. Volatility's lower and I'm short premium and I'm not up $500, then you don't have really good positions on either. Meaning you might have a lot of out of the money options that have crappy delta to it. I mean, they don't move that much on a one-to-one basis with SPY.
Or maybe you have a position that
or you have one position that right.
You had delta. You had 100 shares of delta and the stock's down $4.
In SLV, right? You had short delta. You're basically delta neutral, but you had your short delta in SLV, and SLV's up $4 or $5. So you get it that
and
way.
you'll see that in your beta weighted deltas.
Of course,
that'll dynamically.
So you got to dig a little bit as well.
Yeah, you got to dig a little bit and kind of look.
Yep. Good job out of you.
See where you're at.
Hey, listen, before we take this quick break, my buddy Sean said the best way, and please put up the slide, is refer a friend. I mean, if you're looking for consistent income, refer a friend, earn some bonuses, make some money. You make money, your friend makes money, $100 a piece. Do that. That's the best way. He's right.
You should get you some flyers. You walk around that nice little cul-de-sac you got and just kind of hand them out.
I'll put them on people's cars. I'm not above that. I'll do that.
That one's good, but the money match is pretty. It's pretty awesome.
See that?
Got a 4% money match.
That's right. That's the big deal that you're talking about, right? Match up to $10,000. Not $10,000 that you put in will give you up to $10,000.
Yes.
That's about $250,000 that you put in your account. 30-day commission-free trading to 4% cash match. Check that out too. That's for new accounts.
Who says no to that? Nobody. You have to be silly.
You have to be silly.
Silly goose.
You got to have a death wish. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&Ps are up 9. The Dow is up 9. It was on Bucker. You got all 4 indices.
Thank God.
higher.
Get the 50K hats out. Come on.
We'll be back in 90 seconds. We got more Tasty Live after this. The opening bell is next.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel
like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Nikki, we are back, son. You know what that means? The opening bell is imminent in about a minute and a half, maybe a little bit more. Even the S&Ps, well, they've been oscillating around unchanged to up around 10. They're up 5 right now at 7,021, a number I didn't think we would be over 7,000 again after yesterday's move. You see, yesterday's move, we got down to 6,950. I thought 7,000, big round number, just would last for a couple more days than not a day. Even the S&P straight up to 7,036, but everything's basically unchanged. The NASDAQ up 3, Russell up around 8. That's the strongest of the group, and the Dow down 18. The Dow has been oscillating between unchanged and lower, but as you can see, just after making all-time highs, volatility I think is still the key. It is 20 cents off of its lows. It is 20 cents off of its highs. Let's paint the picture as it is. Volatility at all-time lows as markets oscillate to the upside. Bonds are up 8 ticks, 115.28. They did get to the highs over the last, 2 weeks or so of 116, got close to the lows of 115. Bonds with a low IV rank of 5 seem like to be a dead product this time. Bitcoin 92.6, up $900, which is about a 1% move. Oil up 93 cents. It's had a huge 5-day rally here from 56 to about 60. That's $4,000 move in oil futures. Gold futures not moving too much, although they're up another $12 to all-time high. Silver's your big mover, up around 4%. Oh crap! Let's just rally. Let's just default to the upside here, up just under 4%, trading 88.34. Nat gas down another 4 cents. to 336 and change, down 1%. JP Morgan, which had earnings, looked like it was unchanged to up 2. Delta Airlines looked like it was down 4. Your opening bell is right now. I don't have to quote anymore. We can see what's going on with the market. NASDAQ flirting with unchanged. What do you think here, son?
Well, I gotta get through this real quick because our viewers are amazing, but I just got an email from Malachi in Indianapolis. He's a metals dealer.
Oh, awesome. What does he say?
He says most shops are buying them $4 back of spot with as much as $15 back if it's just like a generic silver. Like some of the coins, basically, like if you got the coins or stamped stuff, $4 back. But he's saying that most of it, they're buying it and then they're either flipping it as quick as possible or it's going out to wholesalers as soon as they buy it.
That's what I said. They spread it off immediately.
It's nobody's buying holding.
Right.
It's out.
Right.
It's out the door.
Yeah.
So
I mean, you've got markets that are moving like this. There's a lot of edge in it for them at that quick little moment.
Shout out our peeps.
Thank you.
Amazing.
Like right now, I'm sure that they're coming out with silver at yesterday's price of like 85, not 88. When they're buying it, they'll go, all right, I'll pay $84.90.
Yeah, exactly. I don't know if everybody's looking at the live
in real time
here in real time.
All right, let's see what the buckers are here. APP, App Loving, down about $13. PDD. Down around $6 and change. Some of the Chinese stocks down $5 in Baidu. Microsoft, not a Chinese stock, but it is down $4. Meta down $3. Amazon down about $2. AMAT down around $1.50. Let's see what Apple is.
I closed out the puts in AMD. We sold like middle of last week, the 180 strikes.
Good job, Eddie. AMD up $11. That's going to be one of the bigger movers. Again, here, just trying to play a little bit of a contrarian role here in AMD. Let's see what the movers are to the upside here. You're looking at AMD, your big mover, up 11. Google, the Goog, up almost $6. Coin up $4 and change. MSTR with a rally of $3.60. Ivy ranks only 27. Earnings are coming out on the 4th. Silver, OKLO, up $2 and change. MU, up $2. TSM, which has earnings on the 15th here, it's like 2 o'clock in the morning on the 15th, is up $1.80. Ivy rank of 24.
I also bought I did a
JP Morgan?
Yeah, JP Morgan yesterday on the close with Jamal. I did a put ratio spread.
So you bought one put close to the money, sold two puts.
315, sold 2 of the 310s.
So it's a slightly bullish position in JP Morgan. JP Morgan basically unchanged.
Yes. Engagement trade of sorts, because I didn't really have a bone to pick here. I was thinking the same thing like you were, where the upside was probably muted. Maybe it's an inside down move.
Yeah.
Like that was.
And that's what you got.
Yes. I could have closed out the position, taken.
And you did it in the 3-day options. That's what makes it more of a binary event earnings type trade. If you did that in the 45-day options, it probably didn't move.
Yes. So I did it at 34 cents.
For 34-cent credit.
For 34-cent credit.
Yes.
To close it, it's marked at like a nickel. You could sell it for a nickel.
Nickel credit?
Maybe.
All right, so unchanged. So you can make 34 cents, whatever, 35 cents. Yeah.
Rather than take the money and run, I bought the 305 put, which makes it a 315, 310, 305 butterfly. I bought that put at 34 cents. I can show this.
Coincidence. Yeah, you can show it up on the platform.
So
right?
I can pull this up.
Coincidence, good thing, right? Even the lower you paid for that put, under 34 cents, you actually locked in profits. Here you basically are going to end up with a free butterfly. Please continue.
Yes, exactly. So, and this is the order chains. This is on the right side panel. I have mine pulled out here. So I put the trade on for 34 cents. This is your position here. You can see it's marked at a 5-10 cent credit to close. So you could have taken the extra 10 cents. Instead of doing that, I bought this put, the 305 put, which gives me this butterfly here. It's a 5x5 butterfly, 10-point range to hit for up to $5 in value. The risk on this trade is the 40 cents that I have in profit. I could close this whole thing and do it for, somewhere around a 40 cent credit, and I could keep that and move on. I'm leaving that on the table with this butterfly into the end of the week for a lottery ticket up to $5 is basically what I did with that position. So if we get a move to 310, I can make up to $5 on this trade. It has no risk from a principal standpoint. I'm not outlaying any cash because I lagged into the spread.
You're actually reducing because a 1x2 would
free up
use
that
a
capital.
couple of $1,000 in buying power, $1,000 in buying power. Now you freed up that capital and you have a quote unquote free shot at $500. Now this makes a lot more sense when you have 3 days to go like you do, but it does when you have 30 days to go, and that butterfly is going to be traded at a much higher price as it moves closer to your short strikes with 3 days to go than it would on a 45-day strategy.
Yeah. I like to do that because it's one, from a credit standpoint, a small position on the open. The amount of money you can make on the trade is very, very small. And, that trade is probably a 10% pop.
Yeah.
That's what it is. Yeah. I'm okay with taking a lottery ticket shot. If it works, it's great. You pat yourself on the back. It's a home run.
Very good. Totally agree with you. Gold catching a small little bit up 9. Silver trading at 88. Just traded under 88. You're up about $400 on your future, but you've been down a lot more than that on past futures. So now here comes your
volatility kind of staying. I think you were right yesterday when we were talking about volatility continuing to stay bid or at least find a floor here.
Yeah, you're not going to go much lower in
with
volatility.
everything that's going down this week.
Agreed. I didn't think you would break the 16 handle though. That's what I said. It got down to 1580 this morning. I didn't think you would see that, but it's 1610 right now. All we're trying to say here is that volatility, like a commodity, has a floor to it. Risk can't be. You can't pay zero for risk. You have to pay something. Otherwise, everybody would put on very risky positions and buy their risk in at zero. It would make way too much sense.
You say that, but there was a time where the VIX was like 8.
Yeah, no, I lived through it. I was making markets through it, but yes.
Yeah.
Yes.
No, not back then. It didn't get that low. That was on the. That was
before there was a VIX, but it got
2014,
it got in single
15,
digits.
16, 17. Those, we used to applaud a 10-cent move in the VIX. We'd call that high volatility.
Yes. $5 move in the E-mini S&Ps would be a huge move. I mean, I don't want to date myself, but yes.
I'm routing an order to close the Boeing call diagonal. We did that with TP last week for the cherry pick segment, which you can subscribe to at tastylive.com/newsletters.
Yes, you can. Boeing making all-time highs up $4 and change. Man, there are just too many stocks. So many stocks making.
Yes. Uber. What else is moving here? Do I have anything else?
SPX, E-mini S&Ps, expected move is $20 on the E-mini. It continues to go lower. You remember at this time yesterday and in days past, it was closer to $25. Volatility extremely low. So proceed with caution.
Yeah. A little bit of a mixed bag today.
A little bit of a mixed bag, and that's why even the S&Ps are basically unchanged. But you do have Bitcoin up $1,200 now, flirting with 93. It was just over 93. It's 92.8.
What were their earnings? We have Wells Fargo,
Citigroup, and Bank of America. I'll do them for you in reverse order. Bank of America looks like it's unchanged or down small, 55.10, Ivy rank of 18. Wells Fargo is down small, 29 cents. And Citigroup is down 16 cents. They're all basically unchanged. Relatively low IV rank in a relatively low monthly implied volatility stocks. Like it's one thing to have low IV rank in a higher beta stock than you would in some of these bank stocks. Bank stocks historically have relatively low monthly implied volatility. You couple that with an IV rank of low, that's just telling you that the monthly implied volatility is about as low as it's been in quite some time. That's what you would expect with small movement.
Close out of those puts that we did in
IBIT.
In IBIT, that was a
We're trading both sides of that. Been pretty good.
Yeah. I mean, I got long shares, so I'm long.
You're defending
more.
that. Yeah.
But we did those puts last week. We did a number of laddered put positions that we've taken off because the market.
We had the one down tick. I mean,
we have no
took
down.
advantage of that.
There
one
is no
tick.
down move in the market, so we took those off. I think that came from What's Your Assumption? That might have been my guy H.
Yeah.
I forget who it was. Whoever it was that gave us that took a couple bucks out of that. We also closed out those CMG and Oracle laddered puts that we did as well. I closed those earlier this week.
Very good. Very good.
Yeah.
Ready to take a quick 90-second break? I got me fan favorite Craig in the house here. We got Futures Focus coming up. Would you like to take a look at that?
Yeah.
Friends from
do it.
Yeah. Okay. Well,
got oil at 60.
We got oil at 60.
Yeah,
up
it was
$1
supposed to be
and
at
change.
50.
2% move. Say again.
It's supposed to be at 50. We got all that Venezuelan oil coming. What?
Isn't it amazing how it doesn't matter?
It's supposed to be at 50. What's happening here?
Well, maybe we'll find out from Craig why it's not. He's the CME group. We'll talk to them. Let's go right to the man himself. We'll take a quick 90-second break. We got more Tasty Live after this.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nicky, we are back, son, and you know what that means. Enough out of you. We got Craig in the house for the CME Futures Focus. Happy New Year, Merry Christmas, all that other things. How are you?
Yeah, Happy New Year to you guys. I'm good.
Very nice, very nice.
Good to be back for another year.
Another year, another new quarter zip.
Here we go.
This is great.
I know. I was going to say.
This is great. Very nice. Very nice. You come in here, you don't bring no bakery box. Did you see a bakery box? You see any quarter zips? You don't see nothing, right? I don't see anything either.
We had there were a lot of holidays, a lot of time off. This is
my gifts. Our gifts are probably still under his tree. Is what it is.
Yeah, they are. But next time for sure.
Sure.
Yeah, one of these days I'm going to come in with a.
Oh, I bet. I'm
going to run out.
I'm going to hold my breath. Good job out of you, man. Well, I'm glad to see you. Thank you for your support here. Futures in Focus, sponsored by the CME. Yes. You've had some movement here. You're actually talking about oil, right? Everything you wanted to know about CL, MCL, and QM, but were afraid to ask.
Yeah.
Right?
Indeed. Yeah, I don't know if you guys timed it, but you were talking about crude at a pretty relevant time, right? Because it's kind of slow last year.
Yes.
We've seen some moves lately.
And that's why the volatility is spiking now as it's going higher, which is typical in commodity prices to have volatility expand to the upside. Can you go? I know you're going to get in depth here about everything about them, but why does conceptually on a high level, why does volatility expand in commodity products where in equity products like a market like a minis or something like that, volatility on the options typically does not expand on the way up.
On the price rally, typically. Right? Yeah. And in the skew too, right? If you look at the skew in oil options, it's call skew is really kind of blown out, right?
Way out of the money options, call options are worth more money than way out of the money put options.
Which is different. I mean, you hardly ever see that, and maybe never see that in an equity index.
That's correct.
Right? It's always that sort of outsized move or that outsized risk is almost always the downside in equity options. Now we're seeing that outsized move risk to the upside in crude options.
You got oil up 2.5% today, trading 61 now.
30-day implied's gone from 27 to over 40%, I think, since obviously since maybe not obviously, but we should point out since
45%
U.S.
now,
went into Venezuela and arrested Maduro, right? That's kind of where this move started.
So let's talk about price. Let's talk about price for a moment now. So you say that. Let's just say that oil was around 55 when all that was coming out, on the weekend, and you're saying, "Ooh, let me think about what my position is going to look like on Monday, or what I'm going to put on Monday." You've got this flood allegedly of oil coming into the market. When you're flooding a market with something, you think it might be a little bit lower, and lo and behold, it's $5 or $6 higher.
Right.
Best laid plans of mice and men. That's why you just got to trade what's in front of you and not try to think too much.
Yeah, it's hard to predict how the market's going to react to a lot of these things, and who knows what exactly what the rationale is. Now Iran's in the headline too, right? Getting some geopolitical, and I think we're going to talk about what moves oil, and certainly these geopolitical things are certainly one of them. That we're seeing right now.
Yeah. Yep. No doubt. All right. Well, let's get to your first slide. I know you got about 10 of them, so let's take a look.
Yeah. So there's actually 3 different sizes of crude oil futures at CME. Though since we launched the micro, what we call the MCL or micro crude, it's really most of the traders are trading either the standard size CL product or the micro product. We're not seeing as much business in the old mini product as we used to, but it's still there and it's still a viable product for trading. But the difference is obviously just the size, right? So the what we might call the standard size crude is 1,000 barrels of crude oil. Which, I think we've got notional value of 80 here at a price of 60, which I think we're near 60 now. It's a $60,000 notional, which just means that if you buy or sell one CL futures contract, you've got $60,000 worth of exposure to crude oil. And, sometimes people don't understand notional value. That's all we mean by that is how much of something you're getting, how much exposure you're getting to whatever it is you might be trading. So, that CL, $60,000 on a product that, like we were just talking about, can move. It doesn't always move, but when it moves, it can move in a big way. So kind of a rather large product, which is why we've got the 2 other ones, the micro crude, which is 1/10 the size of that CL, the commodity Kobe, and MCL, which is 100 barrels. So instead of 60,000, it's 6,000. So, we've seen, from the retail or the individual trader, we've seen an adoption of that micro crude.
Yeah.
It's a more manageable size for people. The margin's obviously 1/10 what it is in the standard size crude. We've really seen an adoption of that product. And like I was saying before, the mini crude is still there. That's half the size of the standard, 5 times the size of the micro, so 500 barrels. Right. And that still trades a little bit. But really, we see more of the activity now in the standard size and the micro.
Yeah, I just think the 1,000 is easier than the 500 for
conceptually, maybe
more professional type traders or something like that. That MCL, I think, is the retail product du jour if you're not trading the CL options.
We trade a lot of it. Like we'll trade MCL as like our static delta, and then layer in like call spreads in CL or iron condors in CL, where you get a little bit of dynamic delta and you get like the theta and volatility component to it, but you also have the static delta of MCL because the CL contract it gets big. It gets big. It gets big in a hurry. Plus, 80,000 in notional value is okay for a retail investor with a margin type size or a portfolio margin for sure. But 8,000 reaches a lot of people, a lot of retail investors. You get that $50,000 to $100,000 account using $8,000 in something, a higher end than we would be looking at, but certainly right in the wheelhouse, especially if you're looking at scalp.
Totally. And, and the other thing to point out too, and the standard size product is a physically delivered product. So if you, and again, most retail brokers aren't going to allow one of their customers to hold a physically delivered product till it expires. But if they did, there's a delivery obligation there to either make or take delivery. Whereas the micro and the mini are both what we call cash settled. So if you were to hold that until it expired, we're just going to move money one last time and then the position would go away.
Yeah. And so back to nobody's getting 1,000 barrels of oil delivered to their house. You'd need a very large plot of land. I wonder how much the actual size of that would be.
I don't know what 1,000 barrels of crude looks like.
The 55-gallon drum is like this by this,
It's like the size of a body. You can fit a body in one of those 55-gallon drums.
But to that point, I believe every broker has a risk parameter built in to where you'll be out of the position before this is even an option or a thought. But it is important to note that it is physically delivered.
Yeah, and I think I've even said it on this show before. One of the lines I hear when I go to industry events that retail traders attend, I don't want to trade futures because I don't want an oil tanker showing up in my front yard. Well, we know that's not really going to happen, but there is that obligation with some of these products, and like Nick just said, you want to know if what you're trading is deliverable. Then you really got to be cognizant of when that expiration is.
Yeah.
Contract specifications.
Yeah, right, so
now we're getting into the weeds here, right?
But a little bit.
But this is what you have to know. You want to know the tick value. I mean, that's the most important thing for me. But go ahead. I'm sorry.
No, not at all, Tony. And you make maybe one of the most fundamental points that that we need to make when we're talking to traders who maybe trade in securities, but not futures. Is that fact that it's everything's got a different what we call multiplier. We were just talking about the 1,000, 100, and 500, and then that tick size, which is the minimum amount that can exist between the bid and the offer, right? So in the standard and the micro, that's 1 penny. So you might see a market that said something like 61.00 at 61.01, right? Yeah. Like 1 penny between the bid and the offer, which, because the standard size is 1,000 barrels, represents a $10 move. So in other words, every 1 penny move in that standard size contract is a $10 impact to your P&L. So when you put it that way, it actually underscores how big that product really is. Because 1 penny, $10. If you can, we've seen much bigger moves than 1 penny, right?
Sure. Yeah,
so,
sure.
and then if you go down to the micro, instead of $10, that's a $1 impact to your P&L. So again, just a more manageable size contract for a lot of individuals.
And this plays into the options as well. So when you're looking at spreads in CL or even naked options, and the spread trades at 50 cents, it's really $500 because it's a 10 multiplier. When you have a $1 wide spread or a $2 wide spread, it's $2,000 in total value because it's $1,000 per dollar on that spread. So it applies, the tick size applies across the board to the options as well.
100%. It's that multiplier, right? And that's one of the biggest hurdles people have to get over that might be used to trading options on stocks is it's not 100 shares, right? Because intuitively, if you're trading stock, you see the price and you multiply it by 100 and there's your dollar amount, but you make a great
But that's
point.
a great thing about the MCL product because it
actually looks the same, right?
Yeah.
That's why I say that's the retail product. I mean, if you look at the futures, in my opinion.
Yeah. So and then of course, like almost all of our futures and options, these are available from. We open 5 p.m. Central Time on Sunday evening. We're open till 4 p.m. on Friday afternoon, with a 1 hour close between 4 and 5 Central Time every day. So, like most of our products, these are available all night long, which is important because especially with a product like this, like we were talking about, some of what can move this is those geopolitical events, and those can happen at any time of the day or night.
They're unknown, right?
Unknown, right? The unknown unknown.
Yep, the unknown unknown. That's right. That's right. Talk about liquidity now. All right. Well, let's see.
I think I'm going to be getting a little short delta here.
In oil?
Yeah. I mean, it's a big move. I just sold the 66.69 call spread. So it's a $3,000 spread because you're 3 points wide. I did it at 46 cents.
Which is $460.
$460. I also have an iron condor on in there that's got a little bit of short delta given this move. Maybe I even peel off the put side.
So if you were paying attention a slide or two ago when you mentioned that CL versus CL is 10 times. What's that?
Oh, I think you're talking.
Yeah, it's 10 times the size. The options are going to reflect that.
Exactly.
So in an equity world, 0.46 would be, $46, $460.
Yeah.
In this, right.
In the oil.
Yep. And so and then all we're doing is we're looking at the literal price on the screen, and what you're doing is translating that into the dollar amount. So that 0.46 that you see is $460. But that's great, and what I love about that, Nick, is that you're kind of showing the audience that futures options work just like you know they do in equity options, right? That call spread is a call spread. The vol's going to work.
Rose by any other name, it still smells just as sweet.
My futures right now. So, I mean, because a lot of things I don't normally trade have been moving recently. So you've got, wild moves in silver and gold. I'm in copper as well, which is /HG. So I sold a put spread in copper because copper, the metals have been really interesting. If you had platinum options, I would probably go there. But I'm in oil. You've got, oil is kind of in the spec game right now with the Venezuela stuff, the Iran stuff. You've got markets at all-time highs. So I'm, in the E-minis and the Russell. I even got into MXP, which is the XRP futures that you guys have with Ryan yesterday. He got me in those.
The micro
futures. Yes. So I've got a little taste of everything.
Well, it's interesting times, right?
Yeah.
Like gold and silver are near all-time highs. But so is the stock market.
Mm-hmm. Yeah.
We've got these geopolitical things going on, and oil's moved, but hasn't.
It's kind of been around
still kind of hanging around. So definitely interesting times in the market.
Yeah.
Liquidity. I'd actually, I'm going to say that the MCL is we'll go tight to very tight. That's a very tradable market. I don't think there's certainly not going to be a liquidity problem for an individual trader.
And from the futures themselves, like the long short contracts, those are penny wide. I mean, you have no. The options sometimes, like the round numbers, are a little bit better, or the round numbers are a little bit more liquid. But I would agree, we've traded the micro crude options as well. No issue there.
Yeah, no, you're absolutely right. On the options side, certainly the CL is going to have a tighter bid offer. than the MCL. In fact, I was looking at those micro options today before I came over. They're a little bit wider than the CL, but I think, Tony, you've mentioned in the past, like, you can get a pretty good idea of value by looking at the CL. And
everything trades for parity.
Those micro options are tight enough that knowing where value is, then they're tradable, right?
And by value, you're saying if a CL option trade is 30 cents and you do it in the smaller if you were doing it in a smaller product, when it gets to around 30 cents, it's going to trade too.
You're talking about the actual, like, so if you're looking at the 65 call in the crude contract that's trading at 30 cents, it's probably going to trade for 30 cents in the micro crude for the same duration.
Exactly.
It's going to trade.
They take out the offer.
Right, kind of gives you an idea of where you might want to put your bidder offer.
Yep.
Yes,
yep.
exactly.
Totally. No matter what the market says on the screen. It might say 20.40 or 15.35. It's going to trade at 30-ish cents when.
Yeah. So I think you've mentioned that before, Tony. I think it's a good point, and that's kind of how certainly I'd concede that the micro options are a little wider, but tradable markets nonetheless.
Yes, for sure. Totally agree. Totally agree.
And certainly we'd certainly agree that the standard size is more of an institutional product, and micro is more geared towards the individual. Execution quality is good. And these things, like we just talked about, they'll trade all night long, and there could be factors that happen overnight that move these markets.
I have to, from my own experience, I've been trading futures for almost 40 years. I mean, QM, I just haven't traded it. Like, if I'm going to get big, it's the CL future, and if I'm going to stay in the adequate size where I prefer to be, it's / MCL.
They do have a
2.5 cent tick move.
For natty gas, you have an E-mini. It's QG, which we have traded before.
Yeah, a few times. Yeah,
it's I think it's $25 a tick.
I don't know off the top of my head. And Tony, you're about to bring up it's a wider minimum tick in the mini. It's an interesting product because it's actually, a lot of people don't realize that we actually had some micro products and like the mini crude before we launched those micro equity indexes that became so popular, like the S&P, NASDAQ, Dow, and Russell. We actually had micro gold, we had micro currency futures before that, and we had this E-mini crude. And that's why I think it's more of a legacy thing, kind of going back to NYMEX. So that's actually existed out there for a while. The bid off, the minimum tick's a little bit bigger. But I think, again, that these are all reasons why I think we've seen that business move more to the micro than the mini.
Next slide, please. Margin math. Yeah, I did good in school in math, but let me see what we're going to do here. Go ahead.
And they did this on an 80 a barrel, but you can change this. You could change the numbers here, and all the same kind of calculations apply.
Right, because oil's 60 and change, right?
Yeah.
Mm-hmm. Yeah, so instead of 80 and 80, 100 and the numbers, it's cancel, replace the 8 with the 6, right? And you'll come up with the right numbers. But yeah, I think we've talked about, I like the way that you guys look at this, you've got this much money in your account. What's a 1% move going to do to your overall account balance? And I think that's a good way to look at it because, like all of our futures, these are leveraged products, right? They're we call it capital efficient, but the other way to say that is they're leveraged. So, right now, in order to to hold a micro crude contract, I think margin's about $400. Yeah. So $400, and you get what we're saying, $6,000 worth of exposure. So you're putting up only a fraction of the amount of exposure you're getting. So I think the way that you guys kind of lay this out on the slide is a really interesting way to look at it. So people know, 1% move is a 1% move, but because they're levered, that sort of percent of my portfolio, it can be relatively more impacted.
You're our lucky charm, Craig.
Well, I was going to say this is the
first intraday but for the 3 hours that we do in the morning, because it feels like it's been market lower and then we just rally.
Some equity
like that is the lowest 10 minutes before the open. I think that's the first intraday dip we've had that I could get out of.
It's a phenomenon. He made money from the short side.
Some of my shorts. I got out of some of my micro E-minis and some of the micro NASDAQ.
That's correct.
We're still leaning with a little bit of short delta. You got volatility up 28 ticks. / VX 1640 up a little
on the
over
stocks. So stocks are breaking. Is that
they're down 18 handles on even the S&P,
Okay.
almost 40 on the Nasdaq.
ES back just below 7,000.
Yeah,
little tiny. This
breaking off of all-time highs.
Listen,
so
20 points is like a gift from the heavens. So
on the short side, it seems that way. Yes.
So we'll take it. We'll take it.
Yeah. It's a great the first line on here. You know, I steal a line sometimes from our friend Bob Iacchino that we work with a lot at CME. You know, who will talk about, you know, why trade crude oil futures and why trade gold futures. Well, if you want pure exposure to these things, futures are just that, right? They're going to settle to the cash price. They have to.
Yeah.
So what Bobby always says is, what's more correlated to crude than crude? Right. So, and you know, you can trade.
It walks like a duck, quacks like a duck. It's probably a duck.
It's a duck.
Yeah.
You know, because you can get crude exposure through oil companies and, you know, oil exploration and refiners. But if you want true exposure to crude oil, futures give you that really pure exposure. So I like that first line on here, that it's a futures contract. It's literally what crude oil is.
Yeah, for sure. For sure.
And we're looking at options here. So the one thing I would point out too about the micro options on crude is that those are cash settled. So whereas a lot of our options, if an option expires in the money, you're going to be assigned or exercise a futures, and then you're going to have a futures position. The micro crude oil options are cash settled, which I think appeals to a lot of individual traders.
Yeah.
Retail investor friendly.
One less thing to worry about, you know.
So
we represent the retail investor here, so I call it as I see it. That's the
I think that's right. You know, and it's not like, you know, there's a million options out there that individuals trade that are delivered, you know, both in the security and futures sides. It's not like they can't, but it's just, I think, Nick, you just said it's one less thing when they're cash settled. So.
Yeah. Great. Yep. Next slide, please. Strategic use cases. All right, well, give it to me. What are you looking here? Now you get into like a macro view here?
Yeah, I mean, this weekend was a perfect example of use cases for oil. I mean, you were able to trade that on Sunday, you know, before the rest of the market is open, you know, throughout the week. So
Yep.
You know, that's one of the great things about futures is that, you know, you got that 24/5 access.
That's correct.
Yeah.
So what do you think about that? Are you guys working feverishly on the weekends too? Since you're open all the time?
As we're, you know,
is that all electronic, right?
Launching more and more markets that are 24/7, you know, some of the prediction markets and things like that. I think, you know, a lot of companies like ours are going to have to start staffing up a little bit more.
Yeah.
So you on high alert I mean, because you guys have been going 24 hours basically.
We've been 24/5, right?
Yes.
So we've always had the overnight.
5 days, 24 hours a week, 24 hours a day.
Yeah, so Sunday night through Friday afternoon is kind of traditionally what we've been. But now we're starting to see some of these markets that, you know, sports prediction markets and things like that, you know, that we're now offering the trade all weekend long. So it's interesting, right? Because we've always had, you know, we have desks in London, we have desks in Asia, so we've kind of got to follow the sun model already.
Sure.
But not really the weekend until, you know.
The weekend the sun wasn't rising and setting for you. It was just setting and then rising on Monday. Yeah, not anymore.
So I think it's, you know, and it's, you know, I don't think you guys are going to be immune to it either, right? Like it's going to be the exchanges, it's going to be the brokers, the trading groups, the market making groups, as these things do start to go more 24/7.
Yeah.
Very good. Next slide, please. Trading workflow. Go ahead. What do you got here? Oh, you're just looking at.
So a lot of this is just kind of going into just the mechanics of trading these. A lot of these products, there are, you know, like reports that come out on a weekly, monthly basis. You have geopolitical stuff, you know, OPEC meetings, stuff like this. These are like the earnings events of a
so we get earnings quarterly.
Yeah, we get earnings
4 times
quarterly.
a year.
Yeah.
You guys are getting them basically 4 times a week.
You get a bunch of them.
It's important that you know what can move the market, though, and we've talked about kind of the unknown, right? Which are things that you don't know when they're going to happen. These geopolitical type of things.
Right.
But there's like the known unknowns, right? Like the inventory reports that come out every week. And then the OPEC meetings that have, I don't know what the frequency is. They're not real regular.
We have a list on the next slide here. If we go to that of some of these, I don't know the frequency, but these are like kind of the main ones that you'll be accustomed to. You have the OPEC meetings. You have some of the production stuff that comes out either monthly or quarterly, something like that.
Yeah. And it's worth pointing out, too, a lot of people are familiar with the tool that we have called the FedWatch tool, which uses our Fed fund futures to sort of estimate what the probability of a Fed move at the next number of meetings is going to be. We actually have an OPEC watch tool. You're not going to find data on it right now because we're too far away from I think we had one recently. We had an OPEC meeting a week or two ago.
Okay.
But as we get closer to the next OPEC meeting, this tool will actually do the same kind of thing that the FedWatch tool does, which is it'll use
summertime is your next.
Is it not till summer?
Yeah, I believe so.
So, but as we get closer to that, it'll use the futures and options prices, and it'll do that same sort of probability calculation of what's OPEC going to do at its next meeting. Will it, maintain cuts? Will it increase cuts? Will it increase output?
Yeah.
And it'll have, similar looking graph for the OPEC that we do for the FedWatch, which is kind of cool. And that's certainly worth looking at if you're trading crude oil. Is what's the market saying?
The FedWatch tool is really cool. And that would be really cool as well. But just to go back into that, so really what you're doing with those tools is that you're projecting out the curve to kind of give you an idea of where the market is pricing in rates or oil prices or any of those sort of things.
That's exactly right. And you can find the methodology on the website, but the OPEC tool relies heavily on the options actually. So it'll look at the vols and the skews and things like that. And it'll say, this is how the options market is positioning itself. This is what
really basically just reading what the option market is telling you in numbers, right?
And then translating that into a probability.
What else are they going to go with? I mean, they don't know any better.
Right.
I mean, there's no magic.
Well, that's as good as you can get.
There's no crystal balls.
And I think that was your point. It's literally what the market is saying, not what.
And then you apply a strategy to take advantage of whatever way you think the market's going to go. So, you talked about the call skew in oil. So if you're a little bit bearish in oil, those out of the money calls are going to trade relatively fat when you compare them to the put. So that might be a strategy that you're looking to employ.
Right.
The credit spreads are going to trade a little bit cheaper. Because volatility is higher. You just know what you're getting into when you get into trade, just being educated.
Exactly.
Good one.
And then you've got the dollar strength in there. I thought that was a good point, too, is that oil's denominated in dollars, right? So that's another thing that can kind of move the price of oil. If the dollar weakens, costs more dollars to buy a barrel. So it's, all of these things can impact the price of oil.
Mm-hmm. Good job. Keep going. You're on a roll.
Couple of the risks. I mean, it is a relatively high volatility. I think with oil, you have these binary events can get big. Like even when we had the 12-day war, which was middle of last year. I was
going to say 12 days. No, I'm just kidding. Go ahead. Yes.
In the Middle East, a lot of these moves can be big, and that's opportunity too. So there's it's.
If you're right, it's opportunity.
Yes.
If you're wrong, it feels like it was not only self-inflicted, the whole world is out to get you.
Totally. And I think it's fair to say that crude's been a little bit range bound over the last year, and we've actually seen more retail trading in gold, the precious metals over the last year than in crude, and that's kind of an inverse of what it used to be, because gold, we all know what gold's been doing. It's moving, exactly. But I think it's, you have to know that when crude moves, it can really move, right? And I think that's your point, which also is, another reason to kind of look at options even in conjunction with futures if you're trading crude.
Yeah, and just to give everybody kind of some context here, so crude IV rank is around a 40 right now. Monthly implied volatility, when you go out and across the curve, is somewhere between 40 and 50% implied volatility. So we're kind of in the middle of the range in terms of implied volatility. So it puts you in a relatively high volatility product. SPY or E-minis are at 20%, 25%. So it's almost 2 times as volatile as the market as a whole.
And I think, it's a great point, and that's where we're at right now. But if you go back even 3 weeks ago, we were seeing crude trade at a much, because I think that's a more normal implied level for crude. Whereas we were seeing, a lower, in terms of historical context, a lower implied.
It certainly has a wider range of volatility than you do in the market as a whole. So, but that's opportunity too. That's like where when you're in where the vol futures are at 16 and a half ish. We'll we'll round it up here. Where volatility is relatively low, and then you get something like oil futures that have 50% implied volatility. It gives you some, if you've been waiting for something to do, here's a spot that has some juice to it.
Yeah.
Good call.
Very good.
Yeah, I think we've covered a lot of what was on.
We did.
Yeah.
You look at product structure here.
Just a quick cheat sheet. I think we've done these on each one of the segments to give you a little printout. You can put this on your desk, hang it on the wall, get a nice picture frame for it.
Totally, yeah, but I think we've sort of beaten some of these to death a little bit. Cool. So, it's been great. I think another good session.
Another good session. I've only gone to 2 sessions. That's all his mother would allow me to go to before she said
but
enough.
You made it out. Look at you now.
Enough sessions for you. You're on trainable.
Maybe they were.
But this has been a lot better than that. This has been a much better experience for me. So I appreciate it, Craig.
Good.
This was good stuff. Even the S&P's down 21, NASDAQ down 60, Russell down 8, and the Dow down 360. Even the S&Ps are under.
You bailed me out, Craig.
Good.
You did. Now if you can bail us out.
You got let out.
Yeah.
In gold up $15 and silver up $3.50. It's a 4% move.
Got up to 89.
What's silver at now then?
88 and change right now. It got up to 89.
89, almost 89 and 4, 89.20.
Knocking on the 90.
It's crazy. Well, Vecchio says if it gets to 100, his next child is getting named Silver. So that's what he says.
That's good. Good for him. I hope it happens. I'd like to see a little silver running around.
I know. That'd be a consolation prize for my short delta.
Let's take a quick 90-second break. Thank you so much for your time. We got more Tasty Live with a market measure next. Back in 90 seconds, Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, don't look now. Even the S&P is down 25, trading about $1 off of their lows. I know you just covered a couple of futures you've been selling around here, some lower, some higher.
Yeah.
NASDAQ down 80 and change. They're all down around a third of a percentage point. Maybe the Dow is the weakest, down 336, which is about 5/8 of a percentage point. Volatility up 2%. Decent sized move in volatility off of the lows, getting under 16, which I didn't think it was going to happen, but it did, down to 1580. When the E-mini S&Ps were about 40 handles higher than where they are right now. Bonds are completely unchanged. Bitcoin's hanging in there, up 800 and change. Oil, we just talked about a lot, about 20 cents off of its highs, up $1.60. That's almost a 2.75% move to the upside. Gold, almost, there it is, unchanged. Silver coming back down, 87.82, traded all the way up to another $1,500 higher than this, 89 and change.
I close out
right
of
where we
another.
want them.
What?
Got them right where we want them.
Oh, they're scared.
They're scared of us.
Scared of my little mini silver. I'm whacking them.
You're pressing. Now I will.
pressing them.
Now, you sold silver about $300, $400 higher than where it is right now, 30, 40 cents higher than it is. Now, I will, this is what happens.
No, I did it at 38.
88.39, I think you sold them.
Oh, yeah, 88.30. Oh, 50 cents. Yeah, you're right. Yeah.
It was $4,400. Now it's $500.
If you think I'm going to take it off, you are.
No. I'll tell you what happens. Crazy. This is classic with futures traded. I watched it my entire life. So you traded ES NASDAQ a lot better than you've traded silver this morning.
I got a bone to pick with silver.
Right. That's my point with futures trading. Here's what happens. You you're scalping E-mini S&Ps, NASDAQ, and Russell back and forth, buying, selling, because you're in a zone there. And you're taking your normal...
in the matrix.
You're in the matrix. You're taking your normal profits.
Yeah.
Silver has been wacky poo-pooing you.
Yeah.
So you take a lot more risk with your winning trade that you have on than you normally would take. It's just the psychology of futures trading. It's just how it works.
Yeah.
Now it'll be feast or famine with you. You'll be aggravated when it goes back over your price again. It's just the way.
I still have in my back pocket the ability to blame you because you.
Which a lot of people at home can blame us.
Yeah, because you did put me in the gold silver ratio at what? 57,
56 and 5/8.
Okay.
I won't forget. It's under
about
53.
4%. It's at 52 right now.
Yes, 52 and a half.
We're gonna hold it a little bit. We got, we'll flush with the capital. But I did take off half my NASDAQ and E-minis.
That's the point I'm trying to make.
I'm a little lighter. Yeah. I'm a little lighter.
Yep.
Feeling a little lighter.
You're going to trade that a lot more. You're going to trade that a lot more normal and strategic.
And it's a lot smaller.
And it's a lot smaller.
And less volatile.
And you're going to let the big product ride.
Yeah.
Let's go to our market measure, sponsored by our friends.
I also just did. So you mentioned Intel. It's up $3 and change. I did a 1/3 ratio. Long the 50, short 3 of the 55s in February. You have break even at like 55 and change.
Yes, you just did that trade, right?
270 or 2. What did I get?
260. I'm going to put it up there for you right now. Just taking advantage of call skew. That's what you're trying to do on an up move.
And I can actually show this on my platform.
Okay. Well,
just to give you an idea of the risk profile.
Sure.
Sure. It's a ratio, but you're selling an extra unit on the upside, so you're getting a little extra short delta here. That's why you get this $2 and change credit, because those calls, if we go to the table here, they're trading at about, we'll just round it to $2.
Yep.
So you're doing the standard ratio for 50, 60 cents. You're selling an extra call at $2. Obviously, you're going to be naked in extra units, so you have more risk on the upside. You could see typically if you're 1 by 2 and it's 5 points wide, your break even would be up at 60. Your break even here is like more towards 58 because you have that extra unit on the upside. So you have 2 units of risk above 55. And so, your break even point is going to be reduced by half.
Couldn't say it better myself if I even did say it.
If you get a downside move, you have the extra $2 and change in value that you can make because you're short an extra unit. And you can sell puts against it. E-mini's down 30.
Mini S&P's down 30. You are correct.
Ooh. Things are getting spicy today.
Volatility 1645, just 1650 right near its highs right now.
Wow.
Yes.
Should we do it?
Yes, we should do it. Let's do it.
All right.
Let's go.
All right, so poor man's covered call. What is
poor man's covered call?
Yes, PMCC, for those that like a little acronym. What's the best days till expiration for a poor man's call, covered call? What do you think?
What's the best?
The best.
With your long strike you're talking about probably?
Yeah, like or just your overall long and short. What do you like to do if you do these?
Delta,
don't do it.
Delta wise or days? I don't know what. So it's
let's
best
say days. No, duration.
Duration.
Like duration. Yeah.
I'm gonna say
we're gonna stick to
90-ish days.
We know
long.
Okay. We know 45 days is kind of our sweet spot for the short. So that's gonna line up.
90-ish days is where I'm gonna go.
Okay. Well, let's see.
Oh.
You're gonna be right in the realm. You've done this for quite some time. All right. So as markets push higher ahead of major earnings announcements and the start of the new year, we've had declining implied volatility is creating challenges for option traders seeking to deploy volatility selling strategies. It's not a surprise that with the VIX at 16-ish, not even 16, we're at 1581. It's hard to find opportunities. We've actually been doing a couple poor man's covered calls. We did one in Boeing. We did one in Apple. It's a way to kind of get some static delta, but also get a little bit of short volatility. But it's an adjustment to our normal core strategies here.
Most definitely is.
And so that's why we're kind of looking at it here. So the next slide here, since selling put spreads, Jade Lizards becomes less attractive, and an alternative strategy is to look at a poor man's covered call, which is a bullish diagonal spread. It is a diagonal spread. It's a little bit heavier on the delta side, which is why we call it a different thing. When we do diagonal spreads, a lot of times they're out of the money. They're more like akin to a calendar spread. Poor man's covered calls, you kind of shift that long option in the money. It becomes more of a synthetic stock position. It's a way to get kind of a leveraged stock exposure for a lot less capital. And so we're going to talk about like what duration of the long call in the poor man's covered call we should use. And we're going to look at a various data set here. So going to the next slide here. So purchasing long dated calls, 6 months and further, so 6 months and past that time frame, functions more as a replacement for stock. It's a stock rental. So when we talk about zebras or poor man's covered calls, the duration is subjective to your own opinion on the stock. Like if you told me I want to be long Tesla for the next year, I would tell you to buy the in the money call for a year. Like you shouldn't do it for 45 days and keep rolling it. You should just do it for a year. That's your duration. And the leverage you get from it is going to be a positive. If you buy an 80 delta long call or a 90 delta long call, it's going to function a lot like the stock, but going to use about half the or more. Or
now, a 50 delta option is not going to necessarily continually give you 50-ish deltas.
On the 50 delta one.
Yeah, 50.
But if you go 80, 90 delta.
Yeah, you're basically buying very little extrinsic value, and it's going to hold its extrinsic value.
You're in an IRA account or a cash account. Yeah. The stock is $500. You buy that in the money call. It might only cost you, $250.
Yep.
$300.
Yep.
In itself, it's a way to get leverage without actually using leverage.
Correct.
So on the other hand, buying calls with a shorter duration, 45 to 90 days, can reduce the buying power. That same option, that same delta option, 45 to 90 days out, that costs you $250 a year out, might only cost you 40 or 30 or 20 on a 45-day time frame. So this is, kind of the questions that you have. They are susceptible to bigger moves, though. Those options will move a lot like stock, but, are on a much shorter duration. So the study that we're going to look at here, we are using SPY, and we're looking at 2013 and on. And we're going to compare the results of a poor man's cover call using a varying difference of durations, right? So we're going to look at the long 70 delta call for various durations. We're looking 60, 90, 120 days out, all the way up to 300 days. And then we're going to be shorting the 45-day 30 delta calls against it. So you're netting out about 40 long deltas on this trade, net. The duration aspect is really what we're isolating here. And we're managing the trades upon expiration of the front month calls. So this doesn't incorporate rolling the call further out, as you go further out in time. Because if you're 300 days out, you have, 5, 6, 7 rolls baked into it that you can, collect more premium, roll up and out, roll up and or roll.
You're just doing 45
down.
divided by whatever days you're in. Yes, pretty close to it.
So looking at some of the data here, clearly the longer we hold a poor man's covered call, the more profit we can make, but this also means a higher buying power requirement. So current buying power in SPY with a 92-day long option is going to cost you $3,900. If you go to 127 days, it's going to cost you $5,200. So, you're, again, when you're talking about poor man's covered calls and you're looking on a 45-day time frame, it's just going to be more expensive to go 300 days out. If your time frame is 45 days, you should be, I don't want to spoil the next slide, but we'll go to the next slide here.
You just did.
You should be looking at the 60, 90, 120-day time frame. This also doesn't take into account the ability to roll, which gives you another, set of extrinsic value to capture along the way. But when you're looking on the 45, 40, 50, 60, 70-day time frame, you should be going to that duration. It doesn't do you any good to go 300 days out if your time frame is 60 or 90 days. And this basically shows you the longer duration option for the long option doesn't really give you any added bang for your buck here. You might as well just go to the shorter duration. So the next slide here, so when we talk about return on capital, of course, when you're paying less for the long option, it's going to give you a lot higher return on capital. And that return on capital spot is somewhere in that, 90 to 150 days. It gives you the best return on capital, around 5%. We're looking at SPY. If you're trading something more volatile, you're going to have a lot higher return on capital on these, especially if it's something that might have even call skew. If you're thinking of like a Tesla, NVIDIA, something like that, where your 30 delta call is going to be relatively further out of the money versus something like SPY, where it's going to be relatively close to at the money because you have that skew to the downside typically. And the cost is going to be a lot different too.
Yep.
Couple takeaways here. So poor man's covered call is a compelling and profitable alternative to trading covered calls, especially when IV is low. When IV is low, so like poor man's covered call is a directional bet. When IV is low, it's going to be cheaper to get that synthetic stock. When IV is high, it's going to be more expensive. There's no difference in the setup is just that. You're still directional.
Sure, if you get the directional, but volatility is high, let's make it the worst time that you can, allegedly not the optimal time to do it. Volatility is high, and you do a poor man's covered call. The market goes higher, the stock goes higher. You make money.
Yeah.
It's not a bad play. This is a directional play.
Yes.
Now you'll get in at a slightly better optimal price because volatility is going to be a little bit lower in the back month. What you really want is volatility to be low when you put it on, then go high and go in your direction immediately. That would be nirvana.
So choosing significantly longer options does not significantly increase your chance to profit or increase the profit on the trade. It's really kind of makes the most sense to go in that 60 to 90 days, sell in that 30 to 40 days, and that's kind of your setup if you are short term trying to get this covered call on. Overall, selecting the long call within the range of the duration of 90 to 150 days can optimize your return on capital. We're not including consecutive rolls, which you can have with longer durations. But if you're just looking at like a medium term, I'm long or I'm bullish Tesla for the first quarter, you should do it for the first quarter and not the year.
Good job out of you. Good job out of the team.
Yes.
Markets doing a good job. Even the S&P is down 22, about 10 handles off of the lows they just made a moment ago. NASDAQ down 119, only about $20 off its lows. The Russell, one of the strongest of the groups, basically unchanged, down $1.10. The Dow down 280 and change. Volatility hanging in there, up 27 cents, but it is about 20 cents off its highs of 16.55. Bonds 115.22. Bitcoin still up about $1,500, just trading just under its highs of 93.2 for the day, 93.1. Ethereum doing the same. Although it is off of its highs, I should do it from here, off its highs from about $10 or so, up around the same percentage point as Bitcoin. Oil trading up $1.60, about 25 cents off of its highs. Gold up $3.70, let's just call it mid-range for the day. Silver back over 88. We're going to take a quick 90-second break and come back. We got more Tasty Live. Who do we got coming up next, Dick?
We got Quentin.
Trade Desk, that's right. Yeah. Quentin and Glenn, G-Money. We'll be back in 90 seconds. That's Boys with a Z. Let's Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with this man. Obviously, my favorite with that shirt on, my man Q.
Fellas, how's it going?
I'm doing great, man.
Trying to be the new favorite child here.
You know, Blake Way brought.
How's it feel to always get beat out as
I've been
the favorite
fighting
child?
with Katie for 10 years as favorite child. I mean, now this one.
Losing that fight, by the way.
I lost that fight. That was your, it's okay. All right.
Yeah, no, Blake Way brought this in for me.
I love it. I love it.
Yeah,
Very
figured
cool.
I'd wear it
Very
tonight.
cool. That's an old.
Yeah, and then
old
10 years.
Yeah,
10 years. Wow.
Yeah. Very nice. Very nice.
Yeah, so this is an older shirt now.
Yeah.
Vintage, some might say.
I do have that shirt as well.
You wear it to sleep when you have company.
No, it's a little tight.
It's a little tight now? It's a little tight now?
Tight, so I can't wear it anymore.
You have to cut out the sleeves and make it so it's not
just a little tight. It's not flattering for the rest.
I'll get you a new one. I got a guy. I'll get you a new one.
Oh, there you go.
Yeah.
That's the easiest thing to do.
No.
Yeah, all right. Well, fellas, today, another Tuesday, another demo.
Would you be wearing the shirt for the demo?
I will not be wearing the shirt.
Okay, good. Because that would be a little embarrassing.
Yeah, but no, so we've got the mobile.
That is embarrassing, like when I go to a bar and I have it on. That's the worst. That's
pretty
probably,
embarrassing.
I mean,
yeah,
you're
that's pretty
asking for
embarrassing.
it,
That's worse than wearing the trading jacket back in the day at the bar. That's the worst.
Yeah, okay. So I will not be wearing this during the, the demo today.
So what kind of demo you got today? Sorry to interrupt you.
Yes, we've got managing positions on the go. So we've got the mobile app demo. We'll be going over like purchasing stock, options trades, of course. We'll be placing some live trades in a live account, things like that. You can sign up at tastytrade.com/webinar, tastytrade.com/demo, and for Nikki, tastytrade.com/demos.
I'm a special guy. Special guy.
You certainly are.
But yeah, so we've got that one coming up. We've also got a bunch of other webinars coming in the future. And then every single Tuesday at 1 p.m. Central. And also, if you sign up for it, we'll send you the recording as well.
Very nice.
So even if you can't make it, sign up for it and we'll send that out to you. We just sent out the IRA demo that we did the other day. That's now available on our YouTube channel as well. And so, yeah, you could watch the recording there. But today, we've got the mobile app demo. And then also, I've got the mobile app pulled up here if you guys just want to see some trades really quick.
I would love to. Nothing would make me happier at this present moment.
Okay, so right here,
I did.
I've got the.
Speaking of trades, I
sold
sold a call against Roblox. Because we had the in the money put and then we added the strangle last week from What's Your Assumption. So I have an extra call to sell. I sold the call. Stock's up $6 and change.
Yeah,
so I'm right at the money. I'm wrapped around.
But you got a nice move to sell that call.
I needed that move.
You needed it. It was a 7.5% move. You played for it. You needed it. But yes, you got it.
Some would call me gifted.
Yes.
How does Daddy do it?
How does Daddy do it? That's right. I see you got a mobile app up here right now.
Yeah, we've got it pulled up on the screen. So typically when I'm on the mobile app, I'm usually like staying on the watch list most of the time, seeing where everything is. I've got the Tasty Trade demo account here. Of course, any trades that we place here are not recommendations or anything like that, just for example purposes. And so I've got the Quentin's demo watch list. You can obviously make your own watch list, or you can filter like through some of the Tasty watch lists and things like that. So if I just like click here, you can go to Tasty. So if you want to see like the top 20 that are going through the system, you can pull it up here. Or like, for example, I could pull up Bat's watch list and things like that. You could trade all the different symbols. And then so if we're looking at trade, I'll click on trade down here below. I had NVIDIA pulled up earlier. And then so this is what we can look at here. If you don't have this pulled up, you would just search the symbol NVIDIA or any symbol you would like to trade. And then it's just as simple as on the like downloadable desktop version as well. You just click on the bid to sell something, and then you just click on the ask to buy something. If you want to do an iron condor, for example, you just scroll on the option chain and then click the bid and then click the ask again, just like you would populate any other order on the web software. And then from here, you can obviously adjust the price. You can also click on this like little price bar that we have as well. And so I'll put it closer to the bid just so we get filled here. Review and send. Of course, always review the commissions and fees. We're super transparent about stuff like that. And then just hit submit. And then there you go. We've got the position on just like that.
Very nice. Good job.
And then you can always view this
mobile app
on the positions tab. Click on NVIDIA and there we go. we've got our iron condor pulled up.
Sweet.
Yeah, and so we'll be going through more things like this. We'll also be going through some new funding methods as well.
Sure.
On the mobile apps, obviously bank transfer we have, but we now have ACAT transfer as well. So if you want to transfer from one brokerage to another, you can connect that through the mobile app now, which is a functionality we've been wanting for a long time. So that's all good to go.
And if you are on that demo, you can ask questions, right?
Yeah, can ask live questions to people like myself. We've also got Big Luke and Big Carl on the demo as well.
Everybody big here?
Well, because they're physically big people.
Yeah.
So.
And equally as important, if there's features that you want to see or ideas that you have for the mobile app, you can ask them, and you would have the eyes and ears that are instrumental in getting that done, which would be you and those other big guys.
Yeah.
Right?
Yeah, for sure. You can always reach out to us, and also feedback@tastytrade.com. We've got the product managers who monitor that email, and so you can always reach out to them for any features you'd like to see or adjustments to features we already have and things like that.
Very nice. Good job out of you, man.
All right. Thank you very much.
Yes,
And
yes.
so let's get to the top 20 symbols
do it.
going through the system. And their IVR at number 1, SLV 100, AMD 34, Tesla 8, Google L 35, Meta 36, JP Morgan 12, Intel 56, GLD 59, NVIDIA 5, Google without the L 35, iBit 29, Amazon 34, Apple 19, MSTR 26, Micron 44, Oracle 46, Delta 8, BE 52, Microsoft 39, and SMCI 21.
Uh-oh.
Good job. What's that?
I said uh-oh.
What's uh-oh?
Because I'm going to get trapped in BE again. Trading at 140.
Yes, you are.
100% implied volatility, up $2 and change.
Yes, you are. All because of Quentin. He showed it to you.
I swore this one off for quite some time.
A long time ago you did.
Now-
That's Bloom Energy we're talking about.
Yes. And now,
Oh, yes. Okay. Gotcha.
now we are back. I'm going to try and figure out how I'm going to do this.
I mean, this has been on a 2-week tear from around 88 to 138, 139 right now, up another $2 today. Take a look at the markets here in February. It does have earnings after February, so I would probably stay in the February options. Markets are still relatively wide here, $1 or more. So watch your pricing. Good job out of you, Q. Love the shirt. But I got to let you go at this moment because I know this next person is going to have my shirt on too because he is a fan also of mine. Who is our next guest?
Quick.
You are such a disappointment.
I know. God, I didn't know it was Tony Shirt Day.
It was Tony Shirt Day.
Tony Tuesday.
I noticed
Tony
you're not on
Tuesday.
Red Shirt Thursday anymore because you screwed that up with the girls.
I
Now
did
you're
screw
on
that
like
one up.
Mondays or something like that.
I know.
And now you don't have my shirt on.
Yeah, no, I'm spiraling. Hopefully I find the bottom soon and can spring right back up.
All right, my man. What do you got for us today? What are you talking about?
No demos. Sorry.
It's okay.
I started doing some
It's
demos.
okay. It's okay.
Maybe people would come.
You're still number one-ish in my
But they're working on that description column, right?
Taste Trade mobile app coming out before
Oh,
your
nice.
description column, hopefully in the next week or two. Very excited to be able to monitor your FX positions on Taste Trade on the go. 24-hour markets. It's essential you have them in your pocket.
Yes. Just to show them, it's on this left side menu. Tasty FX, you got them all here. You can trade it as funky a pair as you can even think of. I've got.
Be as creative as you want.
I've got some peso. I have some Swiss franc.
Whoa.
I have some euro, some pound, some Aussie, some Japanese
What can't you do?
yen.
Well, you know what's unfortunately not working for you right now, Nick, is that long Japanese yen against a basket of currencies. Anything
Long it
that's
against
the,
anything.
Yeah, that's the storyline I'm keeping top of mind this week as we have the U.S. dollar Japanese yen exchange rate just now breaching 159 for the first time since July of 2024, trading through those 2025 highs of a year ago, right around 158.80. and now we're approaching 160. If you were to ask me last week, it looked like over recent weeks that 158 was the real resistance. Nothing there right now as we continue to slide higher.
You want to blame that one on me too?
No.
Say that's my fault too?
No, not your fault,
Yeah?
sir.
Yeah.
It's not your fault.
I'm
It's
glad.
not your
Throwing
fault.
jabs over
Not
here?
you, Sean. One of my favorite movies. But what is interesting is now if you look back to the last time we were at these levels in July of 2024, a reversion of great magnitude did come to this pair, and the yen did see some strength falling all the way back down to the mid 150s. But did it happen right away? No, it did not. We spent almost 2 weeks above or around 160 before that intervention came in. So a pretty tough one to time per se, but it looks like they're still at 159. Risks to both sides, both long and short, but I would be wary of leveraged longs into this because it can reverse.
Are you trying to get me short?
Very quickly? No. Just it's.
I can
it's
do a
interesting.
little nibble.
It's interesting to call out, but we do have the finance minister from Japan speaking to Secretary Bessent, saying the U.S. would cooperate with whatever they want to do, which is interesting. So a bit of a political component removed from their calculus, but the back of this is political as well. We've got a snap election in Japan coming up. That could be decided, I think, towards the end of this month, the 23rd, and the thesis behind if the ruling government gets their way would be more stimulus and more yen weakness.
Ooh, I don't like that.
Exactly. But the main thing to call out as I wrap up talking about the yen here is what they watch, the Bank of Japan, when they consider intervening directly and trying to regulate this yen exchange rate is not necessarily the price level as a lone factor, but the velocity at which the yen's strength is weakening. And so today we've got, a 30 pip move today by my daily candle. So nothing ridiculous, but if you were to see a move in rapid succession up to 160, another 100 pips in a day's time frame, that's where it starts to get a lot more concerning, regardless of if that happens all the way to 160 or 161. Much higher than that, we haven't really seen. But other than that, we're seeing a little bit of confidence back in the U.S. dollar, which after yesterday, with all those headlines around Fed independence, was looking a little shaky. But after today's CPI inflation reading coming pretty much in line, slightly softer, no rate cuts expected for January, and now even March, the odds rising for a hold in March for the next few meetings here.
When I lose money on this
Okay.
Japanese yen,
Yep.
because I did do that, I got
What?
short the dollar against the yen.
Okay. Then what?
That one's on you. I did a call diagonal spread in Visa. I sold the puts originally, but I was like, you know what?
You sold the February puts, the 300 puts, but you didn't.
I closed them. I was like, you know what? I want the delta. I want that dynamic.
Visa down $18.
$18. You're finally getting the move, the whole,
10% credit cards. Visa's gone from $350 to $325 in 48 hours. So.
Yes. So I'm long the March 330, and I'm short the 345 against it in February.
Timely. I think it's timely because you have a 2-month move on implied volatility the last 2 days, meaning that over the next 60 days, 60 plus days, Visa's supposed to move, $25. It's done that in the last 48 hours.
And if this does materialize and it has further downside, you got the a couple $100 in risk.
You got a defined risk trade. You can only lose what you paid for at $8.35. I like it a lot better than the naked put. Although the naked put wasn't bad either.
Yep. I'm up $2 on that Japanese yen. Oh no.
You got filled in PE. Here's where things go wrong. And he has.
I forgot that I had that working.
Oh, you forgot. You just put it in a second ago. Yeah, you're right.
I did a little ratio spread. I'm long the 150 and then short 2 of the 175s in February.
in B.
How could it possibly?
What could possibly go wrong?
Possibly go wrong.
And you got silver over 88 again, 88 and a half.
Oh,
what could possibly
boy.
go wrong?
Oy.
What a market.
What a market is right. You know, for even the S&P is basically unchanged, and everybody in a holding pattern. There's certainly a lot of things to do everywhere in the market.
Just got to look for it.
Just got to look for it. My man, good job out of you. Hopefully next time you come on, you'll be wearing the appropriate clothing.
I only have a size small of that shirt, so I don't know if anyone wants to see that either.
Oh, we want to see it. We're going to take a quick 90-second break.
Make a crop top out of it.
All right.
Omaha.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. It's always electric.
It's always electric when the ladies are live.
We'll be back in 90 seconds. This is Tasty Live.
Electric.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
everybody, and welcome to the Liz and Jenny Show. I'm Jenny Andrews. This beautiful blonde is Liz Deerking. It is kind of a crazy Tuesday here in the SPX pit.
You know what? It's always a crazy day because we are on the floor with crazy people. But we just had a breaking news from one of our favorite traders. Doug came by and told us that everybody's kind of calm and waiting for the possible Supreme Court announcement tomorrow.
Oh, maybe tomorrow.
Yep.
Maybe tomorrow. Maybe not. We'll see. But he said everyone's waiting for that, although we have seen some action. It has gotten busy. And it was crazy because we had spoos up and then quickly turn around right around 9 o'clock. What came out at 9 o'clock today?
I don't know what came out at 9, but 7:30 CPI came out.
CPI came out earlier, but there was something at 9, and then we saw the market kind of take a turn. But we're bouncing back.
Do you know what I'm going to do for you?
SPO's only down 16 right now, Liz.
Do you know what I'm going to do for you? Let's see what came out at. Let's see what came. Let's take it to the tape. We're going to take it to the tape. Frank the Great, we love you. Thank you for posting this. This is what comes out. CPI was 7:30 this morning.
The new home sales.
New home sales.
New home sales. Turn that market around. I don't know, but we did see the market go from up green to red pretty quickly this morning as we were walking in to the SIBO, getting onto the floor and into this SPX.
Yes, it was pretty different. Now that being said, and once again, please keep in mind that this is for entertainment purposes only.
We are for entertainment purposes only.
We are for entertainment purposes only. But I will tell you, that's what. So Trump is trying to say that no companies can own homes. It's got to be individuals going forward.
Oh.
So I was like, maybe, I don't know. I don't know
you better start selling your properties.
With new home sales.
Liz LLC.
It's true, all of it.
Oh, all right.
So yes, I just wanted to take it to the tape. We will be taking live tweets later. Put the hashtag LIZJNY. Ash Finn, we saw you watching us. You couldn't figure out how to watch us, so we saw you watching us, watching you, watching us.
Loved it.
Awesome.
Loved it, Ash Finn. Loved it. Okay, so what do you think? We have a busy show.
Jam-packed.
We have a lot to do today, but we are taking live tweets, like Liz mentioned. Just put on that hashtag LIZJNY. My son asked me, why are we still calling them tweets when it's X? I don't know what we call
X us. What are you supposed to say?
I don't know.
We'll be taking these later. What are you supposed to say?
I will let you know, yesterday I got a phone call from someone, and someone who's never made a trade before, never put in any money into the market other than her, she's a teacher, other than her teacher's pension.
Okay. This is us playing a small game of charades. I know who it is.
Okay. Never made any choice on her own other than having her money in her teacher's pension.
Got it. Check. Okay.
And she called me yesterday and she said, I want to take X amount of dollars and put it all into shorting Bitcoin.
Wow. Okay. I was just going to say I wanted her on my team in Mexico, but now I'm going to put her on your team.
I said, you better not say that to Liz. She's not going to like that.
That's what I said. She's off my team. You got kicked off my team. I'm sorry.
So I found that interesting that she's never made a trade in her life, and that's what she calls me and says she wants to do.
I mean, you hear it all over, though. Like, if you listen to other news stations, you hear a lot of people say that.
That's why let's talk.
I mean, you don't hear them say, I want to short Bitcoin, but they say that the Bitcoin is.
You know what? Maybe we just because that is topical, she called me yesterday.
Well, we have an IBIT position.
Let's cut into the platform here. We have an IBIT position. We've been doing weekly.
So we put it on yesterday, and we're up 21%. $23.21%.
All I would do is put in the GTC for 50%. This is the 10-day because it's next week, but this is just a weekly premium selling. But I did, and we were talking about this on the train today, I did close all of my actual Bitcoin and Ethereum and put it into just IBIT Zebras, which are very defined risks. So if something ever happens in crypto, it's a very defined risk.
Let's just go through some exercise real quick. I just went to Bitcoin futures just because I don't know how to buy. I don't think we can buy Bitcoin US dollars right here, but I'm just going to go. So Bitcoin US dollars, I just used our handy dandy side platform there.
Click
it's 94. You can't. I don't think we can buy it here. It'll take you to this.
Yeah, and then you could buy.
We can't.
Well, everyone can. With Tasty, you can. I can. You can. But in our show account, there's reasons that you can only have so many accounts in one bucket.
Yeah, but my point of going through that process was it's $93,609, and that's one for one. There's no margin relief with Bitcoin. You put $1 in, it holds $1. Okay, fair enough. You put $5 in, it holds $5. You put $10 in, it holds $10, and so on and so forth.
And so on and so forth. So I found a way to control a half a Bitcoin for $5,000. So I'm controlling half a Bitcoin for $5,000, and if wheels fall off, all I have at risk is $5,000.
Correct. So by that, I loved it. I love live shows when they go off the rails of the crazy train.
I forgot to tell you about the phone call.
So let's talk about this. So IBIT is $53. It tracks Bitcoin. I mean, it's pretty. It's an ETF. It's probably, I think, the most liquid ETF out there that tracks Bitcoin. I could be mistaken. It could be one of the other ones. But right now, you've got 21 million shares have traded. Okay. So notional value to notional value. If you wanted to get to 40,000, it's 90,000. Let's just use 90. Let's use round numbers.
Let's say it's 90,000. So you
90,000 for Bitcoin.
4,500 shares. 4,500 shares. Do 4,500 shares of IBIT, right? Not 45.
Watch, I can do this.
I mean 4,500.
There you go.
Yeah, not 4,500. 800 shares. Like
1,500 shares of IBIT.
Equals a Bitcoin.
No. Hold on. I'm sorry. I'm going max loss. It does give you some buying power effect here. So if we want a half a Bitcoin, I want to get to max loss of $40,000. 800
shares. That's what I did. I replicated.
There you go.
800 shares of Bitcoin. I don't know why I was saying 4,500. 45,000 in notional.
Yes.
So if you see max loss 42,000 notional.
So you can
is
see
about
this.
half.
I'm going to circle this. I want to make sure. Can the
Bitcoin.
world see this, or can they see me circling max loss?
I can see you circling it.
Okay. Well, max loss is $42,000. So that right there is half a Bitcoin. If you wanted to, you can go out. And to be honest with you, this gives you a little bit of margin relief because it's only $21,000 to do it.
It's like regular margin, 50% of the value.
Correct. No, Bitcoin is not. Bitcoin is one for one.
One for one.
One for one.
So, with if people feel like, they're a little nervous of their crypto position, I took off my crypto position, put it all in IBIT, and have only 5,000. So I'm controlling like 800 shares of IBIT, which would be equivalent to notionally half a Bitcoin. And I did it with just doing 8 zebras.
So our viewers are smart. A zebra is selling one, buying two, where you're washing extrinsic value.
So we sell at 50 delta, buy 270 deltas, and
I just want to make sure I was right, okay?
Yeah, and I did 16 by 8, which would give me synthetically 800 shares. So this synthetically gives me 800 shares at a fraction of the cost.
A fraction? It's way less. It's a tenth of almost what you would be putting up if you were buying real Bitcoin.
So here, buying power effect, $5,700. Max loss, $5,700. So here I'm controlling half of a Bitcoin, $45,000 in notional value, or $42,000 in notional value for $5,700. The caveat is it's only for 38 days.
So this will make money one for one. I actually think this is good because it's for experienced traders. If you understand this, you are a curve analysis.
And the reason,
there we go.
The only reason I brought this up today is because I got the phone call yesterday. So I thought, you know what? If something terrible happens in Bitcoin or crypto, I only have, not that it is, it's just it was a weird phone call to get yesterday.
Well, I think she should flip the cards over and do a put zebra.
She could do a put zebra, sure. I only have, $5,700.
Because I'm going to guess she wasn't going to put $42,000 into shorting Bitcoin.
I only have $5,700 in risk, and it was a topic for me because I had this in January, and with this being January expiration week, I had to do something. My Jan was about to expire, so my January is expiring this week. Moved it out to Feb, and I thought, how much is it going to cost this month? It cost me about $5,000 last month. It's about $5,700 this month to control half a Bitcoin.
I'm going to put
you've got to take off our...
No, I'm going to put the quantity back up, but I'm going to take it off. I was just going to say she should use $800 and do the put side. But hold on. Analysis.
So yeah, if she wants to be bearish, instead of having a call zebra, she could put on a put zebra.
That really didn't change it much. It was like one lot of an IBIT 0 DTE, but there we go.
So, but then you've got your profit potential is every point up in IBIT is $800.
With an 8x16. Now, people who have been with us for a long time understand what a zebra is. Zero extrinsic back ratio. It does replicate stock. I'm actually going to do something real quick because I think it's pretty important. So watch, this is the internet, and I'm going to go to Tasty.
Hey, folks, here's the internet, invented in the 90s by Al Gore.
That's right. You go to tastylive.com. I just opened up another browser. Go to shows.
Why did they say that? Why did they always say Al Gore invented the
I don't
internet?
know, but I love that you bring it up all the time because it's so funny. Okay, but so you go tastylive.com, go to shows, then go all the way over here, Liz and Jenny's strategy series. If you want to know more about what a zebra is, a zero extrinsic back ratio, then just shift down, and it is going to
It's
be
the bottom
here.
left, bottom left. There it is. Zero extrinsic back ratio. It allows you to replicate stock at a fraction of the cost.
Yes.
So instead of having, and if it were in Bitcoin, like you said, every dollar, it's dollar for dollar. Instead of having $42,000 in Bitcoin, I have $5,700 in zebras holding, replicating the same trade.
Hold on. I just want to be crystal clear because it is, I think it's, I'm sure I'm going to be like beeped on this one, but you get you almost feel like a snake oil salesman when you say it because you've got defined risk where you can only lose $5,000, but to the upside, it's 1 for 1.
1 for 1 to the upside. But again, it's only from now till Feb expiration. But my plan is I'm going to keep having this and keep replicating half of Bitcoin and keep moving it out in time, and it will become more expensive if Bitcoin becomes more expensive.
But it is for the time frame that she has it on. For the time frame that it is on, it is defined risk and unlimited profit potential. Because remember, we got canceled because we said
I'm gonna hire you for my cheer. You're gonna be on my cheer team in Mexico. We keep referencing Mexico. We're like T-minus 2 weeks away from leaving for our 50th birthday extravaganza in Mexico.
All 14 of our friends are turning 15 within the same year, although one's already 50. Trunk's already 50, but she's the only one. She's the only one that's 50.
Julie's 50.
But she just turned it. But the rest of us turn it this year. Trunk turned it 2 years ago.
Yeah, Julie's birthday is January 1st.
But all of us turned 50 this year. I would like to say I am the caboose, ladies and gentlemen. I wrap the year up with the 50-year-olds, but we're all going on a trip.
Yes, we all leave in 2 weeks. I don't know what to think. I have a feeling we've got 14 friends, all friends from high school, college, and I'm afraid we're going to get kicked out of our resort. I saw videos of our resort. It's a little bit too nice for our crew.
Oh, good God.
We're going to be kicked out. 100%. How much do you want?
Unfortunately, you weren't on the last trip where only 9 of us went. It was touch and go then.
If we all come back alive, it'll be a miracle.
Yes, for sure.
All right. So anyway, I could go to Mexico and lay on the beach and drink a margarita and not have a care in the world if the crypto market starts crashing because I only have $5,700 at risk.
Okay, right, correct. Now, hold on. I just want to do something for our friend.
All right, here we go.
I do know who they are. So I'm going to go to positions. Now, if somebody did want to, say, take some money, let me go back to table, and say, I think it's going down, you could do the exact same process in reverse. We don't know which direction
Let's see how
going.
expensive that put zebra is.
Okay.
So you sell a 50 delta. So you sell, and again, we're trying to wash extrinsic value. So that one has like 250.
Yeah, it doesn't have 250.
Either way, 250 in extrinsic value. So we're going to buy an in the money put.
Usually like
Wait a second.
Yeah,
$1.20. Yeah, there you go. Buy 270 deltas, sell 150 delta, about the same price. $700.
Yeah, and so watch this. I'm going to go back to analysis, curve, analysis. I'm going to make sure these are off still. Yes, and it's you notice we can flip the cards over. So by the same amount. Now this is a one lot because I'm going to assume our teacher friend doesn't want to go out and short $42,000 worth of Bitcoin.
Well, and this is only a 2x1. So this.
Well, that's what I'm saying. This is a one
lot.
lot.
The notional here is being short 100 shares of IBIT. IBIT's $53. So $5,300 is like the notional value of it.
So that's what I'm saying. You can take this and make it a bite-sized amount. We were just showing how Jenny replicated a half of a Bitcoin.
And I like doing the zebra to the short side because if you short something, you don't know how high it could go. If you're long something, it can only go to 0. If you short something, you don't know how high it could go. So let's say Bitcoin rallies back up to 120, 130, and she's just naked short, there's a lot more risk, where this is very defined risk. She can play it to the short side, but have defined risk of only $700 here.
I do like the zebra. I mean, I have been quoted as saying it's my favorite trading strategy.
Why does it say buying power effect 398?
Because for some odd reason, you get it at a discount. So we know the max loss. Keep an eye on your max loss.
Look at this rally. We're going to turn green today. Maybe we'll turn green on our show. Spoon's only down 14.
It's a real possibility.
Okay, so
there's a couple things we want to close. Okay, so
we have one more question. So she said, I don't want this position to end in February. I want it to go till the fall.
Sure.
So if she wants it to go to the fall, it will be more expensive.
Well, so an experienced trader, I would not call her this, an experienced trader what Jenny can do is each month put it on, take it off, adjust it.
Yeah.
Put it on, take it off, adjust it. If it goes up, you ratchet it. If you want to continue it, you push it out in time. An experienced trader can do that. But if somebody wanted to go to the fall, they can. Here, watch this. So I'm going to go to trade.
And I'm curious, instead of $700, how much is it going to be in September? Yeah.
So you go through the exact same process. 50 delta, 70 delta.
Yeah, buy 270 delta, sell 150. It's 2100. Just look at the debit. Look at your max loss.
Yeah.
2100 instead of 700. It's a lot more. I would just do the short term.
Yes, but I would do this, well, because you're an experienced trader. What we know and what we can do is say, I've got the zebra. Just like Bitcoin goes up with yours, you're going to ratchet it up.
Right.
Yeah, which is also in the strategy series if somebody wants to go look at that.
So anyway, I thought I would bring this up, but I'll send her a link to this show. She could watch this and put Zebra in IBIT.
Just give me her account. I'll do it for her.
Hey, you know what? She can open a new account because I got to tell you this, and I don't know if our crew back at home can pull up something or flash it across the bottom, but if she opens a new account right now, it's the best I've seen in a long time. Best I've ever seen. The 4% match for new accounts.
For new accounts means if you put in $1,000, you're going to get $400.
No, $40.
Sorry.
I mean 4%, but if you put in $100,000, you're going to get $4,000. This 4% match, mind blowing. My in-laws just put in money end of last year, and they only got a 1% match. I hope they're not watching because now you get 4%.
I was not going to bring it up because my brother put his in, and that's what he got.
So
he was beyond excited.
Yeah, this is great. 4% match. I mean, you think of interest rates. So for my in-laws, I'm helping
and it's up to $10,000. So don't think you're going to transfer in like $3 million.
But still, I'm helping them just earn a small amount at the interest rate, putting on the box. That's all you're getting in interest if you're putting on the box. So it's for Tasty to say, oh, you open a new account and you fund it, you're going to get 4%. Do that, throw in the box, you're getting 8% for the year. No risk. That's going to get beeped out too.
This whole show is going to get beeped out.
I don't think we're allowed to say no risk.
Well, and that's right. That TP and I went down a rabbit hole. I was like, oh, this show's not going to make it to air.
Anyway, 15 yeyears and we're still on air.
Yeah, haven't got the hook yet.
Okay.
Well, we started the show entertainment purposes only.
That's the only. Hey, we were told when they hired us, they said we're going to put you girls at lunchtime, so you're like the lunchtime fluff. Right?
Please don't say that. Please.
Lunchtime.
Stop it.
Great.
There you go. Okay, moving on, ladies and gentlemen.
That's what we're on for. Just to keep you company while you're sitting there trading.
Moving on, ladies and gentlemen. Okay, let's pop into the platform. There's a couple things we want to close before we get into not one but two things that we've got from our research team.
Yeah, a lot. They're
so
working hard. The research team is working hard.
Okay, so AMD, Boeing, and there was a third. What was the third?
Let's just start with AMD and then we'll work our way down.
Okay. AMD, we put this on a couple days ago because do you remember Logan wanted to take all of his money from Intel?
Yes, and
Did
put
you
it
do
into
this?
AMD. No.
Oh, well, sorry, Logan.
I told him, you got to trade yourself, kid.
I'm proud of you.
He's going to be 22 years old.
Yeah.
And, this is something I need. Tell me, help me. Our viewers always help me. I don't know how to get this. He wants a Guitar Hero for the Wii, like the guitar, the whole. That's what he wants for his birthday. But they don't sell it anymore.
You got to get it by vintage. I think I have one if you want it.
You do?
I think so. Yeah. I'm being dead serious. I think I have it.
Yeah, because
my kids used to play it like 15 years ago. 10
I was
years
looking
ago.
on Facebook Marketplace or eBay or whatever, and everywhere I had to drive pretty far to go get it.
I think I've got one.
All I have to do is drive to your house?
All you have to do is I'm not delivering it.
I'll pay you.
I refuse to deliver. I'm just kidding. I think I have it. But if anybody else has it, please put the hashtag
I need to drive somewhere to pick up a Guitar Hero, and I will pay for it.
Yeah, I bought it years ago when we actually had a party at our house. And I made all the couples challenge each other in Guitar Hero.
Really?
Yes.
Yeah, so that's what
And then my kids used it from there.
And I was like, fine, sure, Guitar Hero. I went on Amazon last night. I'm like, it's not here.
Okay.
It's not. So you have to get it used.
We shall see. But if he did, he could probably use his $86 to buy Guitar Hero. So look at this.
It's a lot more because you can't get him anymore.
How much can I charge you? I'm just kidding.
$300?
I'm kidding. I'm going to give it to her, ladies and gentlemen.
Oh, my gosh. All right. AMD, we're closing this, put spread 89% of our... We only
It's
took
10%.
96. No. I'm saying.
No, I mean, it's 10 cents. If we wanted to, like, would we ever just close the short and hold on to that long?
Maybe. Oh, no, it's only 3 days. Hey,
That's
if the wheels fall off when the tariff news comes off, save that long.
I'm closing this. So AMD is closed. Thank you very much. We got back almost $500 for that.
Excellent. And then Boeing.
This was something I did with TP. So let me show you this, too. I'm going to see if it's in there.
It's just a $5 wide call spread.
Yeah, so look at this. TP pulled this up where he wanted to put all the defense stocks into a watch list. So we did.
Okay.
And that was one of those things where he wanted to get long the defense stocks after all the news that was coming out. So this is what we did. So it's a $5 wide call spread.
We actually talking yesterday, and I don't know if you noticed this, there was we were talking about different stocks and what performed well with certain strategies, and Raytheon was in the list.
I saw that.
RTX. Now, their options aren't super liquid.
I saw it briefly flash across my screen. They aren't super liquid.
All right, so you're closing Boeing.
So Boeing is closed.
And then Google. Well, I push these trades out to the follow page. You can talk about.
So Google was something we put on yesterday. Now, I know this was a tweet that we got where they wanted to do a longer term calendar, and they did. And I believe theirs would be working as well. We did ours as a more earnings setup calendar. So we actually paid a little bit more than they did. We paid $4. I think theirs was about $3.50. But we're going to take it off. 15% overnight in a calendar is pretty good. So I'm just going to close this.
Got it.
And run like a thief in the night.
And ship it.
So that's all. So Google. So we closed 3 trades. Let me just pop out the side.
You can actually go to the follow page.
All symbols today.
And you can,
I'm going to check your work.
You can check my work at the follow page because I'm on top of things. And
so AMD, Boeing, and Google. Now, what we do on this show is we try to trade only during this hour because I feel like that's pretty realistic for a lot of people. Some people are in their accounts.
People only have their lunch break.
We do like to have GTCs in for them. If we would have had a GTC in for that Boeing, we wouldn't have taken as much out.
No.
No, I'm sorry, AMD. Boeing was fine.
Okay, so, and when you look at our positions, you'll see more losers than winners because when we have winners, we close them, right?
Yes, for sure. And that's why a lot of times when we open this up, you'll see a sea of red. Our train conductor likes to bring that to our attention every day.
He's like, not too good.
Not too good
today, girls. Not too good today. But if we're taking off winners, we're left with our losers.
Yeah. So I think that's it for the management right now. We kind of went through and looked at everything.
I do want to bring this up because Circle's one of those where it moves. It moves. Yesterday during our like a couple days ago, if you remember yesterday during our show, our Circle P&L open was up 100 and P&L day was down 100. So I said, the day before we were up 200 and we talked about closing it. Today, I know we're down 55 today. We're up 140. I don't know if we need to put in a GTC for Circle or just take the $140 on that trade we had on.
Here's what I was going to show you though, Jenny. I opened up, if you can look at the platform right here, 1855 at 2165. Sometimes they're wide markets because it's in the money.
Well, we know we put this on. If we have this... Yeah, so I wonder how we set this up. So
that's just it. This is a...
Put in an order and just put in a GTC. So if it's in and it hits one day.
So this is almost... It's a diagonal, right? But it's in the money. So it's almost a poor man's covered call. We set it up as a poor man's covered call. So we've got an in-the-money call, and we're selling things against it, which is fine.
But I would just put in the GTC, and then if it hits, it hits.
But I just wanted our viewers to see, too, that sometimes those markets can be a little bit on the wide side. So
Circle markets are wide.
And I think that's why it marks kind of funny.
And honestly, in Circle...
Because you're looking at 50. If you look at the bottom, it's 1561 at 1893. That's a wide market.
I'm gonna bring this up for confirmation, but you could put in a GTC for that, and I want to double check. I don't want to misspeak, but all I did last year in Circle was sell puts. If my memory serves, all I did last year in Circle was sell puts.
And I think it's got a good margin.
And if I look at 2025 best, Circle is on the list.
Like number 7.
One of my best performers of 2025 were just selling puts in Circle.
So I just want to see, because I know CoreWeave had the good margin. I think Circle has the bad margin.
You know what?
It's not bad.
It's not terrible.
It's not bad now. But I am going to put an order in. If I close this...
Why don't you try to take $140 out of that and let's just sell some puts in Circle?
So I'm going to see if we can get filled. That's what I was going to say. I'll put it in for a GTC. Replace order. I'm just going to put it as a GTC to where it was to take $120 out of it.
Yeah, right, 1727. That's fine, and we leave that. And if it gets filled, we'll start selling puts in Circle because Circle, CoreWeave, a handful of those.
We don't have CoreWeave in.
I think we
took it
did.
off.
We just took it off. If it's down today.
So CoreWeave is down. It's down 1.57%. So let's take a look at CoreWeave. I want to sell. Ooh, wow. This has got you. This is before earnings. Look at this.
I know, but didn't we tried yesterday to get a downside ratio spread. We put in an order for a downside ratio spread and it didn't get filled.
Let's try it again.
So we could try again. Downside ratio spread. But I want to take in at least $1.
226?
Yeah, sure.
212. How about that?
76, 73, sure.
I
know we tried to work
Here's
this.
173.
We tried to work
so
something.
this is another thing. Take a look at this. 53 cents at $3. I'm going to put this in. Let's see if we
How
can
about
get
activity in CoreWeave and look at the canceled orders from yesterday? We'll see what we were trying to do. Not that we have to do the same thing. I'm just curious. You got to go to yesterday.
It's right here. Oh, sorry.
No. You got to go yesterday.
CRWV. Working.
Other. Maybe go other.
It was the 77.73. No, that's today.
No, that's today. Go to other.
65.70.
65.70 for $1.12 yesterday. So then we worked that and didn't get filled. But we don't have to do the same strikes. I was just curious.
No, I don't think that. I think these are pretty wide markets. I think Circle and CoreWeave have a wide markets, which make them look enticing, but it's very hard. Even though millions of shares have traded. But what is the stars on those? Can I pop it out and see what the stars are?
CoreWeave, you can go to overview and see the stars.
It's a 3-star on CoreWeave.
Hey, I liked trading these last year.
Oh, I don't mind them at all. I want to see what this is too. Overview. And they're both 3 stars.
Again, what am I going to from my year? I made my list of best from last year and worst from last year, and I'm leaning more towards going back to my best performers rather than my worst.
I'm so glad we have come so far in 15 years because Liz and Jenny maybe 10 years ago would have been like, I'm going to get whatever took me down. And now I don't care. I laugh at it, because I know there will be other winners, right?
So it was, it's funny, yesterday, or when that credit card news came out, I thought, oh, dang it, I'm going to lose an Upstart. And that was one of my worst performers last year. And then I went into my account and I thought, I'm smarter than I'm making progress, Liz, because I didn't have it anymore. I got rid of it and I didn't ever look back.
I'm smarter than that. I'm nicer than that. And gosh darn it, people like me.
It was gone. My Upstart was gone, and I'm proud of myself that it was gone. Because yesterday, if you look at from the news, it really took a dive.
I believe it.
And I'm not looking back.
No,
not looking back.
Don't look back. Don't let Upstart ruin your trip.
It's not going to ruin my 2026.
No. When you're laying in the sand in Mexico, I'm just going to write UPST next to
you can write hymns, because I think my worst performer last year was hymns.
I mean, honestly, let's take a look at it real quick.
Hymns.
Hymns is down again today. This thing can't get out of its own way.
No.
So don't even look at them. Hymns and Upstart, dead to you.
No.
Okay. Now, that being said, hold on. We tried to close this, didn't we, SBET yesterday?
Tried to close what?
No, we didn't. SBET's doing great. So I just opened this up. Take a look at SBET.
No, it was a different one that we closed. It was like Lunar that we closed.
Oh, yeah. Oh, we did close that. Okay, so
we're just trying to sell strangles around our stock to eventually own SBET for free.
So we're going to close the 10 put and the 12.5 call and roll them out a week.
Yeah.
Because it's 66% and 98%.
So I think that, wait, can you go back to the position page for a second? That was a month. I think with SBET, you have to go the monthly. It's not weekly. We won't get enough.
Yeah, we've been in there for 35
yeah,
days.
so we're just going to close Jan and sell Strangle in Feb. And if we took in $150 on that Strangle in Jan, and we can get another $150 on the Strangle in Feb, or 100, whatever.
So I think I'm going to go 90 and 13. Is that okay?
Yeah, sure. It's not going to be long before our SBET shares have been covered by the Strangle we've been selling.
And they got filled, so that's good. So we have another Strangle against it, long stock. That's perfect. That just came to my attention when I was looking at that big of a loss. Okay, now what time is it?
It's. I'm going to keep an eye on Twitter. So. Let's see. We have. If you want to pop into Twitter, we can answer a couple tweets. Then we can get into our study.
Deal. I'm gonna go top down.
Sure.
Okay. So Frank Walsh.
Oh, and this is from YouTube. So if you're on the YouTube chat and you want to ask something, Frank will share it with us.
Mr. Pillows, I actually like that handle. Mr. Pillows comes in saying, thank you, ladies. I followed the Google Calendar yesterday and took it off this morning for a quick 20% profit.
Good.
What's your profit target normally? Honestly, on a calendar,
10 to 20%. Yeah, 10 to 20% is fine on calendar. We just took ours off.
Yeah, we did the same thing. So I appreciate that. Thank you.
Ooh,
I'm gonna
Ajit,
retweet
short
this.
strangle and SPX,
Oh,
zero DTE.
Ajit's big by big. So like,
I mean, come on, Ajit. That's crazy. I like to buy risk definition just because, especially with, who knows? Who knows?
I know, but
With this market,
Ajit's been doing it for a long time, so he's got the 69.25, 69.80 short strangle. He's collecting $4. It's got a 90% pop. I mean, Ajit's probably fine. You get so far with a naked strangle.
I know. It's a lot. The naked SPX options, I just like, especially in the zero DT, it's easy to buy some risk definition.
It is easy to buy risk definition.
Yeah.
Okay, so then, Ajit knows this, but I'm just going to show.
Let's just sell a strangle for $4 and take a look at the zero DTE.
So $4.
Just get $2 and $2.
This is going to be close to what he's got.
Yeah.
So there's $340.
And it's $137,000.
What Jenny's advocating is you go down and you can find, it's almost where the color stops, right? Where the color stops, you can go.
Yeah.
A dime.
15 cents.
And you're going to go down a little farther on the puts, but there you go.
And maybe,
but then you're using 6,000 instead of 130.
And maybe people would think you're just throwing away 30 cents. Maybe you are, but then wheels fall off. You got $6,000 in defined risk instead of
130.
You don't know.
139,000.
We've seen crazy things happen. You just never know.
Well, and that's what's great about the zero DTE cash settled. European style, like I like to call it nowadays, is because it is cheaper. But take a look at this. You can do. Oh, we're filled in circle.
Which one? In or out?
No, the out.
Getting out. See, wide markets. Doesn't matter.
I think it might have moved in our direction, but that's okay.
1727.
That's where it was to make 140 bucks.
Yeah, we're out. So now we can sell a new put. We didn't put that in yet.
Yeah.
Let's go to circle and
Let
sell
me
a new
finish
put.
the SPX and then we'll go into circle again, okay? So here's what I was going to say is when you're looking at those, the zero DTE, it's very, very inexpensive to buy some risk definition throughout there. Even if you go out one day, so say you go to the 1 DTE, notice, Jenny, you can't even, it's $1 if you go all the way down to the 68.40.
It's the
very
zero,
expensive.
yeah, it's the
only
zero
the
day.
zeros.
It's only in the 0 day where it's cheap
zeros.
to buy some risk definition.
Okay, so circle. We are out of circle. Now we're going to sell puts. I'm actually going to go before earnings. Are you okay with that? Let's take a look because you can go so far down. If we're just selling puts in circle, I'm going to go to the 70.
If we're for the amount of money we're using.
Ooh.
Wait, why was it only $1,200 before?
Because we were closing the other thing with it.
I don't know.
I'm pretty sure it was. This is the bad one. Core weave is easy. Let me show you. This is the bad. And I say bad meaning it's not giving it to us.
Well,
at a
I know.
discount. This is easy.
I know, and you're working that ratio spread. You're working that ratio spread.
I'm working the ratio spread in core weave, but that's
All
the
right,
good.
just do me a favor and circle. Go, what if you go really far down and try to do a jade lizard? Go 70 cents.
Well, look at 70
oh my
cents
gosh,
at $5.
look at that market.
And it's still $2,600.
All right.
It's
Forget
not
it. Forget
ideal.
about it.
Well, you know what though, Jenny? Hold on. It's because I'm in a weekly. Let me try this. It's a little tighter.
Yeah, the markets are tight in the monthlies, but it's still
$2,300.
Well, look at a big lizard in here.
I think a big lizard with a fat tail. Can I go to?
Because
it's trading
Circle
82.
is Circle almost back to its IPO price. Where did IPO?
Oh, it's way lower than that. It was right here. I guess close.
On the so look at the day.
It opened 69.
And then got as high as 103, as low as 64, and we're trading 82. So, we're right back to IPO day.
So I just split it because they both had $5 in extrinsic value.
Yeah. $5 wide, 742, and then buy the 60.
You could even buy that.
I don't want to give up that much.
You get $1.13 over.
Yeah.
No, I wouldn't do that. Yeah, I'm going to go 65. Only you're getting $1.13 over. Then if we stay right here, the only reason I don't like this is it's got a 7 rank. Why does it have a 7 rank? Because of this.
Yeah, it used to have a really high rank. All of last year, it had a really high.
So here's what I like about this. It's got a low rank. We're still selling premium, but we defined our risk. Using that is actually helpful that we are defining our risk. I'm selling it.
And on this, Again, if it goes up, we're guaranteed $113 because we're collecting $613 and it's a $5 white call spread. So if it goes up, great, we're guaranteed money. If it stays right here, we've got more profit potential.
Right.
Send that.
I did.
Okay.
Jenny, I just wanted to address this because I think it's fun. We're in the SPX pit. Take a look at our SPX trade. We've had it on for 22 days. It's a symmetrical butterfly at the 6,600 level. We're about to cross 7,000.
Wait. What?
It's a symmetrical butterfly.
And what?
SPX. 60. That's what I'm saying. 6,600 symmetrical butterfly in SPX.
And did we pay for that? That was just one of those.
No, we paid 25 cents for it. It's nothing. Like it's. This is a moot point.
Yeah.
I just wanted to see where our center strike was. I couldn't remember if it was down or up. 6,600. We're about to cross 7,000.
Yeah. Go to Twitter.
Ooh, we're filled.
Filled in circles. See.
So I'll go to Twitter now. We'll go back. Okay. Potential earnings placed today: Wells Fargo, Citigroup, and Bank of America. Today is where the earnings. Yesterday they started.
We had JP Morgan and Delta yesterday.
Delta was down a ton. Hold on.
But
I just want to show you this. Delta, I guess it said.
Wait. Florida 7. Florida 7 sent us a tweet. Florida 7, what are you talking about? Florida 7 says, don't forget to watch RSX. It can move any day now. What does he mean?
I don't know, but he's on the books.
Florida 7, Jenny, Jenny at tastylive.com or Liz, Laz at tastylive.com. What's going on? Is there really something going on, or are you tricking us?
He's pretty smart.
What's going on with RSX?
I don't know, but every time I say that he's pretty smart, you're supposed to say, yeah, but mostly pretty.
I'm going to search it. RSX.
Yeah, that's interesting, Florida 7. That's very interesting. I'm just going to go...
take a look at Delta and JP Morgan, see what they did.
Well, Delta, I just looked at Delta while you were looking at that. Delta's down 2, JP Morgan was up slightly. So Wells Fargo, Citigroup, and Bank of America. Let's take a look at those. I'm going to retweet these and love them while we are in here because we have a lot to do today. Oh, and I wanted to get to this. Thank you, Frank the Great. We love you with all of our hearts. He puts economic indicators, how much volume there was, and we love it. But Ash Finn, I had to get to this. I didn't know we were on Roku. Did you know we're on Roku?
Yeah, that's how we started.
Oh no, I didn't know we were still on Roku. Remember we actually carried up all these Roku boxes in the beginning.
Yeah, and I mean, it's not necessarily just started on Roku, but when the network started, we were on Roku, so we gave away, anyone who opened an account got a Roku box, and we literally had an office full of Roku boxes.
Calls. I said, call me anytime that is not between
Go answer.
10 and 11.
Go ahead and answer. I'll carry the show.
Jenny knows that I'm ready for.
Yeah, so we carried up a million boxes. Our whole office was full of Roku boxes, and when you joined Tasty, you got a free Roku.
Yep.
I still have mine, I think, linked to one of my TVs.
You
do? In Lily's Dance Studio.
Oh, that makes sense.
Yeah.
We can go in there.
That's where I do my Denise Austin workouts. Is that her name? Who's that lady who was like
Jane Fonda?
No, I think it's Denise Austin. It's like they're. Okay, guess. I want you to guess. When did RSX shut down?
2 years ago.
March of 22.
Not 2.
What are we in now? 26.
So 3 years
4
ago.
years ago.
4 years ago.
4 years ago. For 4 years, we've been looking at that on our sheets.
I don't see it anymore. Oh, I wanted to show you this. I don't know if you were watching on. You probably weren't because it was Christmas Eve. Not Christmas Eve. New Year's Eve. So you know how they had to guess the market?
Yeah.
For the last hour, Jew Lady was winning. And then,
no way.
Yes, but she didn't. She wound up somebody else wound up winning. But I was laughing and I almost called into the show because Tony could not pronounce her name.
Tony. How many times have you met Jew Lady on the road?
Correct. That's what I said.
Yeah.
So, okay. Nonetheless.
Don't forget to watch your RSX. It can move. I mean, maybe he's joking. Maybe he's just joking about our RSX.
City April Fools. I don't know, though. There's a lot of stuff going on.
Okay. All right. Should we get into a study?
Yes. Now, I do think we might only have time for one. Which would you like to do?
I 100% agree we only have time for one.
So you can pick the SPX study or the research
Why don't we do the research corner today and SPX tomorrow?
Ooh, look at you. Look at the big brain on Jenny. I think that's a good idea.
Well, because I don't want to, if we can't save the research corner to tomorrow. It'll be too outdated.
Correct. So I just wanted to get myself all set up. Now I'm set up. There we go. Research corner. Okay.
Okay, perfect. Research corner. This is just looking back at last week and looking ahead at things coming up. So I'd like to see what's going on.
And give Kai a big hug when you see him in the office today.
I will.
Because he's been doing a great job, and we really appreciate all of his hard work.
He definitely
so
has.
Thank you very much, Kai. He's going to get a hug from Jenny, which is very rare, by the way.
Okay, and then Florida 7 says, nothing going on in our sex, just making sure we don't forget about it.
Oh.
Thank you, Florida 7. We won't forget about it. It's there, staring us in the face. Has been for 4 years.
Yeah, I mean,
RSA.
honestly, I don't see it anymore.
Yeah.
I mean, it's there, but I just glaze over it.
It's not in my account. It's in your account?
Yeah.
It is?
Mm-hmm.
Maybe I never had it.
Yeah, I don't think you did.
Or I think I might have closed it when it was like $3 or something. You know, you'll never close anything cheap. I will.
Yeah, that's a possibility.
I don't have it.
I thought it got taken away from us pretty quickly, though. Okay. Now, that being said,
Oh, yeah, I
Research
think
Corner.
like one day was 10 and the next day was gone.
Yeah. Research Corner, here we go. So, U.S., this is last week's Option Jive. U.S. stocks hit record highs. Small caps and cyclical sectors led performance. Which is crazy because last year, small cap was the lagger.
Yeah, right. Jobs report showed mixed data, reducing near-term Fed rate cuts while supporting continued economic expansion.
Yes, and then we got commodities, copper, natural gas, precious metals, saw large swings. We're seeing big swings with lots of stuff.
Yeah, actually, you could pop back in the platform and look at the swings we're seeing in the precious metals. I mean, it's crazy.
I can't go to the platform without.
Oh, you can't?
No, I can.
No, that's all right. That's okay. I thought it was an easy, quick swipe.
It is, but I have to go through the other study.
Anyway.
Hey, you know what? Hold on. Don't just leave it there for a second. I'm going to move it.
Because the metals are on the move again. They continue.
Okay, go for it.
Yesterday, and for people who are like, now, how about now? Now, how about now? Now, how about now? They're probably taking a lot of heat in the metals.
Oh, for sure. Metals are up 4%. Silver's up 4%
Go to the
again
chart
today.
in silver. So every day I'm like, yesterday I sold, and silver SI is too big for me, too big. But I was like, I just need to be in the game, and I want to.
Well, you shorted it around 60.
Well, yesterday I sold shares of SLV. I just sold shares of SLV. I was like, I'm getting short. I'm adding to I'm going to make back the money I lost in SI, and I sold shares of SLV. But that's not working out today. No.
We don't know where this is going to go. This is SI. Hold on. Let me do something real quick.
Okay, so
hold on.
Like, do you hear Tim Knight talking like, what's going on in the world? It's not just silver. Take a look at gold.
All metals. Hold on. I just want to see 88. I want to see if it's ever been this high. Ever.
No.
I went with I've heard silver has been. We've had rallies like this in silver before. Somebody said that. I mean, I've never seen it. 50s is the highest.
Okay, keep going. No,
50s
never.
was the highest.
So, okay, and now go to gold. Take a look at gold.
I'm going to do that same thing with futures,
I personally think like one day this metal run is going to come to a screeching halt and it's going to fall, but...
So maybe it's gold that's been there, so 4,600.
Yeah, gold may have been there before.
I don't think so. You know what really chaps my hide? The fact that I was long so much gold when we had it and then it got taken away from me. Yeah, it's been way higher. Oh, no, it hasn't.
No.
I was long so...
Oh, there.
That's it. I was long so much gold and it got taken away from me.
Yeah, I know. Try now palladium. Now palladium, I know we have just 2 shares. I personally want to get rid of them because it got here where we made X amount on our shares, and then I watched it come and go.
Yeah.
So.
Well, it's also.
But palladium. Yeah. So I guess if you look back, silver we've never been here at these levels before. Gold we've never been at these levels before. Palladium, look.
I feel like I wouldn't have even looked at palladium. It's not even a word that I've ever said before. Tim Knight. Oh, by the way, we're on last call today.
How can I be?
You're in the studio. Oh, you can't be.
I don't think I'm gonna have to find someone, or I'm gonna have to figure something out.
I've got a doctor's appointment.
Tune in to Last Call and see who's on today.
Shoot.
We forgot. Sometimes we forget about Last Call.
Let's switch with them on Wednesday.
Sometimes we forget about Last Call. This is something to ponder.
I have a doctor's appointment. I will not be home.
I don't know what to think. So we'll figure this out.
Thank God we remembered that. Thank God we said the word Tim Knight.
Yeah. We'll figure it out. Okay, so palladium.
Palladium's been there before, but like I said, I've never said the word palladium in my life. I've said platinum.
Go back again. What was the high? What was the high in the past in palladium?
Okay.
We saw it in 300.
Yeah.
310.
Here's the high of 300.
Well, keep the palladium. Keep it.
Let it roll.
Let it
ride. Okay, so there, that's a little walk down memory lane. That is the metals. Thank you very much. So those have been high. Supreme Court decision is tomorrow.
Hopefully,
supposedly.
yeah, hopefully.
Expected.
Oh, yeah,
the word
hopefully.
is expected. It was expected last Friday. It got pushed. It could be. It might not be.
Supreme Court decision looming on tariff powers. Next ruling expected Wednesday. And you think it's later in the day?
Well, on Friday it was at noon.
Eastern time?
Yes.
So right when our show ends.
Correct.
So we'll see.
But I don't, once again,
We'll be
and
sitting here.
I talked about this with TP. I don't know. I've never traded through a tariff decision stricken down by a Supreme Court. I don't know what time they release theirs.
I mean, we'll see. We'll do some research on time because it would be cool. It would be cool if we were here live in the SPX pit when that actually came out.
But I think it can come out anytime.
Yeah.
Like it could come out anytime.
Yeah.
I have no idea. So CPI was Tuesday. That was this morning. It actually the market
had a little bit of a bounce.
A little bit of a pop, and then
right now SPOOs are only down 7, so we're seeing a little bit of a rally back.
And then tomorrow is PPI and expected Supreme Court, and then the bank earnings kickoff.
Okay. Bank earnings kickoff that's this week, and it started. We had JP Morgan come out, which was down. I saw it down $1, down.
Oh, was it? I thought it was up a little bit.
No, when I put on a little JP Morgan trade, and when I closed it, it was down $1.
Oh, it's down $10 now.
Whoa.
Down 3%.
Hit the day. Let's see the day. So today it was open at 324, $10 higher. Yeah.
Yeah.
Yeah, it was actually up.
When I saw it, it was up.
326. It was up a couple dollars, and now it's down 10. Interesting. Interesting. Okay.
Okay, so I'm going to pop back in. Now, this is the week of, they give the S&P, the NASDAQ, the Russell, and the Dow. The week of 12/29, everything was down. Week of 1/5, it's a new year. It's a new dawn. Everything's green.
It's a new dawn? What? Oh, that's Michael Bublé. Hit it, Michael.
Hit it, Michael. Okay, then we keep going forward. Here's the expected move. Now, I like this because he's got the expected move, and I like to assess it back and forth. So, this week of 112, which is expiration
Which
week.
is crazy to me that it's expiration week. It seems so early. So early
It's the 14th.
Which would be 2 weeks of January. But because if I look at my calendar,
it's the third Friday following the third Thursday. So Thursday was in
because January 1st
was a Wednesday,
was
right?
a Thursday.
A Thursday.
Yeah, so that's it. It's the Friday following the third Thursday. So because January 1st was a Thursday, January 15th is the third Thursday.
Yeah.
But this is a real short, like a really early expiration.
But you've seen those. You see them sometimes earlier than later.
I know, but it's like today's only January.
But you know what?
13th.
I don't. Like I said, when we were in Naples, I saw that boat that said Third Friday. And I was like, that's an option trader right there for you, who's made a lot of money on that yacht. But so we used to be more keen to when the expiration cycles were because it was important. Now every day is an expiration.
Well, with the 0 DTEs, sure.
Yeah.
But to me, expiration week makes me think, oh, it's just about the end of the month, and it's not the end of January.
No, it's
Yesterday, I kind of cleaned up. There's always a mess that we have from the snowplow coming through our alley. So yesterday, I cleaned up the snowplow mess. They make the mess with the gravel in the alley.
Yeah.
And then someone came out and said, it's probably going to snow again. I was like, is it really? I feel like it's almost spring. It's
I don't
January.
think so.
I said it's January expiration. Month's almost over.
It's January.
Month's almost over.
I just want to see what the expected move for the week is now. So it was 77, and now it's 42. That's how much VIX volatility is. Come in, look at this. Whoa, sorry, wrong way. So it was 73 at the start of the week. Now we're 2 days in.
And do me a favor,
Wait,
check that.
Oh, I'm sorry. It's 3 days, right? 3 days still there. So it's 58.
Can you check for me the calendar? So this morning, the 69.75, I think it was the 69.75 calendar I was looking at, and it was 8:40. And now it's 9:15. It didn't make that much.
No,
it didn't make that much. I had told myself, like, I'm going to do this calendar
Well,
day
that's
at 8:30. I don't do it if it's really
Well, I also think the 1 day implied volatility is keeping its wings up probably because of that.
Well, that's why you should be making more. That's why you would think like today would be really decaying and tomorrow would be making more.
Today's not decaying.
Yeah, right.
Which is kind of crazy. Okay, so let's get back in here. We'll keep going through this to make sure because we only have about 6 minutes left.
Okay.
This is the major assets IVR, and it's not the percentage that it's up or down. It's either green or red. It took us a full year to decipher this.
what the IVR is. It's what the IVR
So
is.
the IVR, this is their IVR, and whether it was down or up from the following week.
Crude oil and natural gas IVR up. You've got 29% in IVR.
Nat gas is a high
crude
IVR.
oil and 74 in nat gas.
I'm going to go to nat gas for you because we do have a natural gas position.
I don't think we have a crude oil position right now. We have a natural gas position.
We did. Natural gas is a hot topic. It's in fuego. We've got our downside ratio spread in. Downside broken wing butterfly. Do you think they can hold it down a bit? I'm just kidding.
You guys, we're trying to do a show. Can you guys quiet it down a little bit?
Can you keep it down a bit? Okay.
If I look for big orders,
I don't think so. You can hear rolls, roll after roll after roll.
and then a spread, a January 13th, 69.50, 69.40.
So they have put a set. They have put a set in front of my. You're gonna be the reader because I can't see anything over there.
I can see last trade that went up January 16th, 7,000 put. Yeah, 7,000 put and 7,000 call. Someone bought it. Someone bought that.
January 13th.
So the crowd sold. The crowd sold January 16th. 7,000 put. Did you see it? Well, the volume probably didn't hit yet.
It's either that wouldn't have hit right away. It takes a second before it gets up there.
7,000.
Yeah, but so the problem with January 16th, Jenny, and I'm only showing you this, it could be AM or it could be regular.
No, I know, but I'm just saying, like, 7,000 is actually
3,000 of them went up
in the money. 7,700 call.
There's 3,000. There's 3,000 of the open interest.
There's nothing huge. Like that was just there's nothing huge. These trades going up are like 200, 400, 500. Yeah. I'm not seeing any big print go up.
So we could take when you look at crude oil, when you've got natural gas at a 74, crude oil at a 29, you're like, eh. I mean, and what I find crazy is Bitcoin is now down to a 28.
Yeah.
That has been slowly going down.
Yeah. So what does that say? It's not priced to move anymore.
No, it's not priced to move anymore.
Okay, so I don't mind, but we don't have anything in CL.
Hold on, let's just finish this, and then we'll jump to CL, just because I want to make sure we get through all of it.
Biggest movers. Dun, 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 Intel at the top.
Oh, Intel. I was like, there's no OKLO on there, but Intel's one of your big ones, yeah.
Intel,
Amazon,
and I struggle, and we were talking to someone yesterday. Like, I struggle, if you have a long stock position and you want to protect it, I struggle, like, paying to keep rolling up puts.
I know. That's
or selling calls.
I mean, what I would like to say is it's a high-class problem, but it is a struggle because you're paying for it, and you don't want to pay for your protection. But you can't buy the house. You can't buy the insurance when the house is on fire. Meaning, like, you're rolling up protection.
And what you don't want to have, like, what you want to have, your P&L and your stock. Say you're making X amount on your stock. You don't want your net P&L to be much less. That you're giving it up and throwing away so much money on options trying to protect that. Right, so it's tricky. It is,
but it's very similar to
it's Nasdaq's green and SPOO's only down 2.
Wow, it's the opposite of when you're selling calls. You're doing something to chip away at your cost basis.
Yeah, it's the opposite of chipping away at your cost basis.
It's adding to your cost basis.
Right. So you don't want that, but. Anyway.
Okay, so then except for the NASDAQ.
Wait, what were the big down moves?
Oh, you know what I was going to say? AMD was down 10%, and we made a bullish trade in it after the down move.
After the down move, and it's popping back up. And Apple's one of those I kind of want to get back into. Jade Lizard every cycle in Apple.
I'm already in.
1 year, Jade Lizards and Apple were really one of the bells of your ball.
It was, and it was a sneaky bell because I didn't even realize we're in Apple already. What do we have in Apple?
We are?
Yeah.
What do we have?
We have, Jenny, I'm glad you asked. We have a zebra.
No way.
What? The heck?
We wouldn't have a zebra. Oh, it's a crab trade, right?
Okay, thank you.
Like we got long the March. It was trading 275 when we put this on. We got long the March at the money, probably at the money, maybe, and
maybe,
then sold.
No, I think we actually went up a little bit because we wanted it cheaper. So this is exactly almost where it was when we put it on.
Hey, you know what I would do with this trade? That I would close that 38-day ratio spread, I think, because what is it? It's only $128 to close it.
And it's winning.
Yeah, I would almost close that and let that 275 run for 66 days.
And you're going through earnings.
Because what's left in there? 590.
So here's what I was going to show you: is we can legitimately close the shorts. Take a look at this. If you look at the shorts here, they're only 76 cents.
76 cents.
The shorts are 60% profit. I'm just going to close the whole thing.
Just the ratio. It's $1.28, but We have so long in that March. If we get a little boost in Apple or a little run up in Apple, then we could sell something else against it.
Yes.
And we'll have earnings. This is going to go through earnings.
I know. We are actually done with the show for the day.
Oh, we're out of time.
I just want to, just so people can see this.
Yeah,
through
keep
copper
going through
climbs to $6. Natural gas back's down near $3. We saw all this. Here's your upcoming earnings. So I just wanted to make sure we got to that.
And I'm getting everything pushed out to the follow page. I know today was busy. It was busy.
I hope tomorrow. I hope the news comes out tomorrow while we're on the show. Matthew's over there going like this with his fingers and his toes crossed.
I mean,
for
maybe
news
the
during our
show could go. I don't know how busy the crew is here, but maybe we could go a little longer tomorrow if the decision's coming out right around the end of our show. To see the roar.
It is also
behind
Option Trading Concepts Live, but if it does come out during our show,
Yeah,
we'll
we'll
say,
see.
Yeah,
we'll
we got to
see.
do what we got.
All right, everybody. Thanks for tuning in today. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show.
We'll see you tomorrow,
everybody. So I'm gonna close, or should we just leave the SLV? Let's just fucking leave it. It's 14 chairs. We're already.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And of course, we've got Thomas Westwater, as it is Thomas Tuesday.
Thomas Tuesday.
How we doing, boys?
We're doing, it's Bears Nation, right?
Correct. It is Bears Nation.
Yeah, everyone's excited. You go to the grocery store now, and almost every other person is wearing some kind of Bears memorabilia.
True.
It's going around. It's like a virus, but like the good kind.
Yeah.
It's happening right now.
And now this upcoming weekend will be the biggest game in the last 15 years for the Bears.
Yeah, easily.
I want to say. Because the Rams should win the Super Bowl unless we stop them.
Yeah, I mean they are a pretty good team. The number one thing we got to do is get a pass rush on Stafford. We can't let him sit back there and pick us apart. He will destroy us. Got to do something about that.
Yeah, and we will.
Hopefully the weather helps.
Oh yeah, it's supposed to be like 0, which is great for this California team coming into the cold weather.
Yeah,
freeze them.
Yeah, I'm ready. It'll be fun. Kind of a blah day here. Nothing really moving. Bitcoin is the leader here, up 2K. E-minis, NASDAQ, Dow, Russell, all pretty much flat. And if we look at other futures products, still seeing silver just rip higher. Crude catching a bid too. Bitcoin, Ethereum, and wheat. Love to see it. Wheat, corn, soybeans, kind of all just chopping around flat, but really, that's it. Like everything else is within 1%. And my rule, I don't talk about it if it's within 1%. Really just a little bit of upside movement and silver, which cannot be stopped, will not be stopped. Just absolutely nuts here. What are we doing?
It is. I mean, I don't know. To be honest with you, I'm starting to get a little worried overall. I feel like I've been saying for a while now, there's no wall of worry, but I think the bricks are starting to stack upon each other. When you hear about all the stuff that's going on in Iran, you hear about the fact that the government-wise, there's a case or they're suing Powell. I mean, you hear that. There's all these different reasons. Everybody's trying to figure out reasons why silver is going. There is no one reason. There's like 5, honestly.
Yeah.
And you see oil turning around, going positive today. There seems to be some things stacking up a little bit here. I feel if we're not careful, these things are going to mount up at some point or another. I mean, look, silver doing what it's doing is not in a vacuum. It is something to behold. So I think you got to keep an eye on that because these things are stacking up really slowly. I mean, they don't really seem to mean much right now. You look at volatility, nothing's happening. But I feel like at some point or another, I mean, it could add up a little bit overall.
Yeah.
Credit card thing is another one. That's the other. There's all these different things, little things. Sometimes that forms a wall of worry, right? These little things by themselves are no big deal, but when you got a whole bunch of them together, all of a sudden they mean something.
We did have. Go ahead.
CME. They changed the way they calculate margin now for gold and silver. It says they're doing it based on a percentage of contract value. They did it before based on the dollar amount of the contract. Not sure what implication that really has, but there's been a lot of talk that CME is going to raise the margins as this rally goes on because they need to protect against volatility. I got out of my silver just recently. Call spread kind of maybe should have stayed in the way things are going, but this is getting to the point where we're probably looking at one of these big pullbacks having to come at some point. It's just really hard to time that.
Yeah. We've got some upside silver, some downside silver positions, but yeah, we put on this 100 strike calendar spread, long May, short Feb. It's up $150 on a $240 debit, so that's a big winner into this rally.
I mean, obviously, I assume if they're doing that contract change up for margin, they want people to be able to trade more. I mean, what I'm seeing right now, if I try to trade SI, I mean, it's like $50,000. And that's crazy. I mean,
yeah,
that's wild. Platinum doesn't see it went higher a few weeks back, but it's not as it's 16.5 from what I'm seeing now. Again, these are on margin accounts. I mean, that's wild. So I assume what they're trying to do is still express risk, but still allow people to be trading to some degree.
Indeed.
Yeah, it's big.
Yeah, but this move's nuts. This move's crazy. And IV rank in silver just continues to climb here. I mean, if we look at where we're at, 75%, back months are creeping up higher, almost at 100% in these near-term cycles, which is nuts. But IV rank, sky high, plenty of premium there, regardless of what you want to do. But yeah, we'll see where we end up.
Thomas, I know you look at the CFTC reports every now and again. Have you happened to look at, I've been meaning to look at silver. Have you happened to look at that?
Yeah, you know what? So it's still backlogged from the government shutdown. So the last thing I saw is it's still a couple weeks until they're fully caught up, They have a specific date. It says, January 23rd is the projected date for the COT data to be current. So I haven't been looking at that too much just because, it's the farther away from where you're trading, the less relevant it is. So, we'll get back to all that stuff soon as they're up to date.
Yeah. We also had some earnings reports out last night. So we had Delta Airlines down $2, 3%. JP Morgan announced, first of the banks here, and it's pulling some of the other bank products down as well. But yeah, JP Morgan down 10 points, 3%, which is kind of funny because we were saying that the implied volatility for earnings was super low, but it's right there. I mean, this is the expected move ultimately. But yeah, maybe this is a tell if you're trying to play some other bank products for their earnings, like Citigroup tomorrow morning. You've got Wells Fargo tomorrow morning, Bank of America tomorrow morning, Goldman Sachs Wednesday morning.
Did a small diagonal spread last night, put spread in Goldman on JP Morgan earnings, made $100 off of it. Yeah.
Nice.
That was fine. I decided
JP Morgan took a hit from that credit card, the Apple. They took all the provisional losses.
The old Apple.
Yeah.
Apple hath fallen from the tree. Yeah, I think it's very interesting. I like the way that this is moving to the downside and all these products are moving together. It can certainly happen, but I feel like it builds a thesis of, maybe you do bearish trades for the rest of these, and maybe one or two of them will move in the opposite direction, but maybe you get all of them to the downside for the same reason that we're seeing JP Morgan move to the downside. But we'll have to check these out later in the show. If you have any trade ideas for these banks for tomorrow morning, Wells Fargo and Bank of America and Citigroup, let us know in the YouTube chat. We're streaming live there. Just pop over to Tasty Live. You'll see this video front and center on the homepage. You can throw in your trade ideas and questions along the right-hand side chat. But it is Thomas Tuesday. We are talking futures, and we haven't talked about this one in a little bit, but we did allude to it yesterday with some of these crops just plummeting after the WASDE. Thomas, what do you got for us today?
Yeah, so WASDE was yesterday. There was also a quarterly grain stocks report. Those two came out at the same time, both big market movers. I want to talk about corn because corn is what gave us this very bearish reaction. The biggest drop in quite a while. Corn had, let's see, I just want to make sure. The biggest drop since January or June 2023. So this reaction, very, very bearish, huge candle down. We've taken out all of the price action going back, pretty much since August. And the reason why is because the WASDE report was very bearish, obviously, but ending stocks, pretty much how much supply you have at the end of the season was raised up quite a bit from the previous month and versus trade estimates. I want to say 226 billion bushels, somewhere around there. Obviously traders, they just sold this. It was a surprise. It was a surprise versus the estimates and a big move down from the last month. If we could go to my slides, I just have one visualization that'll show us how bearish that is.
Love it.
Yeah, so this blue one, this is the estimate. The brown bar is December, about 2 billion, and then the yellow one is where we came in. So higher stocks. It's the same thing as oil. If oil inventory is increasing a lot, that's a bearish reaction. It's the same thing with corn. Farmers have too much of it. They're producing too much of it, or demand isn't taking enough of that product. Wheat and soybeans also had bearish reactions, but not anywhere near what corn did. And corn, I've always thought that corn out of the three is the most tradable product. And recently, really the past year, it's had the best volatility to trade. And I don't know if that changes year to year, but usually corn is the very tradable product. So what I went ahead and did is I'm trying to play for a rebound here. So I sold a put spread at 405, 415, 38 days out. And you pretty much got a 3-to-1 risk reward with a 67% POP. So, it seems like a pretty good trade to me. And, after these big dips that we get sometimes, you get a rebound in the medium term. I was trying to run the numbers to get some charting out here, but what I pretty much saw is 45 to 60 days out. About 58% of the time, you're higher after that. And I couldn't even find, I ran the data for the past 3 years. There hasn't been this bearish of a reaction to the WASD data in at least 3 years. So I was trying to pull data that goes further back. Perhaps it's somewhere in there, but this is definitely one of the bigger bearish reactions that we've had to the data. So I'm playing it for this dip is kind of overdone. Technically, I think it doesn't look too bad to get long around this August low here around 409. 410, and I think that's a nice round number. We're still about $12 above it, 12.11. So I'm going to take the stab here, try to get a little long. Soybeans and wheat, they're soybeans. The volatility is just not like there. Wheat, the IVR is 5, so it's not there either. Wheat, I think it has a decent bottoming pattern going on right here. I think the downside is exhausted, but it's just not as exciting to trade as corn.
Is there
that's what I'm doing.
Is there weather reasons behind this build here that we got?
No, I don't think it's too much of the weather reasons because farmers really aren't planting right now. They're doing their planning and stuff like that, going to their trade conventions, maintenance on their equipment during this time of the year. So it's really not planting. We won't get into the planting and acreage updates really to where it's more impactful until around April, March, around there. So it's not due to weather too much. These are more projections based on supply and demand and what last year's marketing came out to. The USDA also bases it on what other countries are doing as well. So other big corn exporters, Brazil and things like that. But it's a very competitive market. The supply, last year we had, the supply grew and things like that. So it's just corn, it's been in this bearish, pattern for quite a while, but there's been times where you can play to the upside because it's been overdone. Like into that August low, we fell as low as 410, and then by November, we were trading back up around 455. Not the biggest move, but there is some direction that you can play these trends in the charts. But I think this might be an overreaction. So we're seeing some intraday buying today. But there could definitely be more downside. I'm playing it for it to stay above 410 is pretty much all I'm doing.
I like it. Yeah, I think we've seen this before. We saw the big liquidation washout in copper, and that has completely reversed. And yeah, corn, sometimes you get these big sell-offs, and it just creates longer-term opportunities. But yeah, I like the trade. I just followed you into it, the 415, 405, 38-day. And you can see here, I drew some lines here. This is where the spread would be, 415, 405. We've just barely pierced this short strike here back in August, like Thomas said, and we've recovered since. But yeah, either way, it's defined risk. You got 38 days to go. Kind of a tricky time frame because the next contract is the 73 and 101 day. So if you wanted to get even longer term, you could totally do something like that in the 70-day or like a diagonal spread, long the 100, short the 70. Just to stick with the same contract here, the K, but we are in the H with a 38-day cycle to expiration. And yeah, I like it.
Yeah, there's already people out there, the corn bears, calling for prices in the threes, which would be the 300s. But I don't know. I don't think we get down there. If we do, I don't think it would be until we really have a good picture on the next the year where the crop is actually in the ground. Yeah, I hope this trade works out. I think it's a reasonable trade. So not any real news on the corn markets. Probably for a while. Because we are in winter, so you just let the price action play out at this point. So we'll see where it goes.
And when does the crop go into the ground?
I mean, it depends where you are. I think it's late March to April.
Okay.
Into May. I mean, obviously, further north you are, a little later. South, might be a little earlier.
I was just asking me, just based on just wanted to know that. Obviously, it helps to know that, but also too, I see the next report is on the 10th, so that won't encompass when the crop is in the ground, to your point.
Yeah, plenty of time for this trade to work out. And yet, regardless, defined risk, a couple $100 of risk. But I like the pot odds on this one, all things considered. If you assume that we would stay afloat above 415, we only breached it to the downside once last year. And yeah. I think it's an interesting trade. Love it. We got some peep in the YouTube chat. Followed you into the corn trade. Is there a fundamental story? Or just big down days yesterday, is taking a shot? A little bit of both. Are you trading any other futures, Thomas, at this point in time?
I am. Yeah, I'm still long gold. So I'm happy keeping that on right now. I'm in a long call spread. Gold, I think it looks really interesting on a technical basis. So silver you have where it's just going sky high, blowing into open air. Where there's little known liquidity zones. Gold, I mean, it's still at all-time highs, but we have levels you could play off of if it dips. So if I wasn't long right now and it came back down around 44.50, I would definitely get long there. I think it's really clean technical. We've had a series of higher highs. There's been only two really big notable sell-offs going back since October. I like the gold story a lot because we're looking at bigger deficits, monetary policy that's probably coming down, but it's still uncertain. And I think for precious metals, a monetary path of looser policy, but uncertainty around that policy is probably the best for gold. There's instability geopolitically, politically. I think everything is kind of aligning to where gold is going to have another really good year. So I'm playing that the same way I played it last year. I'm just buying call spreads when I can because when we do see gold rise, quickly, you do get an expansion in volatility typically. Copper, I'm also long copper. I am in a long call spread as well, 42 days out at the, or no, sorry, I'm in a short put spread, 5.7, 5.75. Now we're trading above 6 in copper. So, I think I'm going to stay in there too. I was long silver. Like I said, I just got out of that. The only positions that are hurting me are my natty gas positions.
Yeah.
Yes, gas is a tricky one. I'm trying to roll the put spread right now, reluctantly, but I am. It's already in the money. I'm short the 384 put spread in Jan with 14 days to go. So I'm rolling, but I'm also changing strikes to account for obviously the drag and the futures curve. So I'm actually rolling it. I'm changing those strikes by 50 cents to adjust for that. And so I'm trying to sell the 350, 330 put spread.
Yeah.
Yeah, the weather is finally turning a little more into support for natty gas. It's not like the best case scenario for bulls to make a big comeback right now. Yesterday, we came back over the weekend. The weather models looked a little better. Natty gas, had a good update. And now, there's no follow through coming. So it's like a little disappointing there. But I still have time to stay in these positions. 42 days out still. So I think I'll hold it for another week. If it's still in the dumps, I'll get rid of it, move on. It's what you have to be prepared for when you trade natural gas.
Yeah. The H contract looks a little better when you just look at that price point in the chart. It's staying a little more elevated. Do you make anything of this single contract backwardation here with 334 being the 14-day G6 contract, and then right after that you go back into contango, 282, 284, 29, 311, or is this just reflective of the heightened implied volatility over the last couple of weeks?
I think it's right because it's just of where we are in the year, January. You could get that potential for very cold weather. So I think that backwardation at this time of the year is pretty normal in natural gas. Yeah, and then, you get these later months, February, March. That's when the weather could start, warming up a little bit, especially those March, April contracts. Yeah, I'm not playing too much on the shape of the curve really, but a lot of traders do play that one spread.
That spread, yeah. I think I know the spread he was talking about. Talking about the Widowmaker spread.
Yeah, most likely. But he's Oh, there you go. He was frozen for a bit.
Yeah.
Were you talking about the Widowmaker, Thomas?
Yeah, I think that's the March April spread.
Yeah. Yep. Yeah, we'll see if we can get a little bounce there. But I mean, this thing's volatile. I would not be surprised one bit if we get a nice rip higher with some crazy weather. Let's see. Markets are closed Monday. Yep, good call out. Could be a little vol crush into the end of this week for that reason. But timing it, of course, is tough. But I could totally see a vol, especially if we just chop like this for the rest of the week. I could totally see a nice vol crush leading into next week's shorter week.
That said, an extra long weekend means an extra day for headlines with no movement.
Yeah, that's true. So it could be the opposite.
Yeah. Crude oil is really interesting right now because we've made like a multi-day rally and we're really testing the upper range of this price range that we've held since like late October. And before that was the bottom end of the range that held, through the June to like September months. So it's really interesting the place we're at. And yesterday I was about to put an Iron Condor on again. That's the way I've been playing it. The one reason why we're getting a lot of this upside is what's happening in Iran right now. The protests are really getting kind of crazy, and it's hard to know because Iran controls. They really make it hard to go on the internet during these times. So you're getting limited information out of there. But this administration says they're potentially going to take military action, and that's a threat that I think has some meat to it because we've already taken military action recently. I think the political capital is there for that to happen again, especially if it's from the angle that you're protecting protesters, you're going against the Iranian regime. So I think the crude oil market is properly reflecting potential supply disruptions from strikes on Iran. And when the U.S. does strikes in the Middle East, the geopolitical premium always gets baked in very quickly. So the way I want to play this right now is give it a couple days to maybe settle into this new range or settle back into the range, because if the threat of Iranian action comes off, I think you go down into the 57, around there again pretty quickly.
Yeah, I did put an iron condor in here yesterday because just looking at over the past week, the only things that have really shown some increase in vol have either been metals or late last week, oil popped a little bit and the volatility went up a little. I totally agree with you. This is what it really looks like when you're talking about geopolitical issues with oil. A lot of people thought that Venezuela was going to be the thing that moved it. But again, this is why we wait for price action to really show you what's going on. And I'm just ready to act. If this thing somehow gets above 65, I'll probably just buy an MCL contract. But as Mike is showing, that's essentially where my position is. Kind of similar positions that you put on. I have the 65, 66, and 54, 53 in Feb. So we'll see what happens. But this seems to be always the thing that gets oil going to some geopolitical strife, particularly in the Middle East.
Yeah. And that range, we have seen a big rally, but the 55, 65 range still accounts for ultimately the low of the recent months and the high of recent months too. So nice wide range, and this continuous rally is really helping out the premium on the upside. You can see that here, like the 65 trading for $1.80, the 55 trading for much less, a third of that. Still getting a decent premium for taking risk down there. But yeah, if you want to just skew this and make it even further out of the money, you could totally do that. I would probably use the same baseline, 55, 54, or like 55, 54 and a half if you want to get smaller, and then go up to like the 70 strike at the highest. But yeah, I'm gonna throw this on, see where we get filled. I routed this for $400, risking 600 for 35 days. Got a question in the YouTube chat. How do you determine what cycles will have the highest volume and open interest for options for crude? So very similar to equities, your weeklies are certainly going to have the least amount of activity just in general. So if you're trying to stick to where most people are trading, just sticking to the monthly cycle, Feb 17th, there's no W, which signifies that it's a regular cycle here. That's likely going to be where your activity's at. And we can double check this, but crude is so liquid that even with lower activity, like you still have decent bid-ask spreads. These are 3 cents wide, 2 cents wide, where the monthly you're going to have 2-3 cents wide, but you have a lot more open contracts, so it's going to be easier to get in and out. Same thing with ES. ES, bunch of weekly cycles, but your March 20th is your non-W cycle. That's the regular monthly where you see a ton of contracts. So just keep that in mind. But ES is another one where you're probably not going to run into too many issues as long as you're keeping your pricing in check here.
Mm-hmm. Yeah, that Feb does actually have a lot of volume.
Yep. End of month too. Like ES end of month, those will carry some liquidity. Quarterlies will carry some liquidity. So yeah. Let's see. The vol curve on ES is really cool to look at through various expirations, especially when there's event risk somewhere.
Yeah. Yes.
Yeah. Yeah, you can see just by looking at this, like you can see where there's stuff priced in. 12, 11, 12, 11, 14, 14, 15. But yeah, as you go further out on the curve, you'll see a little bit higher implied volatility with more uncertainty. And this near term is just really super low, which is contributing to that. How about an apple crab trade on the long side?
Still been down. Stop the streak, I assume.
260, huh? 4 days of green.
4 days. What are
So
they
yeah,
talking about?
alongside crab trade, I think you just keep it simple. I'd probably go to March and then sell the earnings cycle, get that premium. What does this look like? A 10-point wide. 260, 270, 280 for $7. I think that's totally fine. Or you could go 275, 260, 275, 290, 15 points wide for $8, $9.
Almost like that better.
Kind of like that. But yeah, I really like going to March for this one because March, you have the ability to roll the crab component, the short crab component into Feb monthly, or just turn into a diagonal spread or a calendar spread, like whatever you need to do to hedge the position if you get a downside move in Apple for earnings. Yeah, I don't mind this. I'm probably going to come back to this one for the earnings announcement though, just because we're 2 weeks away. If you're playing for a pre-earnings rally, I like it. But if you're playing it for earnings specifically, I still like waiting until the announcement itself.
What'd you do?
In Apple?
Yeah. What was that?
I was just looking at the March long the 260 call.
One? Yeah.
Yeah, long the 260, and then the Feb weekly, or sorry, the Jan 30 weekly.
Oh, you did Jan 30 weekly. Got it. Okay.
Yeah, Jan 30 weekly, which is the earnings announcement. Either the 270, 280 or the 275, 290. Both are under $1,000. Wolf sold a Feb 17, 66, 69 call spread this morning. Hope I don't get burned. Probably a low IQ move. I don't know about that. I mean, fading something that's rallied 1, 2, 3, 4 days in a row in a pretty sizable way. You could get a pullback easily, but it's defined risk at the end of the day. 66, 69, Feb 17.
You know, sometimes we get paid to be contrarians, and sometimes it doesn't work. Like anybody who's probably mostly done it in some metals over the last couple of months. I mean, it just happens. You just never really know.
Yeah.
You know, as long as you're being risk defined, I think it's okay.
Yeah. Yeah, risk defined spread here. I think if you got a reversal tomorrow, or if you get $100 out of this thing, I'd just close it. Because it is defined risk, but your max profit is way less than your risk here. So I'd be looking for like a 1 to 2 day reversal here. Take $150 out of this thing, and then get out. Up to you though.
Yeah.
A copper iron condor. Okay. What a beautiful move in copper. Remember we were buying the dip here all the way at the bottom, Thomas, and now it's just ripping back.
Yeah. This is still one of my bets that I think I'm going to be long on through the whole year, at least the first half of the year. We're above 6, so this is looking good.
Boy, I gotta tell you, it's just we're gonna look back on this and be like, remember when metals? Wow.
It's a super cycle.
Yeah, it is.
The old super cycle.
Yeah.
Okay, so this one is tested. This one's in the money actually. 585, 595. Considering legging out of the put side, yeah, the put side is worthless, so I don't mind that. Rolling up and out to the next expiration or just sitting. Yeah, I mean, this 14-day is if you roll into Feb, you're in the same contract, so that's a nice situation, at least for cleanliness of the position. But yeah, the put spread is done. I think if you are looking to roll this, if you buy back the 58595, 595, buying this back for $1,000, and then rolling it up to 661. Yeah, it's going to be tough. It's going to be tough to do. Yeah, it's a tough one. I mean, you still have a little bit of implied volatility through the next 2 weeks, so you could see this thing come back down. But yeah, just depends on how much you want to risk or where you want to move it. But I don't mind if you're trying to buy this back now and then rolling to a new iron condor in Feb. If you can do that for like a scratch, that will just shift your current risk into the new cycle. Don't mind that, but yeah, tough one. Let's see. 100 shares in SLV. Rolled into a Feb 73 straddle, collected 343 credit, 345 credit. Straddle's marking an $11 loss. Should I go inverted or sit? Added shares to hedge as the original strangle went against me. So where is your share basis at? That's the question.
But they had 100 shares. They got it because they got assigned on something or what?
No, I think they had a straddle. They took some heat on the straddle and they bought 100 shares
against the short straddle. Got it.
So yeah, you have from when you bought the shares, you have no additional upside risk because your shares offset your short call. So it's just a matter of like what sort of position you got yourself into with your credit received. You'll have to look into that from a holistic view. And if the order chains aren't helping because of like something with the shares or whatever, you could go to the transaction tab and see where your basis is. But yeah, the straddle marking a loss isn't, you can't look at that in isolation because you have the shares now. So you have to combine like, what is your straddle loss plus what is your gain on the shares? That's your net basis or your net P&L. Any preferred trading vehicles for copper in a non-futures product? Thomas, what are you trading?
I do. There is CPER, and then
I'd say FCX.
Yeah, I mean it has to be FCX. That's a minor, but you're getting direct exposure to Freeport.
Yeah,
there's really not any good like copper ETFs. There's good ETFs for gold miners if you're doing that. Copper is a little bit more of like a consolidated industry, a little smaller. So there's not really good ETFs for the miners that have good volume. Freeport's very tradable.
Yeah.
Yeah, FCX is one, and SCCO is another. It's not as liquid as FCX, though. FCX is most liquid.
Yeah. These ones, yeah, FCX, you can see here, like just looking at this dip, it has well outperformed the dip itself. CPER is looking a lot more like the copper futures product, but CPER options are really not that liquid. Like it's all just at the money stuff here. When you're looking at Feb or longer term, but anytime I see no weekly expiration, that just tells me there's not enough activity in here to open them up. So I would stay defined risk in here. Maybe you use less legs because the liquidity isn't great if you really want to trade it. But yeah, I think FCX is where we would go. URA. Anyone trading this?
I have something on here.
Uranium?
Yeah, uranium. I'm short of straddle in here. I mean, it's something that I rolled out on for a while. I'm short the March 50 straddle now.
Here you go.
I trade Cameco sometimes, CCJ. Usually not uranium directly or URA.
Yeah, I haven't traded this in a little bit, but definitely seeing some movement here. Creeping back up to the upside. Recent high was 60, sitting at 50 now, but got as low as 40 just last month. So, seen a decent rally. Yeah, FCX is one of those where we trade it every so often, but I mean, this thing's been ripping. Up 20 points in the last couple months here. Pretty nutty.
Yeah, and then CCJ is doing better than URA, it looks like. So it seems like the miners are they're looking pretty good, whether it's like copper, uranium.
Yeah, I mean, it's crazy. That's kind of how it goes a lot of times, right? Like these stocks, when these commodities are really doing some interesting stuff, the stocks themselves kind of outperform in some cases, like we just saw with FCX, et cetera. But yeah, CCJ has been on a roll. It's not a commodity, I guess, really, but interesting.
Yeah.
Back a little bit here. Small.
Between these bank earnings, Citigroup, Wells Fargo, Bank of America tomorrow morning, do you all lean in any direction if we want to place a little earnings trade here? We have to place it to the downside, obviously.
Yeah. I felt like you know what? It's funny though, because I've seen times where you have like JP Morgan or something kick it off and they go down, and then the next day some of them go up.
Yeah, it's going to be the one we choose. So choose wisely.
I specifically chose Goldman because we wouldn't have to deal with the ball crush really, and I knew it would move obviously whatever way. JP Morgan. I didn't downside because I have so many upside things. I feel.
Yeah.
I just did it. It just worked out. I feel like I got lucky, so I closed it for the $100 loss and just is moving on.
I feel like Citigroup and Bank of America. I don't know. I feel like Wells Fargo's just done some shady stuff recently.
For sure.
I think this is the one I would go bearish on. I watch. They're going to say, we're getting into prediction markets.
I mean, if there's anyone who, that's funny. If there's anyone, maybe, like Thomas mentioned this morning, some of that stuff came up with the loan loss provisions on JP Morgan. Maybe Citi ends up, sort of commenting on this current credit card situation too. Maybe they move down because of that.
Yeah. I think you could do all three and just play the average. What were you going to say, Thomas?
Yeah, is the credit card things, is this just something Trump has said, or is this like an actual, like, is there motion in the government to do
it's
this?
just something he said. There's no motion. There's no way to even enforce it. As a matter of fact, all the bank CEOs are basically coming out and saying it would be bad for the economy, which honestly, I don't really believe that much in a way. I get it. I mean, they obviously give credit based off of ratings, which again, we could debate that system forever. Tom Sosnoff has said a lot of really funny things about that. So, and it's true, it's a joke. I mean, he's basically he's been open about saying this. Like, I think he said he has like the worst credit or whatever. Obviously, this guy has a lot of cash. He did it on purpose because he said the system is a joke. And it is a joke, to be honest with you. And I think that's what's coming into play here at some point or another. But yeah, point being, he's just said this. There's no legislation. There's not even any way to enforce it. So there really is obviously going to be a point where all of these bank CEOs will come out and defend whatever the way that business is being done right now. They're going to come out and defend that the best that they can because they make a lot of money with the interest rates being on average 19% for them.
It's literally the same thing as how brokerages used to operate. When you had a $9.95 ticket charge, $3 each way for commission, it was impossible to trade.
That's a good point. And a lot of people thought that those commissions coming down would destroy the industry. Lo and behold, made the industry flourish even more.
Yeah.
So that's why I don't believe what they're saying. I think it's going to be an interesting thing. That's why I haven't really placed a trade yet. I think it could end up being really interesting here in these banks.
Yeah.
Sorry, not just banks.
Citigroup has the most exposure to credit cards, I believe, besides for JP Morgan. Don't take that to the bank, but if that news is going to persist, which I don't think it will, if it's something that Trump tweeted out, I think it's one of those things where it makes an immediate impact, and then over the weeks people forget about it and never comes back into the conversation.
Yeah, it could be very interesting. It gives more power to the consumer at the end of the day.
I got the list for you. Capital One Bank. Wait, when is this date? As of May last year. I'm sure you can find something more recent, but I'm sure it's not that different. Bank companies with the largest credit card loan portfolios. Capital One is number one after the Discover acquisition. JP Morgan is second. Thomas, you're right. Citibank is 3. American Express is 4. That's the list that I'd be looking at when I'm starting to pay attention to these names. I think you should have those on your list. I think you should have them in that order, who has the most, because when it happens, we saw Capital One making a big move yesterday. You saw American Express making a big move. JP Morgan was kind of, but didn't get rid of that much. Citi kind of too, but not as much. So Synchrony Bank is number 6. That was actually moving a decent amount yesterday. So I'm keeping an eye on that, man.
Yeah, we're gonna get into these here. These here banks. Premium's not great. Maybe I'll skip Citi. I'm already in Wells Fargo. But Citi, I do like that call out of the top 3 that could be hurt the most. But yeah, Citi, 4-point expected move on $116 stock. Not that high. You kind of have to go really near term if you're trying to make it work. 120. I guess this isn't too bad. If you did the 120, 113. 7 points wide for $6. It's tough when you're paying right up against the spread with, and you don't have a lot of premium. The times where I'm more comfortable paying $6.50 or $7 for a 7-point wide spread is when I have $300 in premium that I know I'm going to get. When it's 90 cents, you're taking a lot of risk for very little reward to the downside. So I'm gonna have to skip that one. But yeah, very interesting. I was filled on the Wells Fargo one. That is $3.95 I got filled on for the 95.90. So long the 95 March, short the 90 Jan, and we'll see what happens. But if there's a neutral move or an upside move, I'll roll that 90 put from Jan to Feb. All right, what else we got here? I see some people chiming in. FIG is close to all-time lows. Do you see any upside anytime soon? Figma. Oof. I mean, it's tough. This is just a wild chart. It is tradable. 8 million shares today. Plenty of expiration choices. Markets aren't that crazy. So yeah, if you wanted to do something, you totally could. What else we got?
No interest at all.
Yeah.
Dog, leave it alone.
Let's see. Yeah, nothing more frustrating as a trader than getting stopped out of a position and the market immediately ripping the other way. Yeah. That's the nice thing about spreads. If you're doing 0-day stuff or near-term stuff, if you just spread it off in a way where you're accepting max loss, then you don't have to put a stop in because your stop is already there with your spread max loss, and you have the whole day to let it play out.
Yeah.
yeah, market's moving lower right now. But yeah, that's the nice thing about like SPX 0-day or 1-day stuff is if you just spread it off and you're comfortable with the max loss, you can hold it all the way through, and you'll have max losers, but sometimes you'll get that intraday reversal. The Walmart move is crazy.
Still going
I
on.
looked at it.
Ooh, wow.
Okay.
Did,
Okay.
Walmart suddenly buy silver and put it on its balance sheet or something?
Yeah, what's going on there?
Probably.
How come nobody's doing that? How come nobody's like buying silver and buying gold and putting on their balance sheet like MicroStrategy's guy?
Yeah, like they did with Bitcoin.
Yeah.
Yeah. Should. Walmart releases floors are made of silver. Another trade I saw hit the tape yesterday in gold. 450, 470 Feb. Let's see.
LD.
450, 470 Feb. If this is a short call spread, I assume. 450, 470, $260, $1,700 in buying power. It's a little heavy on the buying power side for the max profit, but I don't mind it. It's a long ways away. Sitting at highs. Last question here. How do you recommend getting short with significant call skew? If you give us an example, we can take a look, but usually if there's no premium to sell on the put side, we can just do a zebra, short-term zebra trade, something like that. Yeah, let us know what product you're looking at. But yeah, the call, it's easier to get on the call side when you have call skew. You could do something like a broken wing butterfly, which is, you make money to the downside if you route it for a nice credit. We have a little upside kicker, and it's defined risk to the upside. Another thing to consider, you can make it wider since you're playing into that call skew. But yeah, depends on the premium, depends on the product. But usually we'll go with a zebra or some kind of defined risk trade. All right, I think that's it for us. Thanks for tuning in, y'all. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel, as well as tastylive.com. Check out the big deal on Tasty Trade, tastytrade.com/big deal. 4% cash match up to 10K on new accounts. So check that out. We've also got the referral program going, tastytrade.com/referral. You both get $100 if you bring in a friend. They deposit with 2K. Send them your referral link. You can find it on the Manage tab on Tasty. Great promo. Seeing a lot of people coming through that. Welcome. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. So we'll see you then. But have a great rest of your trading day. Peace.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
designer, they wanna buy me, baby, I'm too pricey. Yeah, I'm cherry, I'm nice things, I'm ice cream, I'm melting. Well, I'm high speed, wanna bet, look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip, everybody count to 3. Okay, you wanna see? I'm on the runway, telling them, tell me something. Said I love it, I'm working, I'm perfect, and you know I know I'm worth it. Well, I'm high speed, wanna bet.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We've got another really volatile market. We got a little bit of a sell-off, a little bit of a rally, selling back off again right now. Are we going to test new lows of the day? Who knows? We'll see. We'll get into all of that. I hope everybody's doing well. But before we do, Gus and brother, how we doing today?
Oh, I'm feeling great. I had to take a couple weeks off caffeine while I was dealing with some stomach issues.
Okay.
So a little 2-week tea break from caffeine that'll fully reset you. I feel like the first Ethiopian to chew a coffee bean right now. I'm electric. I've only had like 80 milligrams of caffeine.
I've just smelled the caffeine so far.
Oh yeah, yeah. It's just I've had like a cup and a half of tea. Like nothing crazy at all. But oh man, I'm wired. I'm ready to get into this thing.
Yeah, well, I love that. I mean, the market's volatile right now. As you know, it's 1 o'clock Eastern, but 12 o'clock Central. And we tend to get a little bit more volatility kicking into the market around these hours. So it's always nice to hop in on here. Hope everybody's doing well. Let us know what you're trading, what you're looking at, what you're managing. Silver Good Lord, silver. We're definitely going to get into all of that. But before we do, we can jump into the Tasty Trade platform. We could jump right in. And as we're doing this, what's new, brother? What's new? It's been 24 hours. I think a lot of the Chicagoans are still riding the Bears high over the weekend. I know that was really lit. That was, Saturday night?
Certainly are.
Anything new over the last 24 hours as we jump in here?
New with me personally? Yeah. No, not really. New with my portfolio, though, I have liquidated my Firefly Aerospace position.
Okay.
I had naked calls in there. Pure gamma play, I was never really counting on those even beginning to get into the money. But got another nice move today. So got out of those for a 3x, which I am quite pleased with.
What was that? AEO?
No, FLY.
FLY.
Yeah, fly. But yeah, and I did it at open today. So this move down is irrelevant and has validated my exit for me. So feeling like I got out of that at the right time. I bought 60 calls, dated like 90 DTE at 20 and sold them at 30. So that's always
a nice move.
Always nice when things work out that way. Else, yeah, I mean, I'm happy to be long VIX as we're finally getting a little tiny bit of expansion.
Take it
in VIX. It's hilarious that 16 can be considered expansion, but that's the environment that we're in right now. And then Bitcoin rallying a little bit for me as well. So my deeply long IBIT and my slightly less deeply long MicroStrategy both paying out. Happy camper.
No, Bitcoin around 93,000, just above. Keeping eyes on that. A little bit more volatility in the VIX. Beggars can't be choosers. So, I mean, we'll take what we can get so far. But maybe more expansion to come. I mean, I'm looking forward to it. So I hope that position pans out 100%.
Oh, yes. I'm still very red on both of those positions. Don't get it twisted. But just happy to see a little
Oh, it's coming around. Trust. It's coming around.
Reset those adenosine receptors, Gus. Yes, I certainly have. Meanwhile, I've had 200 plus milligrams of caffeine upon waking, along with some modafinil. I'm not familiar with that substance. I'll have to check it out. Love a good substance. But yeah, usually my typical routine is to take a 100 milligram caffeine pill like right when I wake up with breakfast, just to kind of give me that boost. So I was dragging for the first few days without it, but I was dragging the whole
feeling
2
good,
weeks
feeling
without
great
it.
now.
I'm not going to sit here in front.
Today's the best day ever.
Yeah, exactly. Exactly. Yeah, it's like it's like the first time when you're 12 years old and you get a Red Bull. Fired.
I could have swore growing up though, energy drinks never affect. I used to drink Monsters, and I used to literally be like, "Bro, I swear I don't feel anything." And not until I actually became an adult, I actually felt an effect of caffeine. But caffeine never really affected me much.
It's certainly
I could drink one and go to bed. I could drink a coffee and go to bed. Me and my brother would talk about it.
Interesting. I think that probably still hurts your sleep quality in ways that
for sure, 100%,
didn't realize.
100%.
Yeah, I don't know. I certainly different caffeine sources affect me very differently, which is always an interesting calculus. But the first time, I mean, I would drink some Red Bulls and some Monsters and stuff when I was like 13, 14, 15. But the first time I found some caffeine that I felt like actually worked was when I started drinking Bang Energies in high school, which also
those got very popular.
Yes, yeah. And they have a whole slew of other amino acids as well.
They got a slew.
We would we drink those before baseball games and stuff. But yeah, when I used to pitch back in my prime, I would have while I was in the bullpen warming up before games, I'd always have a Bang sitting over there on the edge. I'd be taking a sip of that.
I feel like the influencer marketing for Bang energy drink went absolutely crazy.
I think so.
They were in so many videos.
Yeah.
I mean, they were so popular.
Yeah, I mean, it just came out of nowhere, and they had
flavors.
Yeah, that was like the pinnacle of a product that was like 18 plus, but it's just totally targeted at children. It's like 18 plus product with the flavors are like cotton candy, bubble gum.
Cotton candy was the first one that came to mind. Literally, Bang had like a cotton candy flavor I was thinking about.
It's like cotton candy, bubble gum, Jolly Rancher. Like what are we talking about here?
I mean, in terms of the portfolio over here, nothing as exciting on my end. We're taking a quick look at the micro NASDAQ, which we'll get into here in a little bit. Still sitting in a little bit of Netflix, still kind of right on the dance floor there. Our short put is getting tested right now. And then some silver. You know, our short call is being tested right now on silver, but this thing has been moving. I mean, we're getting a little bit more of a pullback, but to look at the daily chart earlier today to see the gap up, I mean, just absolutely insane to see. What a sight to see. Like, when the dust actually settles, I'm just really curious, you know, how this picture is going to look. But we're at the top of the Christmas tree right now. It's starting to feel like.
Indeed. I
mean, goodness gracious.
I'm getting internal communications from producer James here saying, Gus and Errol, the people want to know who is the better trader between the two of you. I think
Depends
it's
on the day.
I think it's Errol.
Depends on the day. It really depends on the day.
Errol certainly has greater depth of market knowledge than me. I might be slightly better at picking directionality, but our styles are just so different. It's hard to compare. It's like, it's the. I wouldn't equate us to LeBron and Jordan, but it's like trying to compare different eras in basketball.
Yeah,
It's like, the 90s was more defensive, more low scoring. Scoring records might not be as relevant these days. It's not indicating what side of that argument I'm on by any stretch of the imagination, but
Depends what the market's doing that day.
It
really does.
I think it's probably you.
No,
Mike.
it depends. It really does depend what the market is doing that day. Because I had a short delta bias for quite some time over the last few months, and we were able to scoop up some long delta on the overall market.
Yes, and to everybody, as you said, top of the Christmas tree. I think maybe a good analogy here, but I just don't know. Every time I think that, it just goes higher. To everybody who was in chat yesterday saying that they were long silver, Errol and I both got short silver. You're welcome. We've pushed it higher for another day, as I said that we would. So I think as long as we stay short, it'll keep pumping higher.
Maybe so. I mean, the last 4 days is, again, just leaving me speechless. Kind of have the same reaction and same outlook on silver as we did yesterday and the day before that. So
SLV to 300. Maybe it's all internal manipulation, so we can get back on the gold standard, but we'll do it with silver.
And maybe that's what it is.
We need the value of the U.S. silver reserves to exceed the value of the currency that we have, and then wham, it's fixed.
No, maybe that's what it is. Because I mean, if we take a look over here at gold, I mean, gold is moving just as aggressive, but I mean, not with as much tenacity, right? Not as much tenacity on gold as there is on silver. So we'll keep an eye on that. I know platinum we've been neglecting a little bit more, so we'll take a look at some of the platinum futures. Not making the high like gold and silver was making, but it still kind of has a little bit of a compression, a little bit of consolidation going on. Whatever.
This looks reasonable. I mean, this is
reasonable.
This looks
right?
like what I've been expecting silver or gold to do for forever. And gold did have a slight period of consolidation, but silver has not taken a breath at all. I mean, it's just been straight to the upside. And then copper is our other one. Let's get some HG action.
Real quick, what is that? MPL? We might have to take a look at some of the
HG. I think HG
for the micro platinum, maybe.
Some numbers. Oh, you're looking for micro platinum?
Yeah, we'll circle back around to the micro. We'll circle back around to the micro platinum, but maybe we turn our eyes a little bit on some of the platinum futures too, as gold and silver is playing out right now. It still feels like the metals are in play. You know what I mean? So it feels like these are in play right now in terms of there being opportunity to the long and short side. And since platinum hasn't made new all-time highs, it looks a little bit less volatile. So I don't know. Maybe we'll circle back around to it. Maybe that's a little bit easier to trade through all this volatility.
Kicking myself for not buying that dip on copper.
I know. So we were looking at that the other day, right?
Yeah. I mean, it seems so obvious that that's something that I should have done. At this time. What's going on, Greg? Soul Train.
Yeah, no, bro.
Steven, good to see all of you. Soul Train, Big League Chew is a good poll. Big League Chew, you'd be the man in the dugout if you had a bag of Big League Chew.
Oh, yeah.
Steven had a good question. I'd like to short the airlines via naked calls, but there's not much premium there. Have you guys done an actual short sale before, not with naked calls? If so, can you talk about the process? I have not. Is the short answer on
an actual short, so just like selling the shares?
I believe that's what he's saying. It's just straight up shorting the shares.
Yeah.
In light of their, well, I guess in lieu of there not being premium available on the call side. I have not. Yeah, I wish I could be of more help.
I started the
I would say you should weigh how big you believe the downside move is going to be and evaluate whether long puts would be a better angle, to save you some capital. I don't know what your capital restraints might look like there.
My first 3 years into the market, I was like almost purely a short seller in the small cap space. So the only difference is just that overnight risk for shorting shares overnight is just
it's true.
The fact that a company,
especially when we're talking about airline earnings,
100%, especially because if it's cheaper, your risk is a lot larger than if you were to be long. So, a stock can go up over 100%, which that's going to be your max risk if you're getting long. So that's something to think about, something to pay attention to, a little bit more margin whenever you're shorting shares, but very similar to just shorting a futures contract. Very similar, at least, in terms of the process and execution.
Yeah. I'd be inclined to agree. I think that's well put. Guys, please congratulate Google for passing the $5 trillion valuation. Can I get applause sound effect, please? Good job, Google. Let's go, Google. There we go. Thank you.
There you go. We're applauding a fish for swimming.
Thank you, wonderful production team. Yeah, I actually wasn't aware that Google had eclipsed 5 trillion. I guess did they fly straight past Apple then? I suppose they have to because Apple was not over 5 trillion.
Google's been on the run.
Yeah, this has been insane. And Google is one that I kind of would have. I think I said on air some months ago. Maybe 6, 7, 8 months ago now. But I was saying I think if you're picking a stock that could potentially be out of the Mag 7 in 5 years from now, that Google might be my choice just because their search engine revenue could get cannibalized. I understand how many other income streams that they have between YouTube and Waymo and all these other things, but Google AI still sucks. That's what I know is that AI summary still lies to me all the time. So I don't know, but I suppose people are just bullish about the future prospects, and I'm inclined to agree. And I am really high on these driverless taxis as they continue to expand. It starts to seem more and more feasible to me.
Yeah, no, I'm just looking at the last 365 days on Google, and they said to put some respect on their name because we're talking about the metals, we're talking about the indices, we're talking about all these names, but Google has been secretly putting in some insane numbers to the upside and actually trading at all-time highs, as we speak.
Yeah, maybe Google secretly has a bunch of silver.
They might. That might be the new strategy, right? In MSTR, the Bitcoin strategy, we got the silver strategy.
Yeah, MicroStrategy doing
that
the Bitcoin.
might be the case.
Can you imagine how dumb it would have seemed like a year ago when MicroStrategy started doing the Bitcoin thing, if some other company was like, we're going to do this with silver? Everybody would be like, oh, you're
outrageous.
What are you talking about? Silver, crypto is the future. Silver has certainly outperformed crypto in just about the entire rest of the market.
Pretty much.
I was seeing all kinds of crazy stats like in the closing days of last year that was just like, if you bought silver on December 27th, you outperformed the S&P 500 this year. It's insanity.
It's nuts. Puts it into perspective. We can jump over to the TradingView platform here, and we can take a look at some of these metals, some crypto, and some of these other names over here. But not too much going on in the micros today. Another, I guess, short-lived day today in NASDAQ. Just to give a quick update, we didn't do anything yesterday. If you had missed yesterday. Didn't do anything in the markets yesterday. We just had a rip out of the gate, and then we just grinded up all day. Just made a new all-time high, higher low, higher high, higher low, higher high, and just grinded all day pretty much. And the volume was fairly low, relative to what we typically see in something like NASDAQ. But we took one short today. We're looking to get short near our value area low. I personally didn't like the risk to reward on the trade, and I was just a little bit late to the trade.
Oh, Google is 4 trillion. I extended the wrong congratulations. My apologies to cut you off.
No, what was that?
4 trillion for Google, not 5.
What was that again?
What?
What was that again?
Google. Yeah. I had said 5 trillion. So Soul Train, I suppose, fat fingered the information, and then I just blindly trust you guys in chat, guys. You could tell me anything is going on. If you guys said, oh my gosh, we just nuked Venezuela, I would be like, oh my gosh.
I'd be like, we might have.
I'd be like, man, the market really isn't reacting to this very much.
I'd be like, check oil right now.
Yeah, what's happening with the oil prices? What's happening with the uranium prices?
We'll touch on some of the oil too at the same time.
Does uranium move if a country drops a nuke?
It might move a little bit.
Let me know.
How does this affect the market?
Yeah. How much uranium is in one nuke?
That might affect the market a little bit. But no, we tried to take one trade today on micro NASDAQ. We sold off a little bit from the value area low. So we had initially gotten short, right? We stopped out 7 points later because I was like, you know what? We're going to reposition if we get a little bit closer to it so that we have a little bit less risk on this trade. And we never got that. So I had to watch the market run a whopping 100-something points away without me getting into the trade after just exiting the position. So sometimes I guess you got to bite the bullet. Sometimes trying to fish for that, very well sought out risk to reward on a very specific trade. Sometimes you might miss a move. Sometimes you might not get a better price to get back in at. And we kind of fumbled it today on this one. So the market sold off. We exited our trade. Let's see if we zoom in a little bit here. I think in less than 10 seconds, we changed our mind to get out of this trade here. So that's kind of how the cookie crumbled today. Now we're kind of rallying back towards its highs. And will we take out the pre-market highs or the morning high that we put in today? I don't know. We'll see. We got a little bit more time on our hands, but it's looking like the market is now choosing to trade in between the day's high and the day's low. But getting a lot of consolidation now. But I'm not mad about the volatility we've seen. Right, we got a little bit of a pop in VIX, which is nice to see. Nothing too crazy, but we won't be greedy. We'll take whatever the market can give us. I mean, if we take out the day's low, if we take out the previous day's low, maybe we get some more volatility in the market. Maybe we get some expansion in the volatility index there. But with that being said, we'll keep an eye on it, and we'll continue to be patient here.
Yeah, certainly a little bit of channeling going on. We did make, we moved like cents higher towards the 7K SPX mark off open today.
Yeah.
Before beginning to sell back off, but this one's been a slow churn compared to the way that we went flying through 600.
It has been.
We're really just eking up on this one. And yeah, as you mentioned, now starting to work back down just a little bit today.
Interestingly enough, too, you can kind of see this play out pretty well here. Kind of just like the difference in volatility from ES and the difference in NASDAQ. Like over here, you can see we put in the pre-market high, and then we just kind of consolidated a little bit out of the gate. And then if we go back over and we look at, NASDAQ, if we make that a little bit smaller. If we look at NASDAQ, we got that same exact spike that we saw in the pre-market, but with this consolidation, we have some spikes to the upside. So in that way, you can also kind of just see the difference in personality that, NASDAQ will have relative to the S&P 500. And to each their own, depending on kind of what you like. But it's kind of an example of the lack of volatility we'll see on ES at least.
There's a spirited debate going on about what is inside nukes right now: plutonium and uranium. Theta Trader said deuterium. Deuterium? I think I have that right. Don't forget the deuterium. Am I off base in saying that I think deuterium is like what happens after the nuke is dropped? Uranium becomes deuterium. I don't know. Chemistry was always a weak suit for me academically.
Deuterium. Honestly, it wasn't one of my strong suits, but I enjoyed it. It wasn't one of my strong suits, though, but it was intriguing.
It was never intuitive to me. I love physics.
Yeah.
Physics made a lot more sense, but chemistry, I could never get there. Covalent bonds, man. I don't know.
Yeah, no. I'm not.
Throw out some random chemistry terms. You guys are talking about elements that are in that like bottom section of the periodic table. I know that much.
A little bit of a pullback over here on silver now. We got to consolidation out of the gate. Again, super volatile product. If you're looking to get involved here, maybe gold is going to be another option that we can look at. It's a little bit less volatile, and then on top of that, the multiplier for the contract is lower, so it's not going to squeeze you out of your position. It's not going to get too hot in the kitchen too fast. Get involved a little bit in some of the metals.
Yeah, I'm really interested to see whenever the correction comes, because I think certainly some type of correction must come through in these metals. I don't think that there is a real, and maybe there is, because I've only ever been wrong about these things. But I would be shocked to see a world where all of a sudden we just establish a new level at these highs for the metals and begin to run sideways.
I would literally be like, this is for sure a simulation.
Yes.
That would be like the equivalent of just seeing like a bird flying in the sky and then it just like pausing. Like, what just happened?
Yeah, or like when you're driving the opposite direction as a plane and it looks like the plane.
No, exactly. That's what that would feel like if we just like held those levels and then just like acted like we don't.
Yeah, exactly. All of a sudden we're just like,
that's what it would feel like.
SLV is at 80 now. This is what silver is worth. Yes, I would be shocked to see that. So I'm interested to see whenever the correction comes through, what that looks like in practice, and whether that's just one day and suddenly it all gets whacked and we get the big correction, or if it's a more gradual thing as we what if it takes the elevator up and the stairs down?
It could.
And that's plausible.
No doubt.
Everything's been backwards with this.
No doubt. Just never would have thought we'd be looking at this parabolic looking type action on something like silver. So did not have that on my bingo card.
Yeah, we should grab a screenshot of this, wait a year, and then just walk around the office and ask people what stock and like time window they think this is, and chuckle as everybody says, "Oh, that must be Peloton in 2020. Oh, that must be Palantir in 2023."
That's GameStop. I would like GameStop.
That must be
That's
GameStop.
AMC.
Yeah, exactly.
Yeah.
Yes, and it's a metal. It's insane to get this kind of move.
Oh yeah, 100%.
Okay, copy that, Theta Trader. Got it down. Deuterium is a component of heavy water along with other components for division or fusion reaction as a moderating agent. Oh, we got to moderate it. I see. I've seen Oppenheimer.
I haven't seen that yet, but I heard a lot of good things about it. I heard it was pretty good.
I really wasn't blown away.
Really?
Yeah.
Oh.
It was kind of I don't know. I went in with the wrong mentality. It's more of a drama than it is than it is focused on the history and science of it, which I suppose in a film context probably does work a little better. But
that's valid.
I'm a nerd. I wanted to hear about the
That's valid.
geopolitics.
You know, one of the best ways to manage your emotions is to manage your expectations.
It's true.
Right?
It's true. Yeah. Well put. Bars.
I mean, you went in with the wrong expectations. Now you're disappointed.
It's true. It's
right?
true. Yeah, they were too high. Well, they were just different. I wouldn't even
It
say
was different.
They were
Yeah,
too high.
there we go. No, I mean, with
saw
that,
the Barbie movie, I didn't double up.
I didn't watch the Barbie movie either, but I heard a lot of good things about it, to be honest.
I've only heard good things about it.
It was box
myself.
office and everything, right?
Yeah.
I heard good things about it. Quickly, let's take a look at some of the crypto products before we head out of here. So,
Yeah, the metal of the future, if you will.
metal of the future, if you will. I mean, it's so funny because this was supposed to be like the new gold standard, right? Like that we had those those conversations were happening not too long ago. But I don't know. It's such a speculative asset. It's tough to box it in with the new gold standard. I see the vision though, but I think it's a little soon. But with that being said, I mean, 93,000. We're making waves.
Yeah, I mean, we straight up logged a red year on Bitcoin last year, right? I mean,
Was it a red year officially?
I believe it just closed down on the year.
Yeah, no, I'll have to double check. But I know it hasn't really gone anywhere. We really didn't. I mean, we rallied, but I mean, we had a pretty aggressive pullback before we ended out the year.
Yeah, I said jokingly at a few points last year, I forget what the exact trend is, and I don't necessarily think trends like this are actually substantiated in reality at all, but I believe Bitcoin, like for the entire history of Bitcoin, has done exactly 6 green years and then a red year in that exact pattern, or perhaps it's 5 and then a red year. I can't remember exactly how it worked, but last year would have theoretically been a red year within that trend, and I think that held up.
Yeah, I mean, if we go back to 24, beginning of 24.
What world are we living in where Bitcoin looks so much healthier than silver? What the heck? Bitcoin is supposed to look unhealthy and like a vertical line.
Completely agree. I mean, silver is looking like Bitcoin even in 21, or I mean, it's looking like Bitcoin in 2017, I think it was. That's the state of where silver is looking like.
Yeah, and note what happened off the top in 2017. We came crashing back down before we stabilized a little bit. Jesse.
100%.
What's going on, Ranch? Good to see you. Yeah, I'm trying to see if there's anything else catching my eye here. We talked Pinterest yesterday. I don't need to circle back on that. Ethereum not really tracking with Bitcoin, which is also fascinating to me. That, you would expect this to be something of a silver gold situation, but while it has recovered a little bit, the recovery has not been as pronounced as the recovery that we're seeing out of Bitcoin. And then, yeah, Affirm, the big NPL, which I am quite short, is doing quite well, which is not good for me, although intraday today is sinking a little bit. So pleased with that. Got a long way to go. Affirm to, I don't know, 30. It's kind of what I'm looking for here. These buy now pay later services, I think they're vaporware. I'm Michael Burry as it pertains to these things. One of these companies will default in the next 5 years. I don't know if they will get bailed out. That's sort of a big question mark, but I am confident that it will happen to one of them. You can't give this many loans to the lowest quality borrowers and not default. I don't know if I'm guessing right with Affirm or if it will be Klarna or if it will be Afterpay. But they'll probably wind up getting bailed out anyway, and I'll be right and get screwed anyway. That's the way that these things go. Banks could never go to zero.
We'll see what we get. We'll see if we get a new low on the day. We're kind of creeping down there a little bit. We have the day's low right now sitting at 25,805. We have a couple hours left of market open to at the same time. Most likely not going to be looking to take any more trades. I mean, we have a value area high sitting near 25,759. I believe that should be accurate from last time. Double checked on that. Should be sitting at around 25,700. So let's readjust that a little bit. Who knows if we'll make it down here, but we'll watch how price responds near this value area high. The market has shown us to trade within imbalance so far, so it might be a little bit more directional to the downside until, or if we can retest the day's high. But until then, anything else top of mind before we wrap for the day?
No, closing remarks here would be Theta Trader. That's an incredibly sharp comment. I'm not too hungry, so I'm having a protein shake with olive oil. Not bad. I'm guessing Gus has tried this as a gym bro. Absolutely. I've had more than a few protein shakes with olive oil in my day just to get some extra calories in there. And yeah, you really don't notice it. If anything, I kind of think it smooths it out a little bit. You just have to shake it kind of consistently because it does want to rise back up to the top. And the worst thing is when you're doing protein shake with olive oil and you leave it in a cup holder for like 10 minutes, and you go to take a sip, and it's just straight olive oil. Yeah, you gotta remember to shake before you sip every single time. That's my approach.
Shake and sip. Wait, what deep psychology were we touching on? What were we touching on?
It was the expectations thing.
Oh, that's funny.
Yeah, that was
funny.
bar.
That's funny. No, with that being said, make sure you shake up your protein shake before you sip it with, especially if you got oil in it, because water and oil separates, guys. Gotta remember. No, that's hilarious. With that being said, that's going to do it for today's segment. Be sure to stay tuned for more segments coming on next. Thanks for taking the time to hang out with us. We'll catch you guys next time. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We're back. It's Tuesday, January 13th, 2026 still. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler.
What's up?
Jamal, what's it like rooting for a sports team that wins in the playoffs?
I mean, it's nice. It's nice. You don't take it for granted because it doesn't happen all the time. It's you got to appreciate it, and you got to appreciate the tough times too. Really is what it boils down to. The better thing is, look, it's about ownership, okay? I mean, let's just be honest. It's about ownership. A lot of this is probably happening because the old lady is gone, R.I.P. I mean, it's tough. I get it, man. I'm here with you in spirit. I am.
I don't think you are.
You know what's funny? The only other person that I know really well that is as big a Jets fan is my friend Todd Kahn. Todd was watching the game with me and some other friends at my local bar the other night, and he literally, I don't know if he meant it, because I know how you guys are. I don't know if he meant it, but he said he was renouncing his Jets fandom. I mean, he's been in Chicago for over 30 years. Truth be told, that probably should have happened already at some point. I mean, I grew up in Miami as a kid. I've obviously retained the Miami Hurricanes fandom. That's not going anywhere. We went through some rough times too, but I mean, sometimes I feel like, for you live in New York, you're born, but you still live there. Obviously, a lot of people live and grow up in New York and it doesn't leave them. I totally understand that, but he probably should have left his Jets fandom a while ago. He might have actually done it during that game. We'll see if it's real.
Yeah, I feel like after I stuck around following the butt fumble, that kind of cemented myself as, not abandoning ship.
I mean, you're there.
Jamal,
You've never left. There's no reason for you to. For somebody like him who's been here for probably more than half his life, why are you still rooting for a
the
team?
Jets don't play in New York, Jamal. I could have easily jumped ship to the Buffalo Bills at some point in time.
Nah, that's worse though. I think that's worse.
Well, listen, if only to underscore how bad it was, I'd encourage people to go watch the 2020 episode of Curb Your Enthusiasm, the ugly section, about what the New York Jets fandom does to one of Larry's friends. It's not great. Not great, Bob. But, I'm not looking at what's going on in some fictional world of Curb Your Enthusiasm today here, Jamal. My attention is down in D.C., where typically all eyes are on 1600 Pennsylvania Avenue. I think that we should be paying what's happening on 1 First Street. 1 First Street, of course, is the address of the Supreme Court, Jamal. Of course, as everyone knows that. SCOTUS tariff odds for tomorrow. Will the Supreme Court rule in favor of Trump's tariffs down to a meager 27% chance? It's up slightly over the past few days following the fact that the opinion day was pushed off from last Friday until today. So perhaps some traders think that that's a sign that the Supreme Court's going to allow the tariffs to stick around. I'm curious, Jamal, with something priced into a 73% chance of tariffs being removed, if we do indeed get that announcement tomorrow, because it is expected tomorrow, do you think the market already has all the good news priced in?
What's interesting? I feel like it might a little bit. The market doesn't seem to be showing any chances of really caring about this. However, individual names have probably shown it more than anything. Look no further than Costco. Costco has probably been the number one name that has really moved off the potential chance of these tariffs getting shot down. So I paid attention to that. Nike is kind of slightly moving as well. It's mostly the retail names, right, that we saw really get hammered as a result of tariffs. And you've been seeing some of them sort of move to the upside slowly over these last week and change or so. Restoration Warehouse RH is another one of them. So I think more than anything, this is more an individual specific company thing than the market. Sure, obviously, if you get a bunch of names moving in a positive direction, maybe the market ends up being positive too. But I don't expect I don't expect a 1% move to the upside if for some reason this happens. I don't see it. I mean, at least the market's not showing me that. But I think individual names certainly will move more than anything.
Yeah, VIX 1D right now is at 9.78, Jamal. It's basically at the highs for yesterday. So whatever market reaction we saw today around CPI, kind of chalk up some similar type of price action to tomorrow, at least the base case scenario. We're kind of skating through CPI, looking through to the tariffs. CPI came in at 2.7% year over year. Depending upon the headline of the core, it's 0.2, 0.3%, which 0.2% month over month run rate. That's going to get you a little bit north of 2%. If you sustain that for a 12-month window, it is moderation. I suppose, does that matter in the face of this tariff ruling, or heck, does any data matter for the Fed Reserve right now moving forward after the weekend's news? Or will they just turn and point to the scoreboard and say, Mr. Trump, 5% growth, unemployment rate below 4.5%, CPI is still north of 2. This is a great economy. We don't need to cut rates anymore.
I'm with you on
so
that.
Perhaps the tariffs.
Perhaps
the tariffs matter more.
Does anything matter? Because when you look at the FedWatch tool, I mean, there's no sight of any possible chance and change in rates for, I don't know, not until July at the very least. And I mean, how can you blame them if inflation's kind of creeping up a little bit? Although they say, the tariffs, as much as they might have factored into this, it doesn't seem as they've passed the costs on a whole lot. Here we are in a market that's kind of trading sideways.
And so the rally has been snuffed out a little bit here today. 69.98 right now on ES. It's a loss of just under 20 points. We did tick into a new high for the day session, for the month, for the week, for the year, for all time, briefly at 70.36.25 here in the ES H6 contract. Maybe chalking this up to a bit of a failed breakout starting to develop up here, Jamal, although it is just a single day and we haven't really lost any technical momentum. I actually just want to start with the sector performance here because it's kind of an odd day when we take a look at what's going on around the horn. 25 sectors that we track here on Futures Power Hour. I'm counting 18 of the 25 in the green, and yet you are seeing this heaviness in the indexes here. The S&P is down by 0.25%. The Nasdaq's down similarly. The Dow Jones is also off a little bit more, given some of the news to financials and the credit card companies. The Russell is moving up. So just let's go here backwards, suppose, today. What do you make of the fact that the indexes are coming in, even though broadly speaking, most sectors that undergird this market are trading to the upside?
Honestly, I just consider this more sideways action than anything. I think the indices look great. I think they look poised for higher prices. But I mean, if I'm being real, Chris, I feel like there's a little bit under the surface. I've been saying for a long time, why shouldn't markets go up? There's really no wall of worry. Well, we're starting to stack a few bricks, and those bricks in singular do not create an issue. But I think if you get enough of them, and who knows what the next couple may be, we could see some pullback at some point. I mean, this Iran situation, you can't exactly overlook it because you're starting to see how it's actually affecting. It's the one thing that did affect oil. Venezuela did not as much. Iran seems to be starting to do that. This credit card situation, I think if you have if you get to a point where that really affects not only these lenders but these banks, I just basically refresh myself on who has the largest loan portfolios, credit card loan portfolios, and Capital One is at the top of the list there. But looking at that, I think doesn't live in a vacuum. That could become an issue. It sounds like, of course, a lot of those bank CEOs and a lot of those lenders are going to fight this thing tooth and nail, especially with no real legislation in place. So I think those are the things to keep an eye out for. I don't necessarily know if I want to make a trade in front of those things. I just want to see how the market reacts to it. But I do feel like those bricks are starting to stack up. And otherwise, in a market where otherwise all of these indices, the charts look great. I mean, the charts look great, honestly, when you look at whether it's Dow, NASDAQ, or S&P. Obviously, we're not that far away from Dow 50K, at least in the futures. When you look at all of them, they look great. But you wonder if at some point these sort of little things, these little nagging things are going to stack up and become an issue.
Yeah, the banks in particular following JP Morgan's earning results today. This would actually be the sixth earnings day in a row where the stock has traded lower following the release of its earnings, potentially signaling a more significant breakdown. The highs that we had in September, Jamal, they come up near $54.50. We punched through them back in the middle of December, and clear as day, like clockwork, former resistance becomes support. We're challenging that here right now. In fact, we did touch the lowest level of the year right now in JP Morgan and bouncing off the 50-day so far. But I point out JP Morgan and XLF. Well, this is JP Morgan. That was XLF. JP Morgan's already cracked. You have that resistance here in November, breaking through here now at the start of January, getting to the midpoint of the month. So the biggest bank is breaking. The financials seem to be weakening up a little bit. The regional banks, they're in a little bit better shape, but this breakout isn't exactly gathering steam. And then you say a name like SMH, which while higher on the day has come off the highs a little bit here. I point out SMH and the financials, XLF, only because they have been two of the stronger corners of the market at the start of this year, really over the past month. And if they're starting to lose a little bit of momentum and they're, for exogenous reasons, a China NVIDIA chip ban, for example, is announced earlier today, or these credit card caps, that's nothing fundamental wrong with the business or the particular companies unto themselves, but it's changing exogenous conditions that could short circuit these moves up. And if they do go, that poses some problems for us here as the S&P and the NASDAQ try to break out. You're losing your engines of steam, if you will.
Yeah, and that's the thing. The engines of steam, I think, is the one thing that we got to preserve for markets to keep going higher. And that's you wonder if at some point or another these things are going to combine and cause the markets to lose a little steam. But I mean, maybe we're just looking at a situation that has been so good and wondering how could it eventually go bad. Because for the most part, this is exactly the type of market you want if you're a bull. I mean, things are getting quiet right now. They're not violently moving to the upside, and I think you want a little bit of consolidation before you resume a new high at some point or another. So I maybe that's what we're in the middle of. Again, this is a potential one of those weeks where we do kind of trade sideways just because we've already touched all-time highs and we're coming up on our options expiration. More than likely one of the big ones, probably one of the biggest of the year since it is January, and this Jan cycle has been around for well over a year. So I don't know. As of now, I see no reason to try to get bearish on anything. Ultimately, I'm just keeping my eye out, keeping my ear to the ground, I should say, on any escalation in any of these issues we talked about.
A lot of these software names, semiconductor names, Broadcom, AMD, Intel here up 7.5% today. Well, actually 7.8% now. I see a pretty high IVR as well, Jamal. Is there going to be any temptation as we get into those late 23, early 24 highs up near $50 to maybe looking at some short deltas in a name like Intel?
Maybe Intel more than, actually I would say yes. I just want earnings to pass by. We still got like 9 days to earnings. I don't really love to, unless it just shoots up through 50 somehow pretty strongly, then I think you'll get what I like to call volatility on top of earnings vol, and then you can actually trade it pretty confidently. Outside of that, I think that's what I'd wait for. I'd like to see a strong measured move above 50 and change.
Elsewhere in the tech space today, it's a mixed day for tech, Jamal, as we go back and round into the NASDAQ. XLK is off by 0.3%. Your NASDAQ here off by 0.34%. So I don't think there's any sort of coincidental overlap there. The Mag 7 names, Amazon's off 1.7%. You have a Tesla, which is a little bit softer as well. It's a name that last week we initiated a short put spread in underneath recent swing lows. Currently trading that at about 38 DTE left, the 415-400 short put spread. The name that's bumping up for me today that's really working would probably be Google. We finally just started pivoting through the highs that we had at the end of November and maybe breaking out to the upside. Almost like a little bit of a inverse head and shoulders pattern up here, or maybe a cup and handle sort of situation. But both Google and Google, right? They're giving us some sort of setup, at least in my view, that if that AI names here, I'm looking at Broadcom, I'm looking at Google on one side of the equation. Those are doing fine. The Microsofts of the world off 2%, the Oracle of the world off 1.5% here. There is still an AI trade going on, and there's a pretty clear dividing line about which side of the equation is the winners versus the losers here.
Yeah, you've been all over that Google move, actually. And I know we're taking a departure from the normal, but I got to call it out because you talked about this one. I think just privately we talked about it in the last week or so. And it does seem to be the leader in the clubhouse with regard to AI. And it is continuing to put points on the board, Chris, as we talk about in football. It is not worried about the competition. And you got to wonder if this is one to continue to try and get long. I think I'm going to try and get long a crab trading here. Long the Feb 340, short 2 of the Feb 6 355s, and long 1 of the Feb 370s, just Feb 6 370. So $15 wide, essentially a butterfly, but again, using the more near-term options to sort of help finance the long 340 call in Feb.
Interesting. So let's go. You said February 6th? I'm just putting this up on the screen here.
I'm long the Feb. So in the Feb 6 cycle, I am short 2 of the Feb 355s So if you just clear that out, I'm short 2 of the Feb 355 calls. And I am long 1 of the Feb 370s. And then in the regular February 20, I am long 1 of the 340s. $15 widespread. I just put it on for 480.
Interesting. Yeah. Well, like if Google and Broadcom are kind of standing out, right? They're the winners on a day where there's a lot of muck otherwise for tech. And then you have this headline that Microsoft's going to be paying for the electricity related to the data centers that it's helping build. That to me is an out for them to not build the data centers, if there ever was one. Oracle taking a bath, 1.5%. I suppose that's not really a bath for a name like Oracle. They've had a lot crazier days recently, but you can't ignore it right now. And then you sprinkle in the fact that all this is built up top of the NVIDIA framework, and NVIDIA today the China news is not helping it here. So stock picking is difficult, particularly when it pertains to the futures. But when you have this Microsoft down, NVIDIA struggling, it's a wash. And I want to see 26. Go ahead.
I think that's why we've seen this. You're right. That's why we've seen this sideways action. You pointed out some of those names. NVIDIA really hasn't done a whole lot. Oracle has been struggling to get back towards those highs. And Meta and Microsoft kind of also in the same boat. And you do have the AMDs and the Intels of the world sort of, carrying things a little bit, but it's a wash. You're right.
What's really, really interesting about this market move today is that Claude announced a new coding platform. And so anything that's basically a software company is getting smacked around. ServiceNow is down 3.4%, Salesforce off 6.5%, Adobe's off 5.6% now. Intuit is off 3.6%. Just looking at how some Autodesk, ADSK, off what now? Another 3.5%. Seeing how some of these names are responding to the latest bit of AI news, that to me is I think that's a tell as well. So maybe we're due for some churn here, Jamal. January typically not a good month after the Santa Claus rallies fails. Since 1950, the S&P 500's averaged a negative 0.1% return for the month of January when the Santa Claus rally fails, which is exactly what it did for the 3rd year in a row here. So maybe we get a little bit of a pullback, a failed breakout at the highs. Maybe the tariffs don't provoke the good news because tomorrow, as soon as we get the tariff announcement, let's say they're all taken off, the administration can announce more specific, less broad, but targeted investigations and efforts to put most of the tariffs back on in some form or fashion. Jamal, so are they really going to go away? Do we really have all that to be excited for? It could be a buy the rumor, sell the news event, given the lack of enthusiasm here. To describe it as enthusiasm at all feels like a stretch.
I know that is always the thing that we see often in markets, right? The buy the rumor, sell the news. It seems as though the rumor has been being bought. I mentioned some of those retail names. I forgot to mention, of course, the Russell 2000, which has moved to the upside in the last couple of trading sessions. I'm surprised I haven't heard you mention once, at least maybe I haven't been paying attention, the January effect. I mean, the idea of small caps moving in January to the upside stronger than some of the other indices. It would seem that that's occurring more recently. I don't know how much credence anybody puts in it, if you put in it, but it does seem to be happening.
The start of January, because small caps past 20 or 30 years have underperformed, there has been this reallocation at the start of the year where small caps can do a little bit better than your mega cap, large cap components. Something like IWC, for example, which is the micro cap ETF here, it's having a pretty good day, up 0.26% compared to, say, the NASDAQ. But historically speaking, that effect dries out by the beginning of February, right? It's like once Puxatawny Phil, or as the real ones know, Staten Island Chuck comes out to let us know about the shadows here. Jamal, we're getting back into it again this year. We haven't mentioned Staten Island Chuck around here in almost a year, so he's going to deserve his time in the sun. But like it's kind of like when Puxatawny Phil and Staten Island Chuck come out, then it all goes away. So if you are playing for, if I'm looking at the market today, has there been a January effect in micro cap, small cap? Sure. It probably has. We can make the case for that. The Russell's done well. IWC here, the microcap ETF's done well here. But do I want to bet on that now through February 2nd, February 5th? Half the trade is finished, perhaps. I don't buy it.
Wow. I've never heard you be so down about a seasonality thing.
I know.
Shocked.
I know. How dare I? Yeah, seasonality for January is not great after Santa Claus rallies fail. You really want to see a good January because historically speaking, good Januaries have been associated with very good the rest of the year. Double-digit returns the rest of the way, whereas a negative January following a Santa Claus rally that fails typically means a return of just about 6% for the remainder of the calendar year. Oh gosh, Jamal, that'd be such a choppy grind if we only manage a 6% up year.
I'm preparing myself for it mentally. I hope it doesn't happen, of course, but I'm preparing for myself for that kind of move mentally. After 3 strong years in a row, the chances of a fourth, who knows?
Yeah, I mean, Citadel put out a note earlier this month that January typically paves the path for the rest of the year 70% of the time. So you get a green January, 70% of the time you're going to get a green final 11 months of your calendar year. Jamal, volatility, of course, being our North Star around here, it is ticking a little bit up today. It gapped open higher yesterday, closed effectively near the daily lows. We reversed all of that in the session, back to a 1609 VIX. Likewise, out along the curve, volatility futures, they kind of feel like they're trying to bottom. Not that we do technical analysis on volatility futures, but if we did, we would say something like, this looks like a Morningstar candlestick cluster coming together. Vol futures bottoming, Jamal. Could maybe perhaps we entice ourselves into getting long a little VXM just to protect our necks?
I'm way ahead of you. I already did.
Oh.
Yeah.
Oh,
I
well,
did.
look at you.
I got long a contract with the G contract about a week ago, last week, I think late last week, I got long one. I just found it pretty interesting. And again, I chose G on purpose. I didn't do January, decided to go with February. But, again, I know that if we did really have some down move, or at least over the next week, obviously you're going to get the most out of it from the Jan. But the February, I think, gives you a little bit more time. It also is past the Fed day, which, again, who knows how much that's really going to mean. But maybe, like you said, maybe a lot of good news is baked in, and maybe eventually some point markets fall off. Who knows? I just wanted to give it a little bit more time. And I figured once it got to 18, it was actually right around here at 1840. I eventually bought another at 17 and change. So I'm long 2 of them. And again, these are fairly cheap. It doesn't, as far as money, as far as buying power, it's not a whole lot. I think about $700 or so can run you on a margin contract. Margin account.
569.
Yeah, 569, no, even cheaper.
Yeah, I'm looking to see if we can break through 1858. We can punch through into a new monthly high for vol after effectively shedding more than a point from the high to the local low. The local low 1774, so not a full point. But that's a pretty interesting reversal here. I would be looking at in the G26 contract personally rather than the F26.
Yeah, and I was actually, the F is the one that costs a little more because it's more near term.
Right. It's not to say that bulls are dead here, because when the VIX is between 15 and 20, it's still better to be long the market than anything else and be a dip buyer. But not exactly the greatest start to the year, considering 2 sessions ago, Jamal, we were looking at a low close of the year for VIX, and now we're looking at potential high close of the year for the VIX in this 2-day session. I know it's only, January 13th, but some things that grind my gears would make me a little bit more comfortable if volatility futures were near the lows. Today they're bumping up. It may be a rocky close here, which I suppose I should say. Nick and I will be doing last call today. Liz and Jenny, I think we swapped with them for tomorrow. So folks should tune in to see how we close this market down. Bonds here, Jamal. We did have a 30-year auction today, which for the second day in a row, it was a pretty good one. 10 stopped through yesterday. 30 stopped through today. Hit to cover ratio of 2.42, which is above the last one of about 2.36. I see here correctly. Likewise, indirects were higher. That's great. Everything worked out. It's not working out, Jamal? Trying to do anything directional in the bond market.
No. We talked about this. Matter of fact, I appreciate you bringing this up last week, because it helped me realize, why am I still holding on to this call spread? And so you're right, not non-directional is the way to go, but there's no vol. So you'll just be sitting here waiting a long time, being short arguably probably about an 8, implied volatility here. So I think it's best to just wait. There's better trades out there, but I don't really know what bonds are telling us, honestly. Right now, I guess it's telling us nothing's really happening in this whole entire market. Move index also is not showing anything. So why should we force a trade in bonds when it really has not moved a whole lot over the last month?
I think bonds and notes are the worst things that are in the follow account right now, Jamal. Now, the Russell hedge is eating it, but that was the intended. Okay, so yeah, ZN and ZB. Those are my worst floating positions here.
I mean, look, these markets are at highs.
Among the worst things today.
There's no real fear. And obviously we know it's moving in a major way. I mean, I will say, if you had told me that that gold and silver, if you had just told me, like, if you talked to me 9 months ago and you told me gold and silver were doing what they're doing, I would have thought bonds would be doing something as well. I would have thought they'd be making a big move. I mean, seriously, right? Like,
I mean, historically, when has gold or silver made a move like this? It's usually around a crisis or on the other side of a big liquidity injection because of an economic issue. And, I think given where the economy stood at the start of last year and the momentum it was seemingly losing, and again, we did have a recession, technically speaking. We did have a contraction in growth early on. The economy is rip-roaring now at the headline numbers. It's certainly a K-shaped recovery, but if you told me that gold and silver were going to be up, 100%, 50%, oh, geez. The Fed restarted QE because we just had an economic calamity. So bonds are probably trading out like 140 again.
So like you said crisis or economic issue. You're absolutely correct. That's usually what we see gold and silver usually moving big to the upside on. What kind of economic crisis could we be in that is not a threat to the U.S. government in any way? I mean, I guess that's really the question, because that's why bonds aren't moving. It's no threat at all to the government.
Does it pique your interest that crude oil was down 19.9% last year, 19.6% last year, and bonds couldn't make hay of it?
Yeah.
Like, that's another one of those things. If you told me oil was going to be down nearly 20%, I'd say, oh gosh, yields are about to come in then. It's great. It's killing me, though. It's death by 1,000 cuts. We are looking at 38 days to expiration here, Jamal. The whole idea of a reverse iron fly when this was put on back in December was that surely the market's got to move. It's been on for about a month. Okay. The idea there was volatility, negative IVR. Let's get long the at the money call and put. Let's short an out of the money call. Let's short an out of the money put. This thing moves. You say directionless has been the way to go. I was going for omnidirectional. Just move. Alas, we are now halfway through the trade and we have not moved whatsoever. 112 is the bane of my existence in notes. ZB 116. I hate you. Got to get away from 116 because this is either a flag, a head and shoulders, or we are busting through both. Either way, I think a decision point is coming. And maybe all this consternation, it'll be worth it. Within the next week, Jamal, we're going to be talking about potentially breaking the downtrend from the October and the November highs here. And if we start to see some levitation through 116 and we're on the other side of that diagonal, yeah, I just think out of necessity, we start treating recent action as a failed breakdown. And we consider the fact that this is a market that's starting to reclaim some bullish tendencies here. I have that little green triangle on my screen. If we're in that zone around these dates, I have nothing to do but then turn bullish. So a flippening maybe around the corner for me. But if any indication of my bond trading for how that next trade will be, Jamal, that's going to lose money too.
Yeah, they're just trying to choose a direction in bonds has been the tough trade, man. And these two have not moved off of 112 and 116 respectively in ZN and ZB. So for now, I'm just watching from the sidelines.
I want to believe it's a monthly chart. It's going back to 2020. We are still on the other side of that.
I know that stop looking at that. That does not help the situation. I'm telling you.
We're on the other side of it. It's not working so far. So we have good auctions here, Jamal. If CPI can't get us moving, will the tariffs do anything for us tomorrow? It's a fair question to explore, in my view, which is why we're exploring it here. What happened when the tariffs were initially put on, Jamal? We did indeed have a major rally here in notes and bonds. And then the market sold off. And then the bond traders stepped in and saved the market, which is an opinion I actually do hold dear to my heart. I do think that the bond traders did save the market in April. We do see after the tariffs are lifted, there's a day or two where we kind of scramble around, trade sideways. We ultimately then resolve to the upside. It was a lot of chop, but post tariffs, the bulk of them being pulled off, we do see that bonds notes rally. So let's just say this is let's say the tariffs are taken off and the Supreme Court effectively says for the reasons stated, they can't be put on again. So there are no future tariffs coming. I would imagine that would be good for notes and bonds in like a sustainable kind of way, where it would make me turn a little bit more bullish and reconsider any of the bearish or directionally neutral or omnidirectional machinations that I've had here. I say that because the idea is that traders are abandoning US dollar denominated debt instruments and FX reserves, dollars in their FX reserves, because they just don't need as much or as many anymore if they're going to trade less with us. The whole reason why there are so many dollars floating around out there is that the world creates trinkets and little tchotchkes, and then we buy them and send them US dollars. And what do? They sit on them. They recirculate them back into the economy. And so if they're not going to trade with us as much, we're going to be sending them fewer dollars. There's less to put in the reserves. They don't need to buy treasuries. So maybe the other side of that is, okay, more dollars being sent abroad because the tariff rates are dropped, which makes foreign goods more appealing. And therefore, these foreign countries will have reason anew to begin purchasing US dollar denominated debt. But then again, Jamal, that's all the theory and the macro paperwork, because the actual reality of the world is that foreigners purchased more US Treasury debt last year than they did in 2024. Yep. And the pace of the auctions this year so far has been good. So what do I know? I have my views here on bonds. None of them seem to be working. They work for stocks. They've been working for gold and silver. The bond market seems to be completely broken. So it's just been a very difficult. So if anyone else is frustrated out there, like, I'm with you. It's not been fun.
Maybe we've just been broken by the bond market. Is what's really happened here.
That is what my therapist told me. She said that, I think the bond market broke you, Chris.
And how does that make you know
that? Have you guys been talking? Making me feel paranoid. The bond market's been talking. Therapist. Okay, metals prove mixed here. Don't know where I'm going with that bit. So we go over to gold and silver, which having a bit of a mixed day. Gold here popped into another fresh high before pulling back. Do we have a little bit of a double top forming up here? Possibly. So if there is going to be a more significant pullback in gold, which we're down $18, shows how far on tilt I am. I want to see that this little range here starts to crack. It seems to be reliable over the past two sessions. 45.80, below 45.80, Jamal, you probably have a reason to think that gold maybe even drops back to 4,500 an ounce. We get kind of a retest of the most recent swing points before the market ultimately decided to lift. It all kind of lines up pretty neatly here. I see the former highs that we set in December serving as that support. So I don't think it's too much of a suggestion that if we fall below the range lows that we've carved out over the past 48 hours, which so happen to be the former all-time highs, we could see a little bit more weakness here going into the second half of the week. Volatility is down here incrementally over the course of the day. We see the high IVR earlier today was up at 64. We're currently in at 55.8. So that decline in price over the course of the session with that vol compression, not exactly the most reassuring things if you were a gold bull in this market today. So below 45.80, probably see a move back into 4,500. And then at that point, I'll be looking long and new. There's nothing else to do.
I mean, as much as I like to see commodities like metals and specifically gold and silver doing these type of moves, because that's what they're capable of doing. I got to tell you, it's a little scary when you see every single day new highs. It's a little bit scary, and it's scary in the sense that I feel like it's telling us something, right? Overall.
I said that to Josh last night over text.
Yeah,
it's fun. Silver's fun. $87, Jamal, like crazy.
89 as of this morning. I mean, not that far away from 100, which again, it almost seems like it assuredly is going to push towards that or reverse horribly. One of the two at this point in time. I don't think there's really much in between. I also think it's interesting, you talk about the gold silver ratio. I know a lot of people are doing this trade. I find that fascinating right now. I understand why when you look at the gold silver ratio, it's below 60, which we haven't seen in well over 10 years. But it's typically, I feel like in the past, and you can correct me if I'm wrong, you look at these a lot. Usually if silver's up, if gold is up 2%, silver might be up 4%, maybe 4.5%, something like that. It is kind of like that. Recently, it has been silver's been outperforming gold by a wide margin, I feel. Even on a day like today, I guess it is only 2% difference, and that's probably a little more in line. But this morning, gold might have been up, 0.5%, and silver was up like almost 5%. So that in itself has been kind of interesting. And it's, gold looks more just like a stock that's just on the verge of a nice breakout. Silver obviously looks extended to me when you look at how far above it is against the 1 week moving average. So that's kind of what I've seen when it comes to these. But trying to pick the top has been a fool's errand, that's for sure, because this thing is just every single day you come in. More recently, I thought the breakdown would have been beginning of late last year, but it still keeps going. So who knows where it's going to end? But it's definitely telling us something, man. And I got to give you props once again on the narrative flexibility. That has been the thing with both of these for a while. You can't tell me there's one specific reason. There's a ton of reasons. Every day I come in, this news with Iran is the reason why silver's up or gold's up. That's what somebody is saying, right? Or another day you come in, it's them suing Powell right now is the reason gold and silver are up big. Every day there is a reason, and it's a different reason, it seems.
A lot of narrative flexibility right now. Yeah. Feels like you could pull anything out of the hat, and it's a reason for gold or silver being on the long side. That also is when the trade's starting to get stretched. When you can't find a reason to sell, then there's a lot of other people that feel that way too. And then that all of a sudden it's becoming a very crowded trade. So we know it's a crowded trade. There's also like the Soros mentality that I bring up a lot, which is to say that if you see a bubble, the only rational thing to do is to run into it and help inflate it. So I'm not going to surreptitiously call a top here and say that the trade's over, but we have our little clues. If this is going to give us a brief pullback, maybe into a 4,500 or so, where the market finally started to break out from this triangle, I think we can make a case to be there with open arms and find another little room, find some coins under the couch to feed another trade here. But these markets are behaving neatly. It's been a good start to the week. For some of the exposure, I know people yesterday were tweeting at me about the 5,000 calls. I'm still in the 5,000 5,100 call spread here that expires 104 DTE.
I'm still there with you.
I think right, and it's starting to work out a little bit better. Today's not a great day for it, but at 42 DTE, the 4,600, 4,625. These obviously have come together in the triangles, breaking out triangle after triangle. It's all I see, no matter where I go. It's triangles as far as the eye can see, Jamal. And then for silver, the only question here is if this is indeed the breakout move, the two measured targets would be 96 and then 103. Should we really be buying $96 calls in silver? That's crazy.
It does seem a little crazy.
And there's not many other crazy people out there, Jamal. So, you want to be early. There's only 10 open interest. Open interest is only 10 contracts for the 96. 167 other people on the planet think that silver could go to 95. I feel like there should be more than that.
Oh man, it's so wild watching this move. It's entertaining too. And again, there's so many different things you can trade right now, like with this whole complex, right? I think that's the other thing I really like about it. I got a bunch of different trades on in SLV right now. I got the MGC trade on with you. Honestly, that's the thing that probably excites me the most.
Well, until then, it's almost, I got the metals exposure that I want. But if I didn't, I'm going to be riding the silver trade into the ground, Jamal. It's going to blow up in our face at one point, but the momentum mindset, and I think like stepping back philosophically, why have we been sticking with this? When you have the technical conditions, you have the volatility conditions, you have the narrative in place, you got to just keep feeding the trade. If the stars still align, and I know there's that whole like, oh, well, is it going to work out again? We have no idea. We've been lucky and persistent that this keeps moving up, and we've just continued to feed the trade. I know it's making people uncomfortable. It's probably the first and last thing I think about every day. I hate to say that. Sorry, family. But the reality is that as long as this thing is giving that structure where is positive pitch in the 1 week, 1 month moving averages, volatility continuing to stay up, dips being purchased at clear trend levels, the technical patterns holding and finding that consistency, triangle into triangle and an even bigger triangle. We just got to trade it the way that the theory demands to trade it, even though it's moving very fast. So copper, gold, silver, all, a little bit of meander today. Copper struggling near the highs that we carved out last July, Jamal. I was a dip buyer more recently, established the 615, 625 call spread when this fell below 6.9. We got to pull back to our 1 week moving average here last week between the 7th and the 8th. And as for me, this whole trade still has a good deal of legs, but it's probably not the most important trade in the market right now. That's probably oil.
Well, I got one more thing before we go. I will say it does seem to be changing a little bit. When I look at February options in silver, and I look at the 20 Delta put, which is only $13 away, by the way, to the downside. And then I look at the 20 Delta call, and yeah, you got a lot of scrolling to do in both of these. To the upside, that is $25 to the upside. The 112 in the orders is what I see as the 20 Delta call, the first one that pops up.
Sure.
There is skew to the downside when I look at it. From what I'm seeing, just for February, I see a $2.50 put versus at least to the bid, versus a $2.27 call. So I feel like a lot of times when the skew starts to reverse a little bit, that might be a little bit of a tell that there's going to be at least a momentary pullback.
And if the dollar's bouncing back, which we've seen over the past few sessions, the funniest thing is that the yen has not been able to make hay of anything that happened over the past few weeks between Venezuela and Powell.
Mm-hmm.
My favorite meme going around about all this, because I think that you have to laugh no matter what's happening, is that people are saying that Trump captured Maduro to replace Powell, which is
good one.
Given some of the policies we're hearing about, they seem awfully Venezuelan from my standpoint. So maybe that's true. Maybe Maduro finds, it's a second career. I don't know where I'm going with this. So oil is jumping up, right? And that's where we were going with this, because as important the gold and silver trades are right now, oil is breaking out alongside a volatility expansion. We have a 43 IVR in oil right now, which if we take a look at this lower panel, you're going to be hard pressed to find a reading that high unless you go back to late June last year in the immediate wake of Iran and Israel exchanging those missiles and the U.S. sending those, pixels missing from the sky, those B-2 bombers to destroy Isfahan and a bunch of the other Iranian nuclear facilities. That obviously is back in play right now. The reports coming out of Tehran, and last weekend we were talking about, or before last weekend, Jamal, we were mentioning here on the show that there do seem to be a significant number of reports now that the regime is trying to suppress the protesters. The regime is saying about 2,000 people were killed. The people on the ground, for whatever limited internet access is available, and internet's been down for about 126 hours now in Iran. Not that I'm keeping track of it. Maybe 12,000 individuals have been killed, which would make this the deadliest wave of suppressed anti-government protests, I think, in the past 20 years.
Since 79 is what I saw, since this current regime take power.
Even more so to the point then, which is to say that Iran, this is not like other times. And I think the oil market is telling us everything we need to know, that this isn't just another run-of-the-mill news story where in some, non-Western country, a dictator is watching his people complain about the price of living, the cost of living. We've seen this a lot. We've seen this in Iran before, but this time the Iranian protests are being met with promises by the American president that help is on the way. In fact, Trump said that today, that help is on the way. So oil breaking out. Is this a bullish falling wedge here, Jamal? Let's just entertain the fact that it may be a bullish falling wedge right now in the market. I'm kicking myself for not getting those long out of the money calls a few weeks ago in oil, but that doesn't mean that we can't fix our sins, which I would point out to folks. Notice the backwardation in the oil market here. This
There's
is
a
not
lot of
about
movement happening literally as we're sitting here.
There is.
Yeah.
It's
I'm watching the options.
It's-
They're all over the place, and it's actually equivalently 50 cents, but a tank. Sorry to cut you off, but wow, it's like you're literally summoning it.
oh gosh, I wish I had different kinds of powers. Jamal, if we wanted to play this, and if there is that type of news flow, let's just take a look at what's going on with oil here.
Yeah,
What
is
did
there
Trump
some news
say?
that come out? Is he saying something?
What did Trump say? It's a good question. Oil. Tell me, computer, what's going on with oil?
I put an iron condor on here in February yesterday because, again, this is one of the few things that where volatility is elevated, the metals being the other. I did it in February. Again, it's risk defined. It's iron condors. We know how those roll. Only a point wide. But I am definitely ready to act with more action at some point, as we've seen. Again, this is totally different as everybody really sees. Again, Iran's number 7 as far as oil producers in the world. Totally different situation than Venezuela. I think a lot more people were expecting Venezuela. But when you hear this and you hear what's going on over there, this is a lot more meaningful to oil than anything.
Yeah, so the comments that are getting the algos all worked up here. President Trump says he'll get oil prices down even further because Venezuela is going to be giving us 15 million barrels per day as a result of our new partnership. 15 million barrels per day?
Well, he also said, never mind. I don't remember exactly what he said. I can fact check it.
Yeah, I can't fact check that. Both the US and now Germany, a few minutes ago, have advised all citizens to leave Iran. The last time that we got those type of notes put on the board was when we saw the US and Israel getting ready to attack Iran in June. So just kind of reading the tea leaves here. There are some graphics that you can find on social media of US military assets, particularly Air Force assets moving into the region. So 44 IVR, prices are moving up. We did have a little bit of a headline here that apparently we're getting 15 million barrels a day from Venezuela, even though they produce less than 1 million barrels a day right now.
But they say, but they have and that's honestly, I really am not sure is what is more meaningful, having oil reserves or producing oil. I think that's why people expected a whole lot to happen with Venezuela because they are number 1 as far as oil reserves, but Iran is number 3 as far as oil reserves, and they're also number 7 as far as oil producing. So I would argue that's probably more production is clearly where it's at, right?
Production's all that matters. Yeah. I mean, 100 billion barrels of oil that are accessible is worth a lot more to the market than 300 billion barrels of oil that's inaccessible, in my view.
Yeah, and clearly in the market's view too. That's what we're seeing.
Yeah, it's clearly in the market's view too, right? And it's the fact is that Iran constitutes. Should we go back to oil for a second? We'll go back to oil for a second. Iran and the Strait of Hormuz, about 20% of the global oil supply passes through there every single day. An Iranian regime that decides to mine the Strait of Hormuz or put a blockade in there as a way to deter the West from interfering in internal affairs, regime change, is not outside the realm of possibility. France urging its citizens now to leave Iran. I assume that's going to be a pan-European suggestion moving forward. Oil prices, Jamal, here, we saw those coming in ever so briefly. Look at that wick on the 5-minute chart.
Yeah.
Why was the market even reacting to this whole 15 million barrels a day?
Yeah,
all right. If they produce less than 1 million barrels a day, they have their shadow fleet, everything floating offshore. So we drain all their reserves in like a week or two. Like, do you think that they have billions of barrels of oil just sitting around? No, come on. Did I get in? Was I filled? I tried getting filled. Was I filled?
What are you trying to do?
Yeah. I tried buying an oil call on that dip.
Oh, right.
Not getting filled.
Probably swinging a miss.
Why don't you yeah, let's just see. I'm willing to do a little bit of just get me in this market. There we go. Filled. I'll pay another, 30 cents there to get into the market. Yeah, so I'm looking at this, Jamal, not because of just that news in particular, but when we take a step back and look at our daily chart, this looks like a bullish falling wedge. The way that you trade a wedge is if you look for a return to the base. The base here is at $70.16. Oil vol, when we were trading up there, was up in the hundreds at one point. So even just another $3 or $4 rise commensurate with another bit of vol expansion here, it would all coalesce into a trade that, while potentially not reaching max profit, can be flipped at some point over the next 60 odd days for maybe a little bit of some money here. So again, Iran making a bigger difference than Venezuela because Iran has a bigger hand in global oil supply and what it can do to influence it than Venezuela can.
Yeah.
Bringing us back to the yen here, we've mentioned before, and it hasn't been something that we've needed to mention in a long time because oil hasn't really done much of anything. But when oil goes up and goes up quickly, when energy prices go up quickly, the yen usually is the currency that gets hit the hardest. They do import over 90% of their energy because they are an island nation that still has not resumed nuclear activities in the wake of the 2011 Fukushima earthquake. And so on a day after a few days where oil prices are breaking out, the yen falling flat on its face is something that should draw everyone's attention, especially now that dollar yen rates are approaching 160, because we did just break through the 2025 year-to-date high today. That came in last January at 158.88. We're currently at 159.10 in the spot market. These are levels that the BOJ and Ministry of Finance have intervened around before. So if I'm trading dollar long, I just don't feel comfortable doing it via the yen. That's why I'm doing it via the pound. And if anything, I feel like we just have to start laying out a yen intervention trade here, because if the BOJ and Ministry of Finance don't intervene now, this thing isn't going to stop at 161 or 162. This thing is going to shoot up to 165, 170 in a heartbeat, because the market's going to know that there is no line of defense, line in the sand here anymore. So that's exactly what I'm doing right now in 6J. 24 DTE. Why not the 65-66 long call spread? It is a total non-tasty type of trade. It is complete insurance in case the BOJ and Ministry of Finance want to upend the market, as we've seen them do in the past. That could be a temporary dislocation for 2 or 3 days, Jamal, but risking $62 and $96.15 of buying power to potentially swing a $1,200 trade that may insulate other aspects of my portfolio and book right now, happy to cash that and put it into the book. So that's what I'm doing. Maybe the BOJ Ministry of Finance Act.
Yeah, it's been really depressed. I'm with you. I have this trade on. As a matter of fact, I've had this trade on for 40 days. I almost forget that I have it. I got the 0065, 0067. It seems like it's about time for some intervention at some point.
CME Group to launch 100-ounce silver futures to meet record retail demand.
Tom.
I remember when CME... Yeah. I remember when the CME, who we love, sponsor the show. Absolutely love the show. Can we go back far enough on our charts here? No, it won't let us. 2017, Bitcoin's running up into $19,000, the local high. And CME decided to launch Bitcoin futures. And that was the market top.
Yeah, I was at SIBO at the time. They launched them first, actually, and CME launched like a couple of weeks after. It was a very busy time, very exciting time too, actually.
Those are really interesting days. Yeah, right now the contract unit for silver was it 5,000 troy ounces?
Yeah.
So looking to capitalize on that 100-ounce product. Fun. Okay, so besides the yen here, we do take a look at what's going on in the euro, the pound. There's a little bit more weakness. We'll go back to our daily chart real quick. For the euro itself, again, fascinating moves here. We got a bounce yesterday, but the reality of the world is that without the United States being the apex or the top of the pyramid for the Western financial system, a lot of the safety and security and strength that the yen, the pound, the euro, that these economies have is it's a house of cards. And so as bad as things may be for the dollar's legitimacy, if the independence of the Federal Reserve goes away, there is a very good reason why several central banks around the world today, Jamal, the ECB, the Bank of Canada, I mean, name a central bank in the Western world, they released a joint statement saying that the independence of the Fed is really important because the Fed is the shock absorber for the entire system. And if the independence of the Fed goes away, then the whole house of cards comes down. Doesn't matter what the ECB can do. If the Fed is dead, then Europe has a whole new host of issues behind it. It's not going to have a liquidity pool to reach into like it did during the debt crisis. Forget currency swaps to provide dollar access. It would actually probably produce that Brent Johnson, Santiago Fund on Twitter, that dollar milkshake type of reaction where all of a sudden the dollar, people scream for it. They're demanding it because they know they're not going to be able to get their hands on it. And then you certainly don't want the euro or anything else. You're going to want gold or silver. I like my short exposure here in the pound. I think that this is a nice failed retest of the trend line that carried us higher over recent months. We're trying to break through our 1 month and our 50-day moving average. We're beginning to see our plane and slope turn negative. The dollar overall seems to have found its footing, and it is still holding through the turn of its 50-day and its own 1 month right here in recent sessions, Jamal. It survived that yesterday. So the dollar's getting its groove back here. And a dollar with its groove back, probably going to be a little bit of a headwind for gold and silver as we think about those potential signs of weakness, the reversal in the skew, and that decline, the contraction a little bit there in the gold vol over today's session. But, we have a lot more to talk about, not just today, but over the course of the day. I'll be back later on with Nick for last call, with Ilya for overtime. What's next on the calendar, Jamal? There's some Fed speakers tomorrow. There's, of course, retail sales. There's that Supreme Court decision. Typically, those come out after the market open, 10 a.m. Eastern, 9 Central Time, maybe 11 Eastern, 10 Central Time. Watch out for it. That's it. Josh is telling me I'm not on last call. I guess we didn't do a flip today. Who knows? Will you see me there, Jamal? It's going to be a surprise. It'll be like one of those Labubu gift boxes. Who knows what's inside?
The flip clearly.
So for Jamal Chandler, for Jamal Chandler, I've been Chris Vecchio. Good luck trading. See you later, ? You're watching Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. Somehow, some way, we made it through the most important CPI print of our lifetime. So welcome to the show. I really can't believe that we are here together. In fact, I'm not even so sure that we are here together. But either way, it is you, it is me. We are live on the Tasty Live Network. And I appreciate you guys, man. I appreciate you all for coming on to the show and being a part of the network and being a part of my show. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. Man, again, for the 111th consecutive day, you can celebrate if you are a medals bull, you can commiserate if you are a medals bearer, but of course, it is a good time had by most. So Josh, go ahead and bring us into the market. Let's take a look at what's going on in this little world that we call the financial markets. E-mini S&P is down 23. You've got the risk-free instrument, also known as the NASDAQ futures, an extraordinarily high-risk product, down 97 today, not exactly doing what risk-free instruments are supposed to do. You've got the boomers down 352, and then you've got the Russell 2000 futures index up 390 on the day. So it is bucking the trend actually with a green print so far here on this Tuesday afternoon. You got bonds up a little bit, you got notes up a little bit, you got oil up a little bit. You know, Josh informed me that apparently we're evacuating Iran now. I mean, not we. I mean, I think everybody's evacuating Iran at this point. And so a strike could be imminent. That could obviously have all kinds of geopolitical shockwaves that would result from something of that nature. And you've got oil up a little bit. You got UB40 up about 9 ticks. And then, yeah, you've got gold actually down 13. So, you know, the shifties have to just a wee little bit of a pause in the old victory lap for the shifties with gold down 13. But look at silver. Man, check out my Hunt Brothers. I think they're just shutting down all the pizza shops now. Like, I mean, what do you need cheese and pepperoni for when you're up 4 to 6% per day? Like, when you're up 4 to 6% per day, I mean, that's some crazy stuff, man. SI up to 87.80, and that's not even the high today. Like, I think the high today, didn't it clear 89 at one point? I think it did. Let's go ahead and take a look at this. If I bring up my chart of silver, this is a daily chart. Yeah, this thing was all the way up to 89.20. So it was $1.50 higher. Let me actually kind of rest my cursor on that bar there. It was $1.50 higher from where it is right now. That's some wild stuff, man. I mean, I thought it was wild at 80. I thought it was wild at 70. I mean, at 60, I'm like, this is pretty crazy. I mean, at 50, I'm like, all right, some people have lost their minds. And that was like, I mean, that was what, weeks ago, months ago at this point? Man, I mean, 100 just looks like a foregone conclusion, right? Like, it looks like it's absolutely going to happen. It's only a matter of time, probably only a matter of hours at this point. And so, yeah, silver, just a runaway train and really, really, really crazy stuff. If I go into the trade page here, let me go ahead and what is the probability? So I haven't looked at this. I'm actually curious. So if I go to, actually, let's just go to the 14-day cycle. I'm just going to choose the 14-day cycle. So in the next 2 weeks, we've got all kinds of things happening. Tomorrow morning, we've got PPI, right? And this is unlike any PPI print that I've ever seen. I mean, I don't think I've ever seen a more important economic data print than the one that's coming on down the chutes tomorrow morning in the form of PPI. So buckle up for that guy. Well, we've got that. We've got SCOTUS rulings on tariffs. We've got other things happening this week, I think. And then, of course, we've got all the, the big tech earnings and all the big company earnings coming out in the next couple of weeks. So lots of things are happening in the next couple of weeks. I wonder what the delta is on the 100 strike call right now with 14 days to go. I haven't looked at this before. We were talking about this yesterday morning with Tony and Nick. I mean, I'm going to say this is probably maybe a 40 delta. Like, I'm going to say it's pretty high. And again, remember, when you look at a delta, if you take double the delta, that gives you the probability of the touch. That gives you the probability that that level gets hit at some point across that, expiration cycle. Now, it may not stay there, but can it touch that level? That's essentially double your delta. So if I look at silver, 14 days to go, and I open that guy up, let's delete that. I open that guy up. The 100 call, I'm going to say 40 delta. Whoa, I'm way off. Man, I couldn't be further off. Look at that. 21 delta. Okay, so the probability of a touch is 40. 40 delta, yeah, that seemed a little, I was getting a little carried away. I mean, the silver run, it does some things to you, man. Like, it affects you, whether you're in the trade or not in the trade. Like, it's affecting all of us in one way, shape, or form. And so the 100 call on silver for 14 days out is only a 21 delta, but still, that's a 42% chance that 100 gets hit. That's essentially a coin flip. Right? That's essentially a 50-50 proposition. And so, wow, that's really, really wild stuff. And so, so silver obviously on a tear today and just like every other day. And that's going to be that. So, all right. So what I want to do today, though, let's finish. Let's talk about GDX. Let's talk about Nike. And let's talk about Starbucks. These are the trades that we did not talk about yesterday, just to bring everybody up to speed in terms of things that are happening in the portfolio. And then we'll kind of see where the wind blows us from here. Maybe we'll do a little SCOTUS trade. Maybe we'll do a little something for tomorrow. Because again, I mean, you've got the most important PPI print in the history of the financial markets in the morning. You've got the most important SCOTUS ruling in the history of judicial, proceedings happening sometime tomorrow. I don't even think we have a timestamp. Like, do we know when this is going to happen? Like, do we have like an actual time of release? I think it's just kind of floating in the wind. I think it's just kind of drifting in the ether in terms of when the ruling is going to be, handed down. And knowing the administration, okay, thank you, Josh. No time of release known as of now. Thank you. Knowing this administration, man, if Trump gets any wind of what's going to happen beforehand, he's going to let us all know. Like, don't you worry about it. My man is not going to leave us hanging. Like, so be on the lookout for your Twitter feed, maybe your Truth feed, maybe your Instagram feed, like whatever you need to do. Because, I mean, when it's time to buy stocks, my man says to buy some stocks. And when he starts coming out against SCOTUS, I mean, you guys know how it's gonna turn out. So maybe we'll trade some SCOTUS tomorrow. I mean, I think Polymarket has it 25 to 27% that it's going to be legal. So that means obviously 75, 73% that it's going to be illegal. And I would imagine, again, just applying common sense to this, I would imagine if it's ruled illegal, that's going to kind of rock the boat a little bit. Like, that's going to really kind of change the direction that the administration is trying to go in. And so that, I would imagine, would breed volatility. Like, that I would imagine would potentially lead to some rocky markets. And so I don't know, guys. I'm thinking maybe play it to the downside. I don't know. Now, of course, that means for you all, if you've been following the show for any length of time, you should be loading up on your 2 delta calls. Just my very mentioning that I think we're going to go lower essentially cements that we are indeed going higher. But we'll take a look at that here in a couple of minutes. And of course, I'm going to get to as many of you guys as I can. Man, I see you guys in the house. Man, look at Rodrigo in the house. Man, Allison is in the house. Stephen Bivens here. Man, Stan's even here. Man, look at this. Wall Bib is in the house. Sam L. Ashfam. Man, old Two-Face in the house. Man, old Two-Face knows what's up. Brian Dowdy's in the house. Old Two-Face dropping it in there for the love of the algo. Again, guys, we have one job today. Our job today is not to make money. Our job today is not even to learn about trading. Our job is to pump the algo. That's the only job we have. It's your job. It's my job. It's our job together collectively. So drop into that chat for the love of the algo. Pump that thing to the high heavens, and let's push this guy out to as many people as we can. And so, all right, let's go to GDX. Let's go Nike. Let's go Starbucks. All right, so GDX. Okay, so this one's going to be fairly quick and painless, I think. You've got, GDX up $1.28, of course, and up to 97. And we have a strangle on 74.103. We sold the strangle for 262. It's currently marking at 350. So we're down about $1 on the trade. But again, this is another situation. We saw this yesterday just with MCL, which right now MCL is like barely hanging on to that short call strike on the upside of the strangle. But again, I like to be a bit more patient with my strangles. I like to be a bit more, just kind of let the strategy do the heavy lifting. I don't really want to try to get in and try to, outsmart the system or kind of override the process. You can aggressively neutralize Delta. You can roll on untested sides a bit early and go that route. But I much prefer to just let the strategy, let just the structure of, short premium, high probability, implied volatility being greater than realized volatility on average over time, which of course is no guarantee. But again, empirically, this is just what we've shown and seen over time on average. I like to let all those things kind of do the heavy lifting for me. And so that translates in an actionable way to really not doing too much when it's between my short strikes. Like I just like to kind of sit tight, let time go by, let the theta build up, let the theta stockpile in the position, and then, start to make adjustments once we start to see some strikes getting tested. And even then, I will oftentimes, well, maybe not often, but sometimes I'll even wait until the break-even point is tested. I might even wait until it goes even a little bit further just to be a wee little bit more patient. And so with GDX here, you've got the stock at 97. We're 74, 103 on the strikes. This is a do-nothing scenario, in my opinion. Now, if you wanted to roll the put up, you could. You certainly could. You could roll the short put up, and we can even just kind of, we can talk about that for a brief second. Because some of you might think, hey, I kind of like being a little bit more, aggressive with my rolls. Like, what would that look like? Well, a lot of times, if you look at, like right now, my short put delta is nothing. I mean, it's 4, right? So I have 4 positive delta coming in from the 74 strike put, right? So 4 positive delta on the put side. And then I go to the call side and I've got 37 delta. So you can see that right here. So obviously I'm going to be, if I'm positive 4 and negative 37, I'm no Julius Spina, but that looks like about negative 33. I'm short about 33 deltas on GDX, right? So that's not being short the market. I mean, there's obviously some correlations and things like that, but I'm short GDX to the tune of about 33 delta. So oftentimes when we roll the untested side, whether the strike's been tested or not, when you're looking to how far should I roll, how far should I bring this guy in, a lot of times you're looking to trim your directional bias by anywhere between 25 to 50%, I would say. A lot of times we don't like to completely neutralize the bias. We still want to maintain kind of a short-term contrarian nature to where the market has gone. In other words, if the market goes up, we don't mind being a little bit short and being a little bit bearish and giving it a chance to breathe back lower. If the market goes down, we don't mind being a little bit long and being a little bit bullish and let it breathe back higher. And so that's the general kind of framework. But how far do you roll in when it comes to adjusting your deltas on a given position? Usually trimming the directional bias by 25 to 50%. So in other words, if I'm short 33 delta on GDX, if I was going to roll my put up, so if I was going to take this 74, right, if I was going to buy that guy back, I want to pick up about 16 or 17 delta if I want to cut it by 50%. If I only want to cut it by 25%, now I'm only looking to pick up about 8 or 7 or 9 delta. And so if I were to cut it by 50%, be very aggressive with my roll, maybe I'm going from a 74 put all the way up to an 87 put. So I would pick up $1.45 for that. Right now, that looks really nice. Don't get me wrong. I think this is a very, very strategic way to play a position like this. I think it's totally fine. And, you're kind of falling in line with, some pony babistas and individuals of that nature. So I think it's completely fine. Like you can go this route if you want to. Again, I prefer a more patient approach, but it's 100% good to go. And of course, if you only wanted to pick up, 7 or 8 delta, now maybe I'm only rolling up to, like the 83 strike, let's say. Or maybe the 82 strike, 82, 83. So you would pick up more credit, of course. You would improve your basis. You'd widen out the break-even points, at least on the top side, the side that you're being tested. But what are you giving up for all of that? What is the gotcha that comes alongside, the reduced directional bias, the, more premium to work with, the better break-even point on the tested side? What's the gotcha? The gotcha is now you have a much shorter distance between your short strikes than what you had prior to the roll, obviously. So what does that mean, like in English? What does that mean, like from an actionable way? Well, it means that if the market does come back, now all of a sudden you have a lot less real estate to work with, and you may very well find yourself tested on the downside. This has happened to me so many times, and it's part of the reason why I am a bit more patient with, making my adjustments. Why I prefer something that's a little bit more kind of wait and see, kind of do nothing type of feel and flavor to it, and just let the market breathe a little bit. And so just understand what you're signing up for. Yes, it is going to help you on the tested side. Yes, you are going to have more credits and more premium to work with, but the untested side could quickly become the tested side if there's any type of reversal and any type of kind of whipsaw in the market. So all of that to say, I'm not going to do anything. And but I know a lot of you guys like to you guys like to follow in Pony Babista's footsteps. I mean, I certainly wouldn't do that, at least not from a life standpoint. But from a trading standpoint, I would imagine it's a little bit worthwhile. So GDX, there's some GDX commentary. Hey, look at Nike. So Nike, man, look at this. We are back. We are back, baby. Look at this. The short 62.5 put And yeah, man, wow. I mean, if you look at Nike, let's bring up a chart of Nike. If I look at Nike, so wait, when did we do this trade? Let me bring up my chains here really quick. So we did this trade back on 12/18, so it's been almost a month for this guy. I think it was Nike earnings, if I'm not mistaken. And it just crashed, boom, bang. Like, Nike just came out and said, listen, like, Puma's grabbing market share, right? Champions grabbing market share. Hoka's grabbing market share. We can't compete and nobody wants our product anymore. And it didn't look too good. Like, it didn't look too good at all. I mean, you can see it right here. This is kind of the, the fly in the ointment. And all the way down to here, whatever that was. Let me see. What was that? Let me delete. Hold on a second. Let's get rid of that. So we know we did it on 12/18 about a month ago for 250. Yeah, I mean, Nike was down to 57, 58. Man, that's some really, really wild stuff. And so now it has just rallied all the way back. And so chalk one up for the do nothing strategy. Like, once again, the do nothing strategy, it reigns supreme. Like, there's a reason why it's the default setting. Like, there's a reason why it's like, man, I'm selling premium. I'm tapping into the probabilities. I'm tapping into the implied volatility. I'm doing all the things to put myself in a solid structure moving forward. Man, don't mess with it. Like, don't mess with it. Like, you already know that chest and back is a great pairing. Don't mess with it. You already know that buys and tries is a great pairing. Don't mess with it. Like, I don't want to hear about you guys going in there doing quads and delts. That doesn't make any sense, right? You're trying too hard. You're getting too creative. It's the same type of thing right here. And so with Nike, we sit tight, we do nothing, and we got rewarded here. So for this position specifically, we are actually a little bit beyond 50% of max profit here. So there you go. You got Nike. We sold it for $250, and we're about to buy it back right now for $1.08. And man, that looks pretty nice. I mean, I think we go ahead and do that. Let's talk about Starbucks. And then I do want to let's get a little SCOTUS. Let's get a little SCOTUS deal for tomorrow. Quick little housekeeping. So tomorrow, so I mentioned this yesterday, but I scratched my right eye. That's why I'm wearing my glasses. I scratched my right eye taking my contact out on Friday. And I went to an urgent care on Saturday, and they looked at it and everything looked fine. And I'm like, well, it certainly doesn't feel fine. And she was like, well, here, take these drops for a few days. And if it's not any better, then I would go have like an ophthalmologist, like take a look at it. So it's not really that bad. It's not really that much better, maybe a little bit better, but I'm actually going to the eye doctor tomorrow. And the only time they could get me in is in the afternoon. So there will be no live from theory to practice. And so my apologies. I know I was gone for like a week, but the eye scratch giveth and the eye scratch taketh away. And so that's what we have to work with. But I still want to do a little SCOTUS deal for tomorrow, and eye scratch or not. And so all right, let's go ahead and let's see. Let's take this guy out, or even take this guy off, I should say. I was still thinking about the contact. And so yeah, let's do Nike for $1.09. And boom, there you go. All right, $1.09. It's all done. It's over. It's done with. And boom, there you go. All right, so now Starbucks. Let's see here. So Starbucks. Ah, man, it's a beautiful thing. Such a beautiful thing. Like, even with a scratched eye, all I see is beauty. All I see is beauty on the horizon. I mean, look at this, man. Starbucks back to 90. I mean, what a wild ride we've had. Right now, we did the basis calculation on this like a couple weeks ago. I did it right before I left for vacation. So I'm not going to rehash all that because that was a brutal 17 minutes. But it had to be done. Like, it had to be done. It's just like when you are on leg day and you've got 4 sets of walking lunges, it's going to be brutal, right? You can't go around it. You can't go over top of it. You got to go through it. That's the only way forward. It's the same thing with the basis on Starbucks. And so we already did that. I'm not going to do that again. But now that we're back to basically about where we bought the stock originally a little bit over a year ago, that's really, really crazy stuff, man. It was cool to see how we took it was like a 6 or 7% drop in the stock, and we turned it into like a 5 or 6% winner over the year, just from selling premium and just doing all the things that we talk about all the time. And so that video is actually on the YouTube channel. And so go check it out if you guys haven't done so already. Give it likes, give it the full watch time. Like, give it a couple watch times, man. Just put it up in like some tabs that you're not looking at, and just let that thing run on repeat. And so your boy gets some of that watch time. But for Starbucks here, the question becomes, what are we going to do with this position? So with the added kind of DCA, that's the question that I now have, right? And I don't have a great answer right now, to be honest with you. I know that, oftentimes when you're a long-term investor and you have a stock that you like and you want to hold for a really, really long time, a lot of times, if the stock goes down and you decide to continue to build a position at a better basis and accumulate more shares and things like that, you're just holding those shares. You're not really looking for an off ramp or looking for a way out on those shares. They just become part of the position for the long term. And I think that's a great way to play it, for a long-term focus in a given stock or index that you like. The difference here is this guy has an expiration. Like, we only have 38 days to go on this position. Now, we've made about $9 or $8.50, on this little DCA, this dollar cost averaging substitute. And so it has certainly done its job. The question becomes, when do we want to pull the plug on this and just be done with it? Because it has to be done one way or another. Now, I could roll it out and I could do things of that nature. I don't know that we're going to get that crazy and that carried away with this DCA. We're probably going to go ahead and just take this guy off at some point, but I don't know when that's going to be. It's not going to be right now. I think let's wait and let's see if we can get a little bit more strength in Starbucks, and then maybe we'll take it off, I don't know, 95, 97, maybe 100 to keep it a bit feng shui. And so I don't know. That's kind of what I'm thinking. And it's very similar to, like when you buy stock, and this is one thing that makes it a little bit tricky, in my opinion, with stock. When you buy stock, even if you buy options, you buy calls, you buy puts, whatever, it's a little bit more slippery to figure out, where am I going to get out of this position? Where is my off ramp? Like when you sell premium, it's a lot more clearly defined, whether it's defined risk or undefined risk. You kind of know what your maximum profit is. You know what you're typically targeting as some percentage of that max profit, and then you go from there. When you're just off in the wilderness that is long stock or long options, it's a little bit harder, in my opinion. Now, some of you guys are out there and some of you gals are out there like, nah, Jim, it's super easy, man. I'm just going for like a 161 fib extension. Like, it's so obvious. I'm just looking for volume profiles. Like, I'm looking for these, liquidity hunts and these stop hunts and like whatever else, these fair value gaps from ICT fans that might be watching the show. If any of you guys still exist, I'm not sure you're still a thing, but if you are, I appreciate you guys. I appreciate you guys a lot. And so, yeah, I mean, I don't see the value in those things like some other people do, but that doesn't mean there isn't value there. That just means I can't see it. And it could certainly be a skill shortcoming on my part. But yeah, so we're going to sit tight and just kind of see where the wind blows us there with Starbucks. All right. So now what I'm going to do, man, I see you guys in the chat, man. I appreciate you. Look at you guys, man. Man, you guys are hammering this algo today. Absolutely just obliterating the algo today. Nice job out of you guys. Let's go into SPX. And this is it, guys. Again, I don't want to overthink this. I don't want to underthink it either. I want to apply the appropriate level of thought to this trade. Let's go to SPX. Let's just follow the chalk, right? I'm just going to follow the chalk, right? Just like my Rams. Like my Rams this weekend against the Bears. Man, I mean, I don't know, guys. I don't know. The Rams laying 4.5, whatever it is. Man, I don't know. It almost looks too good to be true. I'll just say that. Like, talking about Stafford in the call, talking about this, that, and the other thing. Nah, man. It's Rams by at least 10, probably 14. But I digress. So SPX, let's go with a one-day deal. Now, again, keep in mind, right, I have the eye doctor tomorrow, so I won't be live. If this trade does work and I can see the screen, I need both of those things to happen concurrently. I'll take this guy off at some point tomorrow. You'll see it on the follow page, and we'll recap this guy, on Thursday. Maybe with an eye patch, maybe not with an eye patch. You have to tune in to find out, right? Because, again, your boy needs that watch time. But SPX, let's see. We've got stock down 23. I'm thinking we just go to the downside, man. Let's go 69.50. 69.15, 68.80. Can we get this for $5? $5.25. All right, that's pretty good. I'm gonna try to get it to $5. Let's go 69.45. I'll move it down a little bit. 69.10, 68.75. Yeah, 4.80. Okay, I like that. I like that a lot because this will officially be the first stack of cash that we will be lighting on fire for 2026. And so, we have to treat it with some white gloves. Like we have to treat this guy with a little bit of a special status. And so there you go. 69.45, 69.10, 68.75, SPX, 1 DTE butterfly. This is kind of my version of 0 DTH because I try to only trade on the show. I'm not going to do something with 90 minutes to go, obviously. That doesn't really make a lot of sense. I know some of you shooter McGavins out there, you're like, Jim, I'm making a ton of money, in the last 90 minutes of the day. And I'm like, hey, man, go for it. 100% go for it. But I'm going to do this in a one-day cycle because it makes a little bit more sense to me. So, all right, so there you go. 480 on this butterfly. Let's do it. Let's push it out. It's only about 1.5% of the account. And yeah, let's go ahead and let's see. Boom, there you go. And so 480. All right, we got filled on SPX. There you go. Very, very, very good stuff. All right, so we're in SPX for tomorrow. There's our SCOTUS trade to the downside. And boom, there you go. All right, so let's go into you guys, though. Man, where are you guys at? Man, I see you guys. Let me surprise and delight somebody in the middle. Maybe even a couple people in the middle. Man, let's do it. So I see, hold on a second. I see, is that Archer Fire? I see Archer Fire in the house. Where I lost it. Hold on. I had it and I lost it. Archer Fire. Archer Fire. Yeah, I see Archer Fire says, when are you selling your Starbucks position with Starbucks over 90? Yeah, we're going to wait. I'm going to wait. I'm going to sit tight. Archer Fire, thanks for joining the stream. I don't recall you having been in the stream before. Now, I've been a little bit off my Blueberry game. So maybe you have been in the stream and I'm not remembering. But either way, I appreciate you, my friend. Thank you for being here. I hope that you stick around, whether it's my show or any of the other shows on the network. There's so many to choose from. I mean, you are in good hands if you want to take an active approach to your portfolio. Yeah, like I mean, I'm not going to get carried away with this. Now, you may say, Jim, you're carried away right now. I would close out of that DCA, that long call, whatever. I don't know. I mean, we've been through quite a run here with Starbucks, quite a wild ride, in my opinion. I don't think it's that crazy let's see if we can push 95. Let's see if we can push 100. Like, let's tap into our inner big number bro and let's go for 100. Like 100, it's feng shui, it's nice and round. There's going to be lots of stops up there. There's going to be lots of whatever else is up there. Like, maybe we go for that. Maybe we don't even get greedy. Let's go for like 99 and a quarter, right? Let's go for like 98.80 or something like that. So for right now, I'm going to sit tight on Starbucks. And yeah, it's famous last words, of course. And so, but let's see, where else are we at? I'm going to surprise and delight somebody else. Where are we at? Let's see. I'll find somebody. Let's see. I see Small Trades Often in the house. Small Trades Often says, greetings, Dr. Jim. Earnings season starting up. Time to light up those stacks, man. I'm ready. I mean, I've never been more ready. Like, I am so ready. Like, one eye, doesn't matter. I'm ready. I am ready to go. Yes, it's not really, we don't have, was somebody today? Thank you so much, Small Trades Often. Thanks for being here, my friend. Let's take a look. Was JP Morgan today? I want to say JP Morgan was today, or is it tomorrow? JP Morgan. Yeah, it was today. So, wow, down $13. Okay. All right. So, man, we are up and running. We are off and we're doing it, man. JP Morgan's in the Dow, right? I think so. I'm pretty sure JP Morgan's in the Dow. Can somebody check me on that and put it in the chat? Because, obviously I would love to know, and the algorithm would also love to know. So put that in the chat. Is JP Morgan in the Dow? Like, I know the Dow, I mean, these are blue chip bellwether companies that have been around forever. So obviously that's going to be like Walmart. Obviously that's going to be like Nvidia, right? Blue chip, been around forever, like very reliable. Like, don't have to worry about semiconductor taxes and things like that. Microsoft would be another one. These companies have been around for, millennia. And so I think JP Morgan is in the Dow, and that could explain why the Dow futures are down 400 points today, with JP Morgan down $13. But if I bring up a sort on the earnings, yeah, so tomorrow morning we've got Citigroup, man, and then Thursday we've got Goldman Sachs. Okay. I'm going to pass on those, mainly because I know I'm going to be out tomorrow, and we've already got the SCOTUS situation going on. I would kind of like to wait and see what happens with that, because, I mean, I think it's not that crazy that, the market does dive 1% to 2%, which that would actually, we would actually miss the butterfly. Because remember, with a butterfly, you've got to get the direction right, but you also have to get the magnitude right. If you miss either one of those, then you end up losing on the trade. And so it's a great trade from a risk return standpoint. It can be a really nice way to take a directional shot, but you have to understand what you're signing up for again. And that is, I've got to be right directionally, and I've got to get some semblance of the magnitude of that move correct. If I miss, then it's not going to be that great. So if we overshoot to the downside, like if things get really crazy tomorrow and, SCOTUS does rule that they're illegal and the market doesn't like it and the uncertainty and whatever, I mean, I could definitely see S&P 500 down, ES futures down 100, NASDAQ down 400, 500. That would not be that crazy. And that, of course, essentially guarantees that we're going to rip higher tomorrow. But those are my thoughts. So I'm going to wait on, Goldman Sachs. I'm going to wait on Citigroup, and I'm going to leave that to y'all out there. And so good luck, however you decide to play those things. And so, all right, let's see. Oh, I see you guys. Okay, it is in the Dow. So thank you there, Stan. I appreciate that. Very, very much. So let's see. Let's go all the way back to the beginning. Oh, man, look at you guys. Look at the work you guys are putting in. Man, it's a Tuesday. Man, you guys are showing up like it's a Monday. Like, you guys are just putting in the reps. Man, nice job out of you guys. And so I appreciate you guys so much. Or Denu in the house. Hello, Dr. Jim. What is your take on take profit automatic orders? Your show is the greatest, man. I appreciate you, Daniel. I'm going to send you that cash that we talked about, and I will convert it to euros because I know that you are in Italy. And so I will send you the euros that we talked about for you planting this comment in the stream at this very time. So thank you, my friend. Yeah, I think it's great. I think, GTC orders, right? Like, take profit at 50% or take profit at whatever percent GTC. If I didn't have the show, that's what I would be doing. Like, if I didn't have the show, I would just have GTC orders on for things where I know my profit level because, that just makes sense to me. We have lives that we want to lead. We have things we want to do outside the markets. Like, we love the markets, we love trading, but some of us want to do some other things with our lives. Maybe not too many other things. Maybe trading is like 80, 90, 95% of it, but still that 5 to 10%, like, let's do something else. Let's just kind of shock the muscle, man. Get out there in the world. And so it's like, while you're out there, it's like, in case the market or the asset hits the level you're looking for, you kind of want something there. Like you kind of want something there to just be ready to, ring the register or obviously cut your losses if you're going that direction. It makes a lot of sense. I don't do it because of the show. And I really, really try to do all of my trading on the show. It's incredibly valuable to me. And I've just gotten extremely good feedback about that over the years. And my hope is that it's giving you guys something you really can't find anywhere else to where there aren't any broken links in the chain. Even if I do something off air, which is not that often, we spend at least 10 to 15 minutes going over it on the show, especially if it's a winner. If it's a loser, it's more like 8 to 10 seconds. But if it's a winner, right, man, it could be the whole show. It could be the entire show that day. And so, yes, I love them more than you. I would certainly use them. Brian Dowdy, hello, Dr. J. Should we play any bank earnings today? No, man, not going to do it because I'm going to be out tomorrow. And we already did the SCOTUS trade. So the SCOTUS trade, you have a very, very fadeable opportunity at your disposal. So you are welcome, my friend. I see nothing but green in the near future for the markets, given the fact that I'm playing it to the downside. So Adam Armfield, hey, Jim, I'm looking for some quality stocks for a short put today. I'm torn between SLV and Chipotle. Well, I mean, that's a misnomer if I've ever seen one. You said quality stocks, and then you said Chipotle, right? That's like jumbo shrimp. Right? That's like an oxymoron if I've ever seen one. Is Chipotle still out there? They still doing it? Chipotle 39. How about that? Weren't they down to 30 recently? I think they got down to 30 when we had them, right? I mean, yeah, look at that. Look at that, man. Wow, that's quite a recovery. All they needed was Dr. J to just say, I've had enough. All they needed, because we got out right around here, I'd say. Right? I actually think we got filled like down there. It was even worse than the chart would lead you to believe. And then that's quite a recovery on Chipotle. I mean, if you're looking for man, that's a tough juxtaposition. You've got SLV and Chipotle. I don't know if I love short puts in either one of those. And obviously, silver is never going to have another downtick. Like it's 100, then 120, then 200, then 300, and then it just becomes, normal everyday currency. Like I understand the trajectory that the internet has us all convinced that we are on. It's not usually that simple. It's not usually that obvious. And so if I was going to take a directional stance on the metals right now, I would be bearish. I would not be bullish on the metals. Which again, if you are bullish on the metals, that should be music to your ears. Like that should be the best thing you've heard all day. So you are welcome, my friends. But I would say probably short puts in Chipotle over SLV if I had to choose between the two. I don't really love either one necessarily. Maybe sell both sides, man. Like sell both sides. Maybe do a strangle. And if you want to be a little bit bullish, maybe skew it to the put side. So skew it to where you have a little bit more positive delta than negative delta, but now you're selling both sides. I would definitely prefer that in something like SLV. And so with SLV, it's like, man, there's just, I mean, the IV rank in SLV, isn't it like 100? I think it was 100 earlier. 99.5. Man, look at that. 99.5. Wow, this thing was up over 80 today. It was up to almost 81. So now it's cooled off down to 79. I don't know, man. I mean, you could go in here and sell. I mean, you could sell both sides. Excuse me. I go into SLV. I mean, I already have a strangle on in SLV. And so obviously, keep that in mind. But you could sell, you could sell a put basically where my short call is. So that's kind of funny. You could sell a put. It's a straddle. So it's my short call and my short put. But you could sell a put, like do a 16 delta put, sell the 65. And then you could sell a call, do a 16 delta call, sell like the 105. Wow, that's crazy, man. And you could do this for $3.20, right? And your buying power is only $700, $800, right? And I mean, to me, you've got a super high pop, you got a really strong P50. I mean, I like all the stats that, are associated with this trade. I mean, this seems like a really solid way to play. Now, this is pretty neutral, right? So if you wanted to be more bullish, then you could push the short call up or you could push the short put up. Either one of those ways would give you more bullish delta in here. So if you wanted to do that, I would maybe prefer that over just having a short put, just in case there's a little bit of weakness in the metals. Now I understand, like we're never having another down tick, but sometimes they kind of come and get you when you least expect it. So that's what I would do there, Adam. Sam L's in the house. Doc, you're definitely progressive, overloading the B- humor. I'm doing what we can, man. The Uncle Jay surprise FaceTime on Sunday was pure gold. I agree. I totally agree. I mean, I feel like, man, I wasn't ready for it. Were you ready for it? I was like, man, Sunday night, like just trying to watch my Niners, like polish off the Eagles. And then the next thing I know, I got Uncle Jay in my feed. And I'm like, is this AI? Like, is this real? Like, we have to ask that all the time now. And it's like, is this actually Uncle Jay? And it was Uncle Jay, like in the flesh. And I was like, wow, man, that's crazy stuff. Greg Lutton in the house. What's up there, Greg Lutton? Appreciate you, my friend. Wolf in the house. It's time for the most electric man on YouTube. Let's go, Dr. Jim, man. How about that? Man, I'm going to send you, I think you're in the U.S. So I will send you U.S. currency, Wolf, for putting that comment in the stream at this very time. So thank you, my friend. I appreciate that very, very much. Theta Trader is in the house. Greetings, Dr. Jim. That's it. I have very urgent street dentistry business to get to. Have a great show and play like a champion today. Can we say that anymore? Like, didn't Notre Dame bow out of their bowl? Like, didn't they get invited to like the Pop-Tart Bowl? And they said like, no, we're all set. Like, we're only doing gluten-free. We're only doing dairy-free. Like, we can't be associated with that. And they didn't show up. Like, that's crazy. Can we still play like a champion? Like, that doesn't sound like playing like a champion to me. Like, champions fight through the gluten. Like, champions overcome the dairy, right? So I don't know if we're allowed to say that, man. Like, I'm not sure. But Sam L, you're the only options expert who can mix a Silver Strangle with a Celine Dion song from back in the day. It's all coming back to me now. Pure B- Genisto combined high drama vocals with high vol. Yes. I mean, in terms of, thank you, my friend. But in terms of female vocalists, I mean, Celine Dion, she might be one of one. Like, I think in terms of like powerhouse female vocalists, which I know when you tuned in to From Theory to Practice today, you're like, okay, I wouldn't mind a little options trading. I wouldn't mind a little, finance education. But what I really want to know is what are Dr. Jim's thoughts on powerhouse female vocalists? Well, here you go. It's either Celine Dion or Whitney Houston. It's got to be, right? I mean, it's got to be. Mariah Carey's probably in there too, and I'm probably forgetting some people. I mean, obviously Carly Rae Jepsen's in the conversation, and Kesha's in the conversation. But I think that I think it's got to be Celine Dion or Whitney Houston, right? And I think you can obviously go with either one. It's kind of a 1A 1B type of thing, but yeah. And so I appreciate you there, Samuel. So Danish Dynamite, let's go, Dr. Jim. Hope all is well. Happy New Year. Let's make it a green one, man. We're gonna do what we can. We got one stack of cash that I can smell the smoke in the air. Can you smell the smoke in the air? And so yeah, it's happening, man. You can't stop it now. And so Samuel, dear Algo, we've got your 26 market outlook, but give us the doc physique and training prediction for 26. I don't know, man. We might try to actually get in shape this year. I don't know. It's a long shot. It's kind of like your 5 delta call or put. You're buying some strangles at this point. But we might try to get in shape. I don't know. We'll see. The injuries are doing okay. Once again, my eye situation figured out. Maybe we'll try to get in some shape. And so, or Dan, you asking about the eye? Thank you, my friend. Yeah, I'm going tomorrow, so I'll keep you guys updated, of course. And yeah, old Two-Face for the love of the algo. Appreciate you, Rodrigo in the house. What's up, Rodrigo? Ash Finn in the house. What's going on there, Ash Finn? I appreciate you, my friend. Sam L. Doc, we need a natty or not segment. Yeah, for the 2026 CPI numbers. They're looking way too aesthetic to be real. Definitely feels like some underground lab enhancements are propping up the data. Yeah, I didn't even see what the number was. What was the number? It obviously came in cold. But was it like cold, or was it just like a little chilly? Like, was it like Chicago, like polar vortex from like 2019 or 2020 or 2018, whatever it was, when the wind chill was like minus 80? Like, I remember, we were living there at the time, and I remember the wind chill was literally minus 75 or minus 80. I remember they said, listen, don't go outside. Like, if you have to go outside, like, no skin exposed. And so what did that mean? That meant, well, I'll probably still grill out today, but maybe I put some pants on. Like, obviously living in Chicago, that's just kind of how you do things. But I remember, man, like, I felt unsafe looking out the window. Like, I thought I was living in Bird Box. I'm like, man, just looking out into the outside world, I'm like, I feel pretty chilly. And so that was some crazy stuff, man. But yeah, I think CPI was pretty cold today, but I don't know if it was Chicago polar vortex cold. But it's all made up anyway. So small trades off and greetings, Dr. Jim. Oh yeah, I appreciate you. We got to that earlier. We're back to the surprise and delight, man. That's pretty good. That's good stuff. That's good stuff. Wall bib. The only early earnings that is relevant is Meta. Really? That's a pretty meta thing to say, if I don't say so myself. Meta down $13 today. Okay, February 4th. Okay, so this is the day, according to Wallbib out there. So everybody, we got Wallbib, we got iPod Touch with the Event Horizons, he's been lurking in the shadows for the last couple of weeks. He'll pop up though when it's important to let us know when the Nasdaq's going to be headed down about 25 to 35 points. But yeah, Meta February 4th. You might be right there, Wallbib, and we'll have to wait and see. We'll see what Zucks has to cook up for us. It's going to be all eyes on Meta, of course. Let's see. Samuel, I'm going to confuse the algo. Support the doc. It's time for some arm heavy sets. Arm heavy. Arms on a Tuesday. Ooh, man, I don't know if we can allow that. You're pushing the line there a little bit. Arms are Thursday, Friday, Saturday only. We've talked about this many, many times before. And so arms on a Tuesday, I don't know, man. But maybe I'll let it slide today. And so let's see. Allison Chiswell in the house. What's going on there, Allison? BTC catching a bid. Man, where are my Bitcoin bros at? Yeah, look at Bitcoin up 2,000 today. That's some good stuff. That imaginary internet money doing pretty well for itself today. Up 2,000, which is funny because everything we're doing is imaginary internet money. And so it's not just Bitcoin. But let's see. Rodrigo, if I want to go long the S&P 500, what do you think is better? 1 SPX leap versus 10 SPY leaps. I'm thinking of doing a poor man's covered call as well. Man, it's a great question. Great question. I think for most traders, SPY is going to be a little bit easier to work with. The spreads are going to be tighter. It's a smaller product. I mean, obviously, notionally, you're talking about a 1-for-1 matching there with 1 SPX versus 10 SPY. The commissions are going to matter to some degree, but there are no commissions on closing anyway. So, the 1 versus 10, the fees might be a little bit higher because you still got to pay the exchange fees or whatever. It's a little cash going to the Batista Heritage or wherever it goes. I'm not sure, but so there's you got to take that into account, of course. But I would say probably SPY. Maybe just because I'm just speaking from personal bias, I'm a bit more comfortable with SPY. And so it's the same product though, essentially, when you notionally match it. So I don't know that there's going to be a big difference either way. I would probably lean towards SPY. But man, I got to go. Wow, I'm out of time. That's crazy. That's crazy, but I got to get you guys to Tim. I appreciate you guys. I appreciate you guys so much. Try to keep the market above 0 for me tomorrow with the SCOTUS ruling and all those kinds of things. But guys, if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Thursday.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new tastytrade account today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Good afternoon, everybody. This is Tim Knight, and we are going to look at some charts together. Interesting day. This morning, of course, we were all waiting for the CPI report. And before it came out, markets were a little bit red, a little bit down. And the CPI came out, and it came out cold. It was expected to be 0.3% for the month. It was 0.2%. And markets instantly blew higher. The S&P futures lifetime high, the Russell small cap futures lifetime high, YM as well, I believe. Everything exploded higher. And it got kind of squishy and didn't last. And as I stand here now, ES is down, NQ is down, YM is down. The only thing that's up a few hundredths of a percent is still the small caps, the RTY. And tomorrow is the PPI, which my experience indicates is way less important, and maybe the Supreme Court tariff decision. For whatever reason, though, on this day, when the only real data point was the CPI, we blasted higher and then it just fell to pieces. And this is like I think the fifth or sixth time that the NQ made a move above resistance and then just fumbled it. And that's very interesting to me because it just can't seem to do the deed. I was looking at the big ETF charts and pretty consistently, the lines are laid out in terms of what support has to hold for this bull market to sustain. Tomorrow could be an interesting day. So let's jump into the charts and check out a few things. We begin with a spider, and on the one hand, we have barely a lifetime high intraday on this, but we do have a red bar. We're down for the day. We opened strong. We're trading weak right now. And the kind of line that I'm referring to is this fella right here, this ascending line anchored back here to November 21st or so. And should we break that, that would be the first, well, one small signal that there's trouble would be a firm slip under this line right here, because this is very bullish. What should be happening here, particularly with this very cool CPI, is just flying higher. Let all that pent-up energy go. It's not doing that at all. It did that for a few minutes after the CPI, but we're down on the day. And if we continue to sink below that line, and even more so if we cut below this trend line, just ring the alarm bells, because that means something's very wrong, because equity should have every reason to be just blasting higher to lifetime highs on a daily basis at this point. The small caps, IWM, those have been particularly strong the past couple of weeks. It's unchanged as of the 2nd. As you can see, we had a lifetime high intraday, and it's where it closes remains to be seen, but the same deal in terms of those two alarm bells. The first warning would be a slip under this line here, which the low yesterday, the low Friday, basically the same thing. So a cut below there would be a yellow flag, and a red flag would be if we cut below this longer ascending trend line. The cubes are weak, and they've been relatively weak today. We're down about 0.4% on this. They've sealed their gap. At long last, the cubes have sealed their gap, which has been in place since way back to November 3/4. Did we seal it? You know what? I've got to rub my eyes here. Earlier, I saw this head push toward there, but on this chart, it does not indicate that. It's awfully close. Maybe the data source is different in that opinion. So forget what I just said. The gap remains open. We got quite close to it too. As you can see, you can barely see any difference between today's high and that line that we've been following. But if we stumble tomorrow and again cut below this line, that'd be a pretty big deal. I will say that I'm short a lot of stuff right now. I've got 25 different short positions, and a favorite of mine is not very exciting, but a favorite remains Dell. I really like the look of Dell. It's a very good head and shoulders top. It has been kind of irresponsibly weak for months now, whereas so many other high-tech companies have just been thriving. So just wanted to mention that. It does tend to have, it seems to me, a history of topping and dropping. There's one example there of a similar incident. But this is a bigger pattern, it's a cleaner pattern. And again, I just really like the looks of Dell. Let's turn our attention to precious metals, as we do regularly now because of their importance in the market. And I'm going to go ahead and dare to say that I think we might be at a short-term top right now on these. They're just so white hot. I do not think the highs are in at all, for silver, for gold, for any of it. And it could be years before we see those ultimate highs. But it's like there's not a down tick in sight. So I wouldn't be surprised to see some selling in the near future. Silver itself is up again, lifetime high, 2.11% gain on the futures, getting within the zip code of the triple digits on silver, which is pretty amazing. Gold was a triple digit metal back in 2000. Now silver is about to take that. Lots of inflation helps on that honor, but silver's doing well. SIL, the silver miners, is up, but not too impressively so. We opened strong. We had lifetime highs today. We're trading a little weaker from that now. It looks probably another lifetime high close on that, but SIL up only 0.8% compared to stronger showing with silver itself. PSLV, which is kind of a less popular, less known ETF as opposed to SLV, up 2.27%, lifetime high. I believe this was constructed with a quirk that if you own enough of it, enough of the stuff, they'll gladly ship you the actual physical bullion. But as we back out farther and farther, you can see that following this base, which was kind of in 2021, 2022, and then very sloppily trading around for much of 2024, set up the foundation for this rally. And set up the foundation, in this case, for what is approaching a 200% gain from the base itself. So it's been quite an amazing run. Gold is actually down right now. So as we look at the gold futures, GC, they were at a lifetime high intraday today, but it doesn't look like a lifetime high close, which we had yesterday. It's nothing dramatic. We're down about 0.3% right now. And this has come very far, very fast. We've lifted almost $400 in just a couple of weeks' time here. And I was remembering, I often show GDX around now, but the one miner, the individual miner that I showed so frequently like a year ago was a Skena, SKE. I just really like to look at the pattern. It is up many, many hundreds of percent since those days. But it's off a little now. It's down about 0.5%. And as I said earlier about precious metals, I think we could be in for a short-term top. It's got to happen at some point. Some multi-week sell-off to scare people because sentiment is so bullish. It's so universally bullish. Everyone's crazy about precious metals. Go back to 2023. Nobody cared. Nobody cared about them. Okay, well, enough of precious metals. Let's look at some other things. Semiconductors, always important. And SMH, intraday, lifetime high, but we're barely up right now, not even 1/5%. At the moment, we've got this cute little shooting star pattern going on. Be nice if it closed at something like that. It's interesting because as you look at the semiconductors, they definitely are not consistent. You've got some superstars, which never seem to go down. You've got the giant of them all, NVIDIA, which has been really going nowhere for months, net. I mean, it's been moving up and down, but if you just sort of net it out, it's really just been grinding away for about 7 months now. Then you've got stuff, which I'm short, like, say, ARM, which has actually been very weak lately. So it's a mixed bag. And the superstars have been pushing SMH higher through this morning, but we are seeing some weakness now. Again, we're up not even like barely 0.1% right now. So SMH could be in finally for some selling. I'm continuing to hold my short position on ARM. Down again today, 3.5% approximately on that. I've also decided to grab the skillet by the hottest handle here in short today earlier, MU, which is down almost $10, down almost 3%. Lifetime, it's getting very repetitious here. I intraday, but now it's down, but this is the same with MU. It had blasted higher today, pushed to a lifetime high, and we're pretty much at the low of the day right now. So it's been selling off all day long, pretty much. So those are, and I'm giving it another try. I got on my SMH puts yesterday, but I have shorted early today SMH, just the plain old ETF, with a stop just above today's high. If we all get a shocker tomorrow with the Supreme Court or something, don't want to be hanging around for that. So we'll see how that turns out. But as far as some non-semiconductor shorts, let me just show a few odds and ends here. Arthur J. Gallagher, AJG. This one's down today a little more than 3%. And in a lot of these cases, I haven't really marked the patterns. They're usually pretty obvious, but I'll just sort of quickly rough those out with a rectangle so you kind of see the distribution tops that I'm watching for. This is better known than Arthur J. Gallagher. This is Chipotle, a CMG. This has had a tremendous run. It's gone up month after month after month since around November. But I'm thinking it's probably kind of pooped out because long term, this is sort of like Cracker Barrel in this respect. We've been carving out a series of lower highs and lower lows. Isn't it nice? You can see the cursor now. Instead of me just like invisibly painting on the screen. But we've been working our way lower. And my view is that this pushback, this retracement is no different than this one or this one. We've sealed the gap, and I think we're looking a little tired right here. OKLO, Oklo, nuclear energy company, down almost 5% today. A nice bearish engulfing pattern. I shorted it on Friday when it opened strong. Got a red bar Friday, red bar yesterday, red bar today. So this is starting to reverse away. Good. Another old friend, Progressive, PGR. This one's down. Wow, I kind of lost track how nice this was today. Down over $11, 5.25%. I think that I've described this as of all the charts I follow, this is the cleanest top of all, and it's a big one too. It goes back to August 2024. This quite large reversal pattern here, big plunge, retracement, and now we're starting to head back south on this one. So looking good, PGR. And for a change, RCL's treating me well. This is Royal Caribbean. Shorted this one yesterday. We had a red bar yesterday. We're gap down today and falling. And let's just put just a little bitty ray right there to mark that gap. But RCL's sinking too, which is good. What else? Oh, another good one. BRKR, Bruker. Down 5.61%. Definitely going the right way. Meta. All kinds of reasons I'm bearish on this one. This has continued to do nicely. This is off over $14 now. Looking really good under that top that I've highlighted. There's a bunch today, I know. Let's just bang through a couple more. Dick's Sporting, DKS. This one's down not much, 0.25%, but it is doing its best to finish what I hope is a very substantial rounded top, like so. And a new one for you here, one I just stumbled upon last night by accident. Supergroup, SGHC, which is quite young, hasn't been around that long, but as you can see, it's got a very nice looking top on that one, SGHC, Supergroup. So there you have that. You know what? There's still like 5 seconds to go left in the show, so I think it's a great place to stop. When I see you tomorrow, maybe we'll have the tariff news. We'll certainly have the PPI, and we'll do it again tomorrow. All right? So you have a good night, and take care. Bye-bye.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Mr. Vecchio, we are back, my friend, for the last call, and we are near the session lows right now. We've got E-mini S&P 500 futures here down about 38. I don't know if my switch is working here. Is it?
It switched. I saw it.
Oh, there we go. We got E-minis down 38. You got the NASDAQ down 150. You got the Dow down 530. No 50K hats for you. And the Russell down 6. Everything down between 0.25% and 1%. The NASDAQ and the Dow, I should say the Dow is the weakest. NASDAQ E-minis down about 0.5%. The Russell at 0.25%. You've got oil catching a little bit of a bid. /CL 60.84. So much for that Venezuelan oil. That hasn't seemed to mattered here in the short term. You got volatility futures up 73 cents, 4.5%. We're near the high of the session, about 5 or 6 ticks off the high, 1685. The VIX itself at 1650. You got bonds up 5 ticks. Gold giving up its move. It's down 30 now. Silver as well has reversed about $2 from the highs. We had an 89 handle on the silver futures. They're now at 86.23. And then Bitcoin has risen from the depths, up about $3,000 here at the high of the session.
Bitcoin is the one that I'm watching. Are we going to break 95K? It's fascinating that in a day, given all the other flows and the cross-asset performance, Bitcoin and Ethereum up over 3.2% each. A little bit of an outlier.
I feel like they've had their pain. I think we're due for some index level pain. I think we're due for some metals pain. I'm ready for it. Is tomorrow the day?
Hopefully not for the metals.
PPI, option expiration.
Did you just say PPI?
Isn't that tomorrow?
You said PPI. Yeah, is that something that we care about?
Does it matter anymore? That's the question. You're my guy.
No, probably not. I mean, look at the CPI market reaction today. I don't think you could attribute any of the selling that we've seen over the past few hours to CPI because the market after the inflation report bounced higher. The headlines that I'm watching are effectively Trump telling the Iranian protesters that help is on the way.
I saw
oil
that.
vol is at its highest level, IVR in the 40s now. We haven't seen an IVR in the 40s in oil since last June, which of course was on the other side of the previous U.S.-Iran-Israel kerfuffle.
Mm-hmm.
So maybe there is a little canary in the coal mine there. Like whatever's been guiding us over the past, say, 6 or 7 months in the oil market, we've shaken out of that regime and we've now entered a new phase where geopolitics could be back on the menu. And if it is, that might be a headwind here for stocks. I wasn't necessarily thinking about last summer, but April, not last April, but April 2024 at this point, we did have Israel and Iran going at each other. And it was that during that buildup in the first 2 weeks of April, that oil was going up and stocks were getting hit as oil vol expanded. So I think it's worth paying attention to. If you're an equity market bull, the rise in volatility across the curve here today stands out to me. VIX is now above 16.
Yeah. I think we kind of put in a floor on vol. I mean, I've had my own feeling that vol has been just too cheap for the last week, 2 weeks-ish. And it feels kind of like that. I don't know if I'm ready to play long vol, but I just think a 16 VIX just it isn't reflective of all the stuff that's going on. And maybe that's, me being wrong here, but you got, you mentioned the Iran stuff, Trump throwing grenades. I don't know if you were listening into his forum speech of him, he's put his patsy out there as the Fed, the Fed stopping all these big, beautiful rallies. He's kind of he has set the tone for some funky markets, it feels like, with all the grenades, with all the stuff that's happening this week, all the stuff that's happened over the last week with Venezuela and the Iran escalation kind of stuff. It feels, I feel uneasy, but I can't be
There's
alone.
a wall of worry there. No,
Yes.
but that you just described a wall of worry. The Fed's not going to cut rates for purely vindictive reasons. The U.S. is going to get ensnared in another conflict in the Middle East.
Mm-hmm.
Apparently, Trump said today that Venezuela is soon going to be giving us 15 million barrels of oil a day, which that's like half a month's worth of production for them right now, given their current just under 1 million barrel per day run rate. So I'm just trying to get the math out there.
Mm-hmm.
And I can't seem to do it. So Oil glut, who cares? Today, taking a look at this oil volatility expansion, I decided to get long out of the money call spread in oil back at 70, 71, thinking that over the next 2 months, if something does pop off in Iran, then maybe the stock positions that we're holding get a little bit of a ding. But on the other hand, there's a somewhat of a small hedge in place. So deep out of the money, let's see if we can get a breakout here, get some steam under it. Might clip the wings of a lot of other things happening right now, though. Traders speculating in silver, for example, Nick, they may be one of the reasons to perhaps chasing this thing to the upside, as counterintuitive as it sounds.
Yeah, I just showed the oil volatility index while you're talking about that. OVX : CGI near a high, or at least a recent high here at 42 and change. There was a note coming out that the CME was going to start a futures contract for 100 ounces of silver, so 1/10 the size, a mini or a micro, whereas I've been trading the SIL, which is a mini. But it's certainly in vogue to be trading silver. It's gotten into the news cycle. We've had, to be completely honest, I'm shocked at the rally that we've had in both the sustained rally we've had, because usually at that point when you get like margins increasing, CME's launching new products, CNBC is featuring the gold bugs, we're talking about gold miners, and FCX is like now the main ticker on CNBC. That's usually the perfect time to kind of unwind this sort of thing. So maybe we're just a little lagging behind on that. Maybe it's gone further than I was expecting.
You could be right. Jamal was pointing this out earlier. I know that in the in your My Chat not too long ago, you had mentioned to me something of the nature of what'd you call it? A reverse crab. SLV put butterfly. They're cheap.
Yes.
Like long the 75, 65, 55. Jamal put on something similar today. He noted that if you take a look at the 20 delta calls and puts in silver, right? The 20 delta calls and puts, first off, this, besides the fact that they're dramatically, the 20 delta calls are trading up at 111 right now.
Yeah.
Whereas the 20 delta puts are trading closer to 73. So it's like $13 one way and, a little bit more than $18, maybe we'll call it $17 in the other. It's that you're starting to see the skew change direction. And when skew starts to flip, when the skew in gold and silver starts to flip, when you look out at the options chain, it's one of those occurrences that typically coincides with a slowing of a rally, if not a top coming into play. So I'm not trading it that way personally, but I can see the writing on the wall that would encourage people like yourself and Jamal to think along those lines.
For sure. I was looking at, it's tough. And to your point, like you still do have 100% implied volatility and upside call skew. And frankly, silver, moving 5-10% a day, it's a huge product on the futures as well as the micro. Even if you're shorting SLV via shares, there's a lot of pain that's baked into that, or the potential for that. I've been looking at, and I'll pull it up real quick, just put butterflies here as a way to kind of play for a downside move, but not have a ton of that upside risk. And one of the ways you could do that is with a butterfly, which on the non-skewed side is going to be cheap relative to the width. So, you're getting a 10-point wide butterfly here for about $2. So you're, risking $2 and change to make up to, $8-ish is your max profit here. But you can see if you change kind of some of the metrics here, and this is one thing I like to do on the analysis mode in the platform here. If you even go out like, a handful of days here, and this is kind of going out to like half the duration, and you crush some of that implied volatility. So when you use the contract implied volatility here, you can do it per contract or as a whole on that expiration. If we crush some of that volatility, and a 10 or 15 point vol crush is not a huge amount given where volatility is in silver. It probably gets it still to an above average kind of range here. You could see the potential value of this. It's almost like a double if you get that sort of move, even if the stock doesn't really go, or the product doesn't really go all that much. You don't have to have the move to 65. You get this move down to 70-ish, and it's almost a double, which is where we were trading at, 2 days ago. So it's an interesting way to be sort of short volatility because you're short that tail volatility, but also get a little bit of that positive gamma if you do get that downside move. And it's just really, really cheap to put on. And thus I have talked myself into it. And I will tell you where I get filled.
Now silver's up 22% thus far this year, Nick. It's a pretty big deal. Oh, was that just the word?
That
big deal?
is.
I suppose we should go into it.
Oh, that's good. You are the king of transitions, my friend.
I'm working on it. Yeah, it's almost as big of a deal as the big deal Tasty has right now. Through March 31st, 4% cash match, minimum $1,000 deposit up to $10,000. 4% cash match, Nick. That's unheard of. In fact, if you go try to find that offer anywhere else among our competitors, you'll be hard pressed to find it. So go to tastytrade.com/big deal. Again, 4% cash match up to $10,000 now through March 31st.
Beautiful. I've been recording some voiceovers for cash match. And when you're trying to say it real fast as a Italian guy with a Chicago accent, Did you
hear me tripping over it?
Yeah, you had the same problem. It's a tough one.
Yeah.
You got to really focus.
Yeah. That's that was we're going to change the script here. Ryan, how could you do that to me and Nick? What are you thinking? Naming the program Cash Match?
Yeah. Sorry about that.
It's okay. You're forgiven. Appreciate it though.
So we have this move up in the metals today. They did pull back though. I mean, silver's up 1% or so, but gold's down a little bit more than 0.5%. So is copper. What do you make of the bonds in here? What do you make of the bonds in here right now? I'm getting killed in bonds right now. I'm looking for an answer. It feels like we've been stuck to 112 in notes and 116, 115 or so in ZB for months.
Mm-hmm.
What's it gonna get us to move? The move index here, 62. We haven't seen a reading this low since 2021.
Yeah, it's kind of bonds have been trading 115 to 116 for the last month. So any directional shot you've taken has probably been a tough trade. I mean, when you look at like the FedWatch tool, we don't really have much coming in rate changes until around April is kind of where they start to price in a little bit of some of that change. So I don't know. I might blame like the move in metals and just my thought for the last couple weeks has been, and with the E-minis here, I think this is probably our highest volume day. You get a little bit of a downside move, but we're at 1.2 million contracts, which is still light for a wide two-sided action day. I mean, we've had about a 80-point intraday range, by far the widest range we've had in the last a couple weeks. I feel like bonds have sort of suffered the same fate as equities, where it's not interesting to trade it. Like, I just don't think there's just much trade going on there. I think it's all about the metals right now. Like, I think they've stolen the show. So maybe to your point, that's the flip, is if you see some of the liquidity come out of metals, it starts to rush into other spots.
Maybe that's why we get a Bitcoin breakout here, right? Gold, silver, the rally is bucked, and finally liquidity goes back into the crypto space. I just 95K to me is such an important level. It's been a ceiling for the past 5 weeks.
Yeah.
3,300, 3,400 in Ethereum, right around there as well. I mean, the charts look close enough from my view. So, I mean, if Bitcoin's getting a bounce, I'm hard pressed to think that everything else is going to come in too significantly. Money's not going to flow into the riskiest segment of the market unless there's some capital being allocated to things that are less risky than crypto along the way. Nevertheless, what do you make of the sector performance here today, Nick? I was looking at my screen earlier, and it looks like it's actually a pretty good day. I know that the top line levels for the indexes aren't overly exciting given what's happening in the S&P and the NASDAQ, but I've tracked 25 sector ETFs. I see 17 of the 25 still in the green for today's session.
Yeah, I mean, my dad was talking about this the other day. RSP is another way to kind of look at an equal weighted S&P index, but it does seem like it's kind of a rotation out of the Mag 7s. A lot of the of the group, like your Meta is down 12. Microsoft has been a dog all day today. It's only down 8. It was down as much as 10, 11, 12. Nvidia has been stuck in the mud around 185 here. Apple, gave up 20, 30 handles from the middle of December highs. So it does certainly seem like it's a little bit of a rotation, a little bit of a broadening out of breadth, which is typically a good sign. I mean, right? Like that's a positive thing. So I don't know. Yeah. I mean, I've been seeing that across the board. I'm with you.
But the Microsoft move to me is the most interesting one, because the news headline today is that the Trump administration is going to step in to help alleviate the rising cost of electricity.
Grenade.
Affordability is
grenade.
Well, yeah, I've been told that affordability isn't really a problem for people right now, but if it were, this is something that I might be considering. Right? Here's the issue for this, Nick. I think people are aware of this. My power provider is called NYSEG. People down the street have one called Con Ed. I don't think either of those companies operate in Illinois, and that's the state of the U.S. Grid system effectively right now. It is not federalized. It's not centralized. It's done in this patchwork way on a state-by-state level with lots of different operators and lots of different structures for how these power companies operate. So it's a good drum to beat against, because in the counties where there have been data centers built, the CPI data that's been coming out, basically inflation's 2 to 3 times more than the headline levels if you're in a county where a data center has been built in the past 2 years, and it's all electricity costs going up. But the president of the federal government doesn't have a lot of ability to change anything here, and it's not like states can do much either. So it's a nice gesture by Microsoft. I'm curious about the follow-through, because it just seems so improbable that Microsoft could be strong arm into paying for these things. I think this is going to be an excuse for them to back out of their data center contracts. And maybe that becomes the catalyst for a new, is the AI bubble coming down round of fear.
That's an interesting angle. I like that. I kind of look at it the same as the tariff situation, because everybody was like, oh yeah, the tariffs are going to be like, nothing thing. It'll be like 5 or 10%. It's just like kind of posturing. And then he comes out with the board and he's got like 25 here, 17 here, 12 here, 4 there, 14, 50, like it's all over the board. And that was kind of what sparked the down move. It was kind of the same situation where he's kind of posturing about, throwing this grenade. Oh yeah, Microsoft's going to pay your electric bill. And, Powell is the reason why we don't continue higher 20% every day. What happens if he figures out a way to kind of start this? He gets a little pissy about it.
I would not put it past him to announce something of the nature that tries to centralize this to provide broad relief. It's also like with what we're hearing about the credit card companies. Like, I mean, AXP is down only a little bit today, American Express, but you look at like your Visas and your MasterCards of the world, and even as a knock-on effect to a smaller degree, some of the airline companies, they've all taken a hit on the back of this announcement last week that they're going to try to cap credit card rates at 10%. Now, from my understanding, it seems like that'd have to be an act of Congress, and House Speaker Mike Johnson was out today telling us that that's not going to happen. The 10% cap is not feasible for a variety of reasons. So do we buy the dip on these names because of something President Trump said? There was that phenomenon in his first term where if you bought the dip and held the stock for 3 days after it was name checked by the president, you were able to turn a profit. So maybe it's another one of those situations where it's a lot of bluster, but rather I should say there's smoke, but not necessarily a fire there.
I mean, we saw that happen within about 45 to 60 minutes for the
Last
defense.
Like
they
just happened.
It was one tweet that cost about 10% across the defense industry. The entire thing, every single one of them went down about 10 to 15% on stopping dividends and cutting executive pay. And by about the open of the futures, all those stocks in the after hours were back, if not higher than where they were prior. So I agree with you. I did get long Visa. I'm long AXP as well. I did some diagonal spreads there to kind of limit the damage to the downside if, this turns out to actually be something. But yeah, that's the other side of the coin. I feel like those are the two sides of the coin. It's either, this is now we're talking either blast off where he, stops all of his grenades, or he figures out a way to actually do all these goofy things that he's saying, and it's just more bigger downside. I guess the real pain would be chop and nothing, which is exactly what's happening right now with E-minis at 7,000 as we speak, or just about 2 ticks below. They rallied about 15 handles.
Yeah, Nick. I mean, I think chop would be a nightmare for me. I hate choppy markets. It's that's always the worst for me. That's my look what's going on in bonds, right? Imagine that in stocks. I'm going to get eaten alive.
Yeah.
Yeah. I think you really raise a good point though. Like, what if tomorrow the tariffs come out and he comes out and says, "Listen, I wanted to give you guys $2,000 stimulus checks, but now I got to pay everyone back the tariffs."
Yeah. Oh,
right.
That's good. That is good.
But
just turn it on its head. I like that.
Yeah. It's not his fault, right? It's Powell's fault. It's the Supreme Court's fault.
Yes.
But we do need to do one more transition here, Nick, because I think that what's going on the credit card companies, the airlines I'm glad you referred the credit card companies to me, dare I say. That's what friends should do. They should refer things to one another, like perhaps refer a friend offer here.
Great
where
offer.
If the referrer and the referral goes through, $100 for each, Nick. tastytrade.com/refer a friend. Refer your friends, earn bonuses. It's a pretty straightforward deal. Nick, what else is there to say about it? You've heard it here before. They've heard it here before. But it's a nice way to put a little bit of extra spending money in your pocket. Get someone into Tasty Nation. Make them a Tasty Trader.
Love it. As we go into the close here, E-minis down 17. We're sitting at 7,000 basically on the dot here. You got the NASDAQ down 64. The Dow down 400. The Russell down 3. Oil has remained at 60.80 here, up $1.48. Volatility futures up about 50 cents. They've come in about 20 or 30 ticks. Bonds up 6. Got gold down 20. Silver has bounced a little bit, up $1.38, and then Bitcoin up 3,000 and change. You do have a couple earnings after the close today, or maybe are they tomorrow morning? Yes, they're tomorrow morning. So you have Wells Fargo, which is a tough one to trade, just not a ton of volatility there, and then Citigroup is one of the other ones. We had JP Morgan this morning. It has fallen from the open. It's actually at 311 right now, so near the low of the session here. I did just a 50-50 shot to the downside in Citigroup. It's trading near highs. Did an at-the-money put spread. I just figure you're seeing the move in JP Morgan. I'm going to play it in Citi.
The banks look rough today. I know JP Morgan, this is the 6th earnings report in a row in which they've traded lower following the release. The news that's coming out of the administration, of course, with the credit cards, probably not helping financials the past few sessions generally. But I look at XLF there on the screen real quick and just take a horizontal line off the high that we had in September. It's been really nice support. It was a really nice support level, right around 54.5 in our market. It was support in December at the start of this month. And then today we're actually falling back through it. So, if the financials right now, if they're falling back, that puts Wells Fargo, Citigroup, right? The tone for the sector now isn't as good. And now, in my view, from a technician's point, it's a fake breakout. So I wouldn't be looking to buy the dip here in the banks just yet.
Yeah, I look at them and I think that the risk profile is skewed to the downside. You might have a couple points to the upside, but the downside might be 2 or 3 multiples of that. And so that's kind of how I'm playing it here. I did the same thing in JP Morgan, worked out nicely. Actually now I have a butterfly that's right at the money here, so it's kind of perfect. Cancel crash because E-minis are at 7,000 here. I guess we're back on the docket for 50K tomorrow in the Dow, right? Why not?
Who's to say that the Supreme Court decision wasn't just released and a few savvy traders are hopping on it before the decision tomorrow morning?
Oh, nobody would say that. No such thing exists. No way.
Never. It's not like the president tweeted out last week's non-farm payrolls report on Thursday night. So who am I to suggest that this administration's a sieve? He did, by the way.
I know. I saw him tweet out some of those things. Yes, that was very interesting. Mr. Vecchio, that's all the time we have today together, but there's more time for you in overtime. That's coming up next. Stay tuned for that with Chris and Ilya. We'll see you in the morning tomorrow. Big day on the docket. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There's a phrase for this. When the time comes to buy, you won't want to.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Can save stocks, volatility jumps. It's Tuesday, January 13th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the rest of this, trading 30 minutes. Show goes on at 4:30 Eastern with Ilya and Macro Money. But we do have a futures market here in the final few minutes of the day that gives you a little bit of a lift to the stock market. Crypto higher on the session, the most noteworthy spot on the board outside of the banks, which are noteworthy for the wrong reasons. Bonds meander and mixed after CPI. Rate cut odds continue to come in. Gold and silver touch new highs, if only briefly. Silver over $89 an ounce before settling in closer to $87. Gold back under $4,600 an ounce, despite its trek to new highs. Again, ever so briefly. The yen is quickly falling to new lows. 6J at a new cycle low with dollar yen pushing through its 2025 high and now running into the highest levels that we've seen since summer of 24, which of course precipitated that fun start to the month of August, Ilya. Maybe, maybe not. But generally speaking, it's a day in the market looking forward to what happens next with the Fed, what happens out of DC, not just because of 1600 Pennsylvania Avenue and the tariff decision that Trump may react to tomorrow morning, but also what's happening on 1 First Street, which is where the tariff decision will be made at the Supreme Court, Ilya. Mm-hmm. I've been told that you have a theory of sorts. Is it related to some of the day's pressing news?
I would say so. I mean, you got the CPI number today, and it had an impact for just about 1 hour. And it was really interesting which way it had an impact because it was the way you would expect. If you look at what happened today, stocks liked it. Dollar didn't for about 1 hour. So you got a pop, things digested, and then everything went pointedly the other way. Almost as if the markets were waiting to get on the other side of CPI. They saw it. They acknowledged what it was. They said, "Oh, good. This is okay. This is solid. The underlying dynamics here are holding. Service sector inflation continues to cool. That's the one we wanted to be worried about. Understandably, it's the sticky bit that's been an issue for the Fed for years now. Goods continue to see plateauing in that inflationary rise. So maybe the tariffs really are going to fade away and get rebased out of these calculations in the coming months. Maybe the Fed is right, is what these CPI numbers said. And the market said, oh, goody. Okay. And that was for about an hour. And then they clearly chose violence. And it seems like what that was all about, because if you look across the markets, the Fed outlook didn't really change very much. The price of gold is tellingly steady around that. Bonds didn't really go anywhere. Pretty steady there. Again, emblematic of what these numbers mean for the Fed outlook changing, which is not very much at all, it seems. The standout on the board is crude oil, which has itself a 3-month high today. Now, we've talked about this for the past several days, and this idea that if you start to put the dominoes together here, you've got Iran teetering, Venezuela in some kind of limbo in the best case, and the U.S. is boarding Russian tankers. That's a lot of China's crude oil supply mix. And so, especially Russia, obviously. When you look at all of this together, then, you say, wait, what if China has to suddenly go and tap some of their other supply mix more heavily because these other things are disrupted, be it Saudi or elsewhere in the Gulf, Iraq?
The global supply glut doesn't look like a glut anymore.
Doesn't look like a glut suddenly when the world's second largest oil consumer has its mix of supplies shaken up. What's the lead time between a rise in crude oil and its impact on CPI? About 1 month.
Yeah, I say, isn't it like less than 3? Because of that,
about a month.
Because of gas prices, because it takes about a month for it to roll into gas futures.
Yep. It's about a month. And so if you line up WTI and 1 month lagged headline CPI, you start to see it. And so
yes,
the question is, does this inflation data even matter? Because it's not like China is going to go looking for supplies for tomorrow and the day after. These are big disruptions. They're lasting. Venezuela is not going to get turned on for a while, and it's a small producer anyway. The larger issue is if we're now boarding Russian tankers and Iran falls over, that's a whole lot that has to get bought from Saudi and the rest of the GCC. And that's going to strain those supplies. This is not going away fast. This is not the thing that you want if you want Fed rate cuts.
Can't help but wonder. One of the worst things that could happen to the global economy this year would be if China muddles through and the officials determine that they don't need any more fiscal stimulus, in my view, because then it's this just slog. It's an albatross around the market's neck. They're continuing,
which is what I'm expecting. I'm expecting slog for years to come.
But if a cutoff of oil supplies persists, that could trigger a fiscal stimulus response, if only for something like building infrastructure for the curation of domestic energy independence. So I don't, ironically, it could be a spark that gets China to be a little bit more assertive domestically, economically speaking. Just, I don't know if that's the prime scenario, but I would point out though, technically,
it's unclear. It's unclear. It'll be helpful because they'll need energy to build energy infrastructure.
What we have here in crude oil is as textbook to me as what a bullish falling wedge looks like right now.
Mm-hmm. I added to my longs today.
As did I. I bought the 70-71 call spread expiring 60 odd days out. We're at 63 days here. 70-71. It's small, it's cheap, it's out of the money, it's a potential 6 for 1. Why?
I got 94 days of duration in this thing. I'm looking for a little bit of legs here.
The way that you play a wedge is typically for the wedge to bounce back to its base, which would be the highest point that started the decline, and that goes to the June 23rd high, which incidentally enough, Ilya, the last time that we saw an IVR, the high IVR for today is 45. The last time you see an IVR in the 40s, you're going to have to go back to the end of June, just as the market was squeezing out the Iran, Israel, US, geopolitical volatility that was put into the market. So that tells me two things here. One, the decline that's been in place since last June, as well as the volatility regime that has defined the oil market since late last June, that is now dead. It is a chapter in the history books. We are now in a different type of world, right? And the world that we're in is more reminiscent of a buildup into some geopolitical risk akin to April 24 or June 25 than it is really to anything we've seen in recent months. It's also very telling that the mere possibility of U.S. involvement in Iran is moving the market more than the realized capture of Nicolas Maduro and effectively what's now become Venezuela as a vassal state to the U.S. That didn't move the oil market. The prospect of something in Iran is moving the oil market here. So as for me, will this become a geopolitical event risk rally to fade at some point? Probably. They usually are.
At some point.
But early innings here, folks, because if you tried doing that in early June last year, you had to watch oil go from 60 to 70 in the span of 2 weeks before finally collapsing and coming back in. And you really never got back to 60 for a few more weeks thereafter.
And moreover, this is not the same thing. It's one thing to see a bunch of shooting go down and then the shooting stops between two parties that don't really want to be shooting at each other because neither one of them really wants that level of smoke directly. That's one thing. This would be a structural disruption of a good bit of China's energy supply mix and a long-term lean on other sources. They're not going to be left without power, let's be clear. They're not going to be left without oil. This is not that. Let's not.
Is that the suggestion? I don't think
Let's not get crazy. It just means that they're going to go to Saudi, for example, and say, we're going to need this many more million barrels out of you. And those barrels were spoken for, and now more need to come out. That's going to strain supplies until more can come out. And more coming out is not an everyday, easy, now it's off, tomorrow it's on kind of a thing. So it'll strain supplies until the market can adjust. So we're talking about at least a few months. Best case.
I'm looking at the Invesco Deutsche Bank Commodity Index Tracking Fund here. DBC, Ilya, is a little bit different than DJP. DJP has higher weightings of metals than DBC does. But both of these so far, I know it's been a topic that we've chimed in on in recent weeks, both of these potentially turning a corner for 2026. I know that commodities have been moving up, but you could see here breaking through the 2022 highs at the end of last year and circling into the highest levels that we've seen since summer of 22 in DJP, the more energy intensive tracking index fund. DBC, that's still holding near the highest levels that we've seen over the course of basically all of last year and going through 24. But no matter how you slice it, right? And I've sliced this a number of ways. This is either part of a longer term bottoming process when the downtrend started to break and we've moved into like a left shoulder head, right shoulder, inverse head and shoulders bottom here. It could just simply be a triangle, Ilya, that looks like it's coming together off the lows. These are weekly charts. So no matter how you slice it, it looks like the commodities are going to be on pretty strong footing for the foreseeable future, which, oil, it has not had the benefit that gold and silver have had. It has not had that tailwind for myriad reason, but this is what should be a material shift right now, not just in the chart, but in the volatility profile that now warrants us to take a different tact for how we're approaching this market.
Yeah.
Or in your case, you've been doing it for the past few days, but I finally got confirmation today.
Yeah, I mean, I'm in here. I'm watching it go at this point. And I added today because I think this might not be a thing that goes away very fast. This might be something that has a bit of room to go here. And I'm going to be watching very closely. I got a bunch of duration in it, basically with the idea that this is not going to be something that's easy come, easy go. If this works the way it works, if this is what this is, this has tons of knock-on consequences. I mean, if we find crude oil back in the direction of 68, 69, 70, back to those wedge highs, then the inflation story is going to look completely different. The Fed rate story is going to look completely different. All of those desires for Fed rate cuts are going to look totally misplaced, at least on this timeline, which is interesting. The markets now see June and September. So they've moved it along the timeline beyond Powell's chairmanship, which is interesting.
Powell's chairmanship is not ending this year.
Apparently.
Powell's chairmanship is ending on January 31st, 2028.
Explain to the folks that may not be familiar.
Even Treasury Secretary Scott Bessent noted that Trump and the DOJ, thanks to one Bill Pulte, the FHFA director, it's put Republicans on the Senate Banking Committee in a position where they do not want to approve any of Trump's appointments to the Fed should a seat open up. Now, right now, there are technically 2 seats, Mirren's, which is a temporary appointment.
Yes.
That could be extended to a full appointment. And then there's Powell's, which is set to expire in May.
Right.
In the event that Powell steps down from Fed chair, but does not leave the Fed Board of Governors because his term ends January 31st, 2028, there would be no seat open for Trump to appoint a new Fed chair. So just out of spite, one, to help the Fed maintain its independence, Powell could stick around. 2, if this lawsuit continues because Powell has not left the board, he's not allowed Trump to have his picks, so the DOJ is pressing on to try to pressure Powell, then you could have the Senate Banking Committee prevent Mirren's seat from being reappointed as well, which kind of leaves Mirren in there as a holdover, which holdovers have happened. But to that point, Ilya, then the FOMC committee itself can vote in Powell as chair pro tempore, which they did from February through May 2022 during the window with which he was serving but had not been formally reappointed for another 4-year term yet. The Fed independence is a really big deal. There's a reason why. I mean, Powell's among the most popular people in public life in the country. If you look at polls, he's more popular than any Democrat or Republican politician anywhere.
Not
Vance,
shocking.
Sanders, AOC, Trump himself, right? Powell has broad bipartisan support in the public, in the Senate, in the House. And now he's of the position where now you have all these former Treasury secretaries, Fed officials on both sides of the aisle sticking up for him. You have central banks from around the world co-releasing a letter today talking about the importance of the independence of the Fed. So,
because this is the one thing you cannot break.
But Powell went from being a middling upper half, like top 3, top 4 Fed chairs ever. And like I say 3 or 4 because he's not 1 or 2, to now a guy that whose entire legacy and perhaps the future of the Fed is predicated on whether or not he can shoulder the public strain of dealing with Trump's agita for the next several months or maybe even years. And so if I'm Powell and I care about the Fed, I'm Leo in Wolf of Wall Street. I'm not leaving.
This, by the way, is an interesting question. What would you say are your top 3 Fed chairs?
Well, before we get into that, a Supreme Court decision next week could upend all this.
Yes.
Right. So if the Supreme Court comes out and says that Powell is not different, we talked about Humphrey's executor all last year.
Yes.
If he is just a regular appointee that the president has the ability to fire at a whim, then Powell's gone and Trump's getting his Fed chair. So, SCOTUS is important twofold. Who are the top 3 Fed chairs of all time? Certainly
For
not
you.
Arthur Burns. For me, Paul Volcker.
Okay, you and I agree there.
Ben Bernanke.
You and I agree there. That's 2.
Greenspan is not.
Greenspan is not. Greenspan is not.
I mean, Powell's going to be.
Powell is my 3rd.
Powell's going to be the most important Fed central banker since
Powell's
he's the most
gotta be
central,
3rd.
since Volcker. And if the Fed maintains its independence the next few years, then Powell will be the person who helped keep the neoliberal world order in place. So he will rise to the top of the rankings for Fed watchers.
Yeah. I mean, if you think about central banking in the US and you don't restrict yourself to the current Fed structure, and you just think about central banking in the United States, you'd have to be thinking sort of top 4. You'd have to be thinking Alexander Hamilton as the sort of founder of central banking in the US. Maybe then Paul Warburg as an honorable mention for having designed the Fed system as it exists. And then the 3 we just mentioned. And Powell's right in there.
It's a good point. He probably rises to the top now, whether you like him or not. Is Yellen up there? You got really low inflation, strong employment, and higher equity market returns. I think that's
and very accurate economic forecasting, which you got to give to Janet Yellen. I mean, decades of really standout economic forecasting, which we see in John Williams and his importance, her protege. You see that still.
Well, what I think about,
but not on the level of a Powell or a Bernanke or a Volcker.
What's really interesting about the Powell story here is that my congressman in particular, Mike Lawler, who voted with Trump 100% of the time in 2025, it's one of the text messages that I receive daily now, reminding me that my congressman voted with Trump 100% of the time. He put out a statement yesterday saying that he values the independence of the Fed.
No, it's a bridge too far. Yeah.
It's a bridge too far for a lot of people. So we'll see how
because this is the one thing. As we've talked about, you can argue about a lot of things, but if the U.S. government can't borrow money in a reasonable way, and that goes to the independence of the Fed and keeping borrowing costs in check, that can't happen. There's no point to argue about anything because we can't afford anything, not from the right or from the left.
Ilya, credit card ban, cap at 10%. Mike Johnson says it's not feasible. Doesn't sound like the House or the Senate is going to take up legislation that puts something in play to that effect.
Oh boy.
January 20th is apparently a deadline for credit card companies to institute a 10% cap. Do we trade it or fade it? Do we trade the breakdowns here in Visa, MasterCard, American Express, or do we say this is not going to happen and we should be selling puts down here? Mind you, volatility readings in these stocks, in Visa, for example, the IVR is 29. We had higher volatility readings going into Thanksgiving. So there is a sell-off here, but waiting for the fear.
Yeah, this doesn't look like it's ready. It doesn't, like, if you were going to sell this, I think you'd want more confirmation now at this point because you're sort of sitting at support. You're sitting at levels that have held up in prior iterations of what we're looking at here. So to that end, it doesn't look like this is the spot where you would go, yes, okay, this is where I'm going to lean short.
I think you got to fade it. I think you got to fade all that weakness in the names that are affected by this credit card cap news. I think that's what I'm going to be doing tomorrow. We'll see what happens with the tariffs, right? Because if SCOTUS chops down the tariffs, maybe you're going to see the administration peel things back a little bit. Tomorrow they could announce a whole new round of tariffs. The simplest thing that they could do for fighting electricity costs and input costs that are bothering people running up into the midterms is to let the tariffs roll off and not reinstitute them and say, like, we're going to work with Congress to get this done and then push it off until next year. Because because it's midterms, right? Claudia Sam, the former Fed advisor, said that there was the Trump taco trade. Now it's the Big Mac trade. Midterms are coming. Midterms are coming. And that means you're going to hear a lot of populist policies thrown against the wall that probably don't go anywhere. But they will be discussed and they could impact markets. So Visa, MasterCard, some of the airlines like Delta was just down another 2.4% today. Delta gets $7.4 billion a year from American Express for their Sky Miles partnership, and Delta's operating income for 2025 is only $6 billion. So they kind of need each other to keep the party going, which also I learned about yesterday doing some more research onto this. Did you know that Delta has a credit card with American Express that has I think a $1.1 billion cash draw limit?
Oh, wow.
It's how they pay for all their fuels. Which is then, hold on, if they're buying all their jet fuel on American Express, are they getting Sky Miles points for it? And then are they selling those Sky Mile points to the consumers? I don't know. It seems like a whole charade.
It's a whole thing. It's a whole thing.
They have $1 billion Amex card. That's not the limit on my American Express.
No, but we did. There was an article in The Economist here about the buying of luxury goods, and the second biggest art sale in China a couple years back was on an Amex card. We're talking, many millions of dollars, but on a card. And the article in The Economist, of course, was about how those kinds of things are fading away because consumers in China don't want to consume, which brings us to our question, will we get fiscal stimulus in China? We better, because that economy has been in deflation for 2 years. More now.
I'm trying to find the oil about jet fuel for Amex, but it's in their 10K form from last year. If anyone wants to just look this up.
Just have a little glance there.
Yeah, but you'll find it in here. They talk about how they use their credit, that they have an American credit card. We have a purchasing card with American Express for the purpose of buying jet fuel and crude oil. The card carried a maximum credit limit of $1.1 billion as of December 31st, 2023. It must be paid monthly. At both December 31st, 2023 and 2022, we had $1.1 billion outstanding on this purchasing card, and the activity was classified as a financing activity in our cash flow statement. And that is a relic of what happened in the global financial crisis, Ilya, which is why I find Delta Airlines as part of this conversation so interesting. American Express bailed out Delta in the global financial crisis.
Yeah.
So they're that's why this is such an important story here. So if the credit card cap's not put in place, like what are we doing? 16 IVR? Where's the fear here?
No.
Buy the dip. I'm gonna buy the dip. This is gonna be the trade that we do here, Ilya.
Okay.
Short the 65, 60. We're going to flip this. Short the 65, 60 put spread. That's not going to give me enough money to make this trade. See, there's just no volatility. You can do a 4-to-1 here. I think this is all overblown. Delta, American Express, Visa, MasterCard. Taking all of Elizabeth Warren and Bernie Sanders' best ideas, Ilya.
I mean, look at it. You gotta sell these midterms somehow. And if your base is a populist base, those are the kinds of ideas you got to give them. And if you got to come at it from the left with smattering of the right atmospherics and the right packaging, then why not?
Gotta love that horseshoe. Overtime's out of time for today. We'll be back tomorrow, same time, same place, as we are every Monday through Thursday. 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Stick around, though. Ilya's sticking around with you. He's here for Macro Money. You're watching Tasty Live.
See you there, everybody.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What have we learned after this CPI data, and did it make or break the markets as it could have done? That's what we're asking ourselves today on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live, and we have a very interesting set of considerations to contend with here. The markets seemingly take the economic data in stride. We'll see what it showed and why that seemed to be the case. We likewise have a very interesting situation happening in crude oil that seems to be suddenly front and center, not just for commodities, but for stocks as well. So what we'll do here first and foremost is take a look at what the price action did today. We'll go over what the inflation data showed us. There's more inflation data coming up tomorrow. We'll take a look at what that is and see if we can't make sense of what's going on here, because there does seem to be a new catalyst that has made itself known. And this is going to be an interesting sort of situation developing now in the coming days, because there's a lot that seems to be suddenly coming together and a lot of dominoes that suddenly seem to be falling. Here is the market performance, and we can see that stocks ultimately end the day less bad than they were looking. They managed to trim losses a bit into the end of the day, but we still look negative across the board. Yields fractionally lower after that CPI report, although Fed policy expectations are not meaningfully changed here. And so what we end up with is a relatively quiet ultimate response to what the CPI data showed. But the big standout here, crude oil up almost 2.6%, hitting a 3-month high today. Now, we also get a meaningful pop in Bitcoin. It is up 3.4%. But sort of in the context of where it is, it's only at the top of its range dating back to early December. We've been here before. This is the second test now of those early December highs. We tried for them on January 5th, just as the markets resumed trade after the new year. We're trying the same area again, pointedly not breaking through it. So we're in a situation where Bitcoin does look like something, but in the case of Bitcoin, a 3.4% move is nothing. It is usually a lot more volatile. Moreover, in the case of crude oil, we're setting 3-month highs. In the case of Bitcoin, we're just up to a range top that we've been looking at for the better part of 6 weeks. So one of these is not like the other. Now, how did this ultimately end up shaking out in the market? That the euro is a little bit lower. The yen is a good bit lower, so we have a stronger dollar. Gold corrects a tad, but ultimately isn't very far removed from the record highs it set just recently. As a matter of fact, it is within just a hair here of the high that it hit, and actually intraday set a new record high, but we have a little bit of consolidation. In context, yesterday was a rise of 2%. So this little pinprick here of a loss is not exactly changing the narrative. But in the wake of CPI, we have a stronger dollar. We have a weaker view on sentiment. Yields are in. Gold has stalled. And really the only thing moving is crude oil. So how does all this make sense? Well, let's first take a look at the inflation data. That was the big news on the economic front for today. We get an outcome that's very close to expectations, exactly in line with forecasts on the headline, 2.7%. Core comes in at 2.6, a touch lighter than expected, and unchanged from the prior month. If we look at the breakdown here, we can see a little bit of shifting around, but not much. Headline unchanged, core unchanged. For core, that would be the lowest reading now matched for a second month since early 2021, April, if memory serves, or March. Headline is now unchanged at a 4-month low that was set in November, and we've reiterated it here. But we're not going very far. Now, we can see that most inflation still lives in the service sector. 1.85 percentage points of the 2.7 is where we are still, whereas goods are slightly rising, a little bit more than a quarter of a percentage point contribution, but not exactly the same size as what we're seeing in services. Perhaps the more interesting thing is the slight shifting around in food and energy, but those are outside the purview of the Fed. They can't exactly mandate global markets to do this or that thing. They have to be reactive. And so the things that are the most relevant for policy here are the core readings. But hold that thought about food and energy, because boy, will we come back to it momentarily. If we look at the changes in contributions, we can see that basically what we had was a pullback in energy costs, a slight one, but a pullback nevertheless, mostly offset by slight gains in food prices and by a small uptick in core inflation, both in services and mainly in goods. But the overall backdrop here still favoring basically the Fed argument for rate cuts, which is to say goods inflation appears to be setting up some sort of a post-tariff plateau, whereby this looks like there's a decent chance that, in fact, inflation will be factored out, at least tariff inflation will be factored out from the headline numbers by statistical rebasing once we get on the other side of it in April or so. And then we'll see. But the Fed's core argument has been that the labor market is softening. Services inflation, which, as we just saw here, is the biggest component of the issue, and that seems to be convincingly trending lower. The problem is the tariffs have lifted up goods inflation, but if that is in fact starting to peter out and will rebase out of calculations, let's say going into May, well, then we are in fact going to have some kind of a positive situation here, allowing the Fed to keep easing. This was their argument for rate cuts all along, that if inflation is doing this and the labor market is soggy, it's time to pay attention to the labor market, or at least more attention to the labor market, because inflation is going the way you want it to go, ostensibly. And again, we'll get that along with crude oil momentarily, because that assumption might very well be in question. We also see some welcome signs here that this was a more normal inflation report, in the sense that the vast deviation that we saw in December's numbers does not show up here. We can see that the relationship between these numbers and the Cleveland Fed's nowcast, a very closely watched benchmark and a sort of sanity test for if you input all kinds of leading data into a good model and it spits out something similar to what the actual surveying is meant to show, well, then the surveying is probably close to valid. We see here that there was obviously a big counting issue after the government shutdown, where October CPI didn't even come out. November's had these wild deviations. For headline, they were the biggest since 2023. For core, they were the biggest since the COVID disruptions of the economic data amid the lockdowns back in 2020. This looks like a much more normal report. In fact, if we look at the relationship between the numbers and the data, we can see here's the hiccup after the government shutdown. Here we're back in line with these forecasts, and these forecasts suggest that the next leg lower is indeed down. We're looking at a move meaningfully lower, as a matter of fact, for both headline and core, and that ought to be encouraging if you're the Fed to cut rates further, which is, of course, exactly what the markets want to see. To put this in perspective here, this is, at this point, the expectation that we are going to get to just 2.2% on headline inflation in January and 2.45 on core. So this is a relatively impressive sort of a thing here. And as we look at what it means, markets might be expected to be relatively happy with this outcome. Now, all that is well and good, except for the actual market response. And that's what we see here. Now, what's interesting about this now is you can clearly see that the markets did, in fact, see the data and reacted to it as you might expect. But then something else occurred. Something took the narrative over. Here is where we have the CPI numbers right here. The dollar ticks down. This is a dollar against an average of its major counterparts, euro, pound, yen, and Aussie, the top 4 most traded currencies not named US dollar. So here's that move. So CPI numbers come out. It looks fairly encouraging for Fed rate cuts. Everybody goes, hey, this is good. S&P 500 futures, which is what we have up here, they go higher. And all of this goodness lasts for a good hour. About 15 minutes for the initial reaction and about 45 minutes of digestion thereafter. And then everything pointedly goes the other way. Dollar rallies, stocks come off. Almost as if the markets were waiting to get past CPI to make sure that it didn't have anything of its own that was shocking and unnerving, and then said, but this is where we've wanted to go. And so now that CPI is out of the way, now that event risk has been cleared off the board, this is where we're headed. And you can see the sort of pause and standstill before the data. The markets almost held their breath here before the data came out. And then, here we go. There's the data, but that's not what the markets wanted to do. So why is it that the markets both registered the data, registered its implications, but did not seem at all moved by what has occurred here? Well, not surprisingly, we find that we have a situation here that concerns the one thing that seems to have been moving on the calendar and on the sort of market cross-asset picture. And that, of course, as we said at the top of the show, is crude oil. There's that rally in crude oil. We see here that what we're looking at is a situation where we're up to a 3-month high. Moreover, we have broken through a very significant sort of structural decline, a multi-month decline going all the way back, let's call it roughly, to the summer, where we had those big spikes around the shootout, the rocketry display, as it were, between Israel and Iran. So, with that in mind, we have a situation that makes the inflation story look entirely different, and perhaps tells a very different story than what the CPI numbers imply, because oil prices seem to show up in CPI with about a 1-month lag. And this is going back to 2016. You can see here what I've done is I've looked at WTI crude oil. Here we go. Here's the most recent uptick here. And this is just CPI pushed back 1 month. And we can see here that there's a very strong parallel sort of situation going on here, where you find, obviously they're not perfectly aligned. Nothing ever is. This is the real world we're looking at after all. But you do see that at the major inflection points, and in terms of the trend and the direction, there is connection. And so, can we really be confident that inflation has been tamed if what we seem to be looking at here is the makeup of a breakout in crude oil that might give us quite a few months of higher inflation, and it only takes but a month for that to appear in CPI? So just how ready is the Fed to cut rates against this backdrop? Now, the rise in crude oil here seemingly having to do with the emerging situation around what China is going to do in supplying itself with crude oil as all of these geopolitical dominoes are falling around the world. So let's put this together for a moment. Venezuela is, let's say, at best in limbo, but whatever oil supplies are coming out of it now are going to be controlled by the U.S., and so not exactly the friendliest sort of situation for China. Certainly there's ample economic competition there on the best day. So the U.S. now controls those levers. Iran is teetering on the brink of a revolution. And the U.S. is boarding Russian shadow fleet oil tankers and stopping them, even off the coast of Iceland, never mind the Western Hemisphere. And so what we're looking at then is seemingly a situation where the supply mix for oil that China typically relies on is going to be significantly hamstrung. And that's the world's second largest consumer. So if that's the case, they're going to have to lean on other supplies, call it Saudi or more generally in the Gulf. And so if that's what's going to happen, well, then we don't have a oil supply glut. We have a shortage. And if we have a shortage, it's going to be quite some months for China to lean on these other producers until the situation ostensibly unravels, might be longer. And as long as that continues, this impetus upward on inflation from oil prices, that's going to keep feeding. Now, to illustrate this story further, we're going to get wholesale inflation, producer price index numbers coming over the wires over the next 24 hours. The expectation is we're going to get a small pickup in November's numbers. Obviously, this is very delayed by the government shutdown. So we got CPI for December today. We're only going to get November's PPI tomorrow. The increase for core seen from 2.6 to 2.7. Of course, we are also going to have a headline number that's expected to hold unchanged. And by the way, in line with CPI as we saw today. Things have been relatively steady here for headline and core PPI. We've kind of anchored in a range, but something to keep very closely in mind here is whether wholesale numbers are suggesting that this bit is real, or whether the inflation bite is actually still coming from these tariffs. And you see that by looking at the trade services component of PPI. Now, this is a little bit technical, but what this measures is the margins that importers have on basically delivering goods across the country. So when goods come in, this is the margin at the front of the U.S. supply chain. And what we have here then is over the past several months, since the beginning of the tariff period, shock of shocks, a sharp squeeze on margins, which essentially means that companies are eating the extra tariff cost. They're paying for the tariffs at the front of the supply chain by giving up profit margin. They're basically shielding consumers and even wholesalers further down the supply chain from these tariffs, basically thinking, you know what, if we take it on the chin here, then the tariffs will eventually fade as a factor. We don't want to destroy demand. We don't want to drive away customers. We want to take a little bit of a hit on profit margins now, but retain demand. And we've seen that happen since early 2025, and we're definitely seeing it here again. This is the, in fact, we're seeing it hold for some time now. So we can see these rebounds are very narrow. The squeezing on margins is very, very sharp. And in fact, the sharpest that we've seen since 2013. This is for intermediate goods. If we go up the supply chain, this is now wholesale final goods. So this is right sort of before goods get from the truck onto retail store shelves. And we can see that's finally starting to feed through. In this CPI data, the picture that we have is of goods inflation flattening. But if this is going to give way, because for as long as it continues, wholesalers have to give up margin. They're only going to give up so much and for so long. If they start to really pass on these costs to consumers in earnest, well, then it won't be a flattening picture for goods inflation here. And on top of all of that, we likewise get this extra bit from oil, where importing things is going to become more expensive because making things becomes more expensive because energy costs. This is why there's about a month lag of feed through. It costs to have energy to transport things. It costs to have energy to make things. If energy costs go up, then the entire supply chain becomes a more expensive proposition, which makes eating these extra tariff costs, as we see here most dramatically at the front end of the domestic supply chain and distribution network, that makes that much more expensive of a proposition, because there are then more costs to eat. Is this sustainable, or will this eventually become CPI, the kind of inflation that the Fed can't reconcile to cutting rates? Well, that's only a matter of time if these forces continue. And so it isn't surprising, perhaps, that the markets are reacting this way, because it's the oil rise that really seems to change the game. Meanwhile, they're already calling for more rate cuts than the Fed has offered. The markets want at least 2 cuts for 2026. We can see that is still holding here. Meanwhile, the Fed has only promised 1 cut, and this continues to be a source of consternation. As we can see, once the dovish progression in Fed policy bets stopped and anchored, not long after that, the S&P 500 did the same and has basically been idling in a range. The range top once again held up just today, where we couldn't make it past the highs from late October, when the Fed told everybody that they were over-extrapolating rate cut possibilities. So, will this PPI report show us that margins continue to get squeezed? And if it does, that just means we're probably getting that much closer to something like oil toppling wholesalers into just passing the inflation through. Will the markets then get the rate cuts they want against that backdrop as CPI builds up? Thanks to oil and thanks to this additional pass through that now just becomes too difficult to shoulder. Well, maybe not. Maybe not. And then if those rate cuts don't happen, how happy are stock markets? Well, judging by what we've seen so far in their response to the dovish speculation just pausing, not even reversing, they're probably not very happy at all. So with that in mind, the positioning that I have on here still is long gold. That seems to be a narrative that's not going away amid all of this, and sort of feeds into generalized globalization breakdown concerns. So that's still on. I'm increasingly long the dollar because all of this seems to be feeding risk aversion. And as we saw today, the dollar is responding both to that risk aversion and to the possibility that the Fed is going to be unable to cut nearly to the extent that the markets want, especially if oil is doing what it's doing. Still short risk through NASDAQ and S&P, as well as Bitcoin through these put verticals on the tracking ETFs, and increasingly long oil. I started layering this on initially from about 72 on USO, which is at the beginning of this week. And so today I added a little bit more, this time with a base for the spread at 75, reaching out as far as 80, and plenty of duration, 94 days, to give this time to develop, because this doesn't look like it's a story that's going away anytime soon. And that is Macro Money for today. As ever, we are here every Monday through Thursday, right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I am likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and Blue Sky. If you are watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.